Dr. Covidian, thank you so much for joining us here today. Terrific analysis as this GDP report moves the market futures in -15. And right now, a Bloomberg Business Flash for the Interactive Broker Studios. Lisa Mateo.
And this Bloomberg Business Flash brought to you by Oppenheimer. Oppenheimer focuses the power of their thinking on you, creating customized plans to help achieve your goals. Put the power of Oppenheimer thinking into your investing, wealth management, capital markets, investment banking. And Tom said if we got futures falling after more economic data, the U.S. economy contracted at the start of the year for the first time since 2022. This is a pre-tariffs import surge and also softer consumer spending. Inflation-adjusted GDP decreased an annualized 0.3% in the first quarter. Although NASDAQ futures down 1%, 269 points. Dow futures down about 0.5%, 186 points. S&P futures down nearly 1%, 53 points. The two-year yield 3.66%. That's up 1 basis point. The yield on the 10-year 4.19%. That's up 2 basis points. The Bloomberg Dollar Spot Index is a little change. To earnings we go. Etsy, their revenue beat estimates. Its shares are up nearly 1%. Then you have Evercore reported adjusted earnings per share for the first quarter that beat, and shares are up about 5%. And finally, Mondelez, that's the maker of Oreo, Ritz crackers. They say shares of U.S. shoppers, well, they're cutting back on snacks, so they posted slower than expected growth. I mean, Paul is still snacking. There we go. But here's the thing: the company raised prices, kind of offsetted those higher cocoa costs, and that helped offset the decline in volume. So their shares are up 1%. That is your Bloomberg Business Flash.
Securities research?
Yes.
I can tell you with certitude, on the Bloomberg Take Your Children to Work Day, the Oreos were decimated. Absolutely decimated. Look, they have Oreos for breakfast. We thank Mr. Bloomberg and Mr. Segunda for supplying us with Oreos from Mondelez food court as well. On short notice, and we are so advantaged to have Peter Scheer with us. He synthesizes so much of our economics into market performance. Peter Scheer, Marty Schenker, and Scott Lamon driving our economic headlines, and they nail it at 8:30 with the domestic final sales, forget about imports, statistic, which is this is in America with an annualized 2.3% growth versus the negative 0.3 published statistic. Which is it?
You know, it's hard to tell because the GDP clearly was influenced by a lot of pre-tariff buying. But I think the economic data is starting to get weaker. Look at ADP today, which, you know, we don't pay that close attention to. It's coming in. So I think everyone's been waiting to see the soft data translate into weak hard data. I think we're just starting to see that. So, yeah, I'm not so optimistic right now, unfortunately.
So, Peter, you know, I guess the data we're seeing kind of reflects what the market's showing us here. I mean, I guess if you look at the S&P 500, the bad news is we're down 10%, but the good news is we're up 10% from the bottom there. What do you make of this equity market here?
You know, I think it's feeling a little bit heavy lately. It rallied the last couple of days, but it feels like each positive headline is generating less and less positive momentum, right? 2 weeks ago, when we said we weren't going to fire Powell, we rallied really hard, trade deals. But now every trade deal is kind of, we get this little pop and we fade. I think the market really needs to see proof of some trade deals so we can digest what we're actually getting in these trade deals, whether it's relevant or not. And then I think we need to move on to what can we do domestically. That to me is a real important thing here. Can we get these tax things through?
Peter, since we've got you on short notice here, I want to bring this up. Academy Securities, folks, has a terrific board of experienced apples and generals driving the forces, clientele that serves the service people of America. Peter Scheer, over the weekend we had a Chinese flag in the South China Sea staking out a hunk of territory off of a Philippine island. We've got all the uncertainty in Taiwan. We've got the president yesterday in Michigan saying it's morning in America. What's the level of concern at Academy Securities linking our geopolitics into the uncertainty that we're reporting at Bloomberg?
I can tell you quite safely that when we talk to our retired generals and admirals, one of whom is going to be Undersecretary of Defense for Personnel and Readiness, they've never seen a more difficult or trying period in their lifetime, right? They've served, there is so much risk across the globe. And recently, too, you've had India and Pakistan flare up a little bit. It does feel like there's this real risk that everyone's going to push the envelope a little bit, while there's this perception, whether it's real or not, but a perception that Trump is less focused on global, protecting global interests.
Peter, on short notice, thank you so much for joining us here. As the GDP's statistic moves the market, futures negative 25, down negative 64. The VIX out almost two full figures, 26.06. The yield space, yeah, there it goes. We got a higher yield. Prices down, yield up. Joe Weisenthal told me that. 4.22% is well. Right now, I wanted to extend the conversation. We cut Mr. Scheer short. We'll get him in for a longer conversation. Because Tracy Alloway and Joe Weisenthal killing it with leadership and outlaws out at Bloomberg Podcast interviewed one of my favorite people on the planet, William Beach, who's iconic in the Beltway, is Bill Beach. He is the nerdiest of nerd bean counters. He is the nemesis of Jack Welch blowing our government data years ago. The idea of interviewing Bill Beach now is brilliant. What did he say, Tracy?
That should have been our intro, Jim, on the podcast. Yeah, so we talked to him about what is kind of a long-running and quite critical issue in the markets, the U.S. economy, U.S. society, some people would argue, which is the decay of American economic statistics. So we've seen response rates to surveys really start to decay, but we've also seen a lot of funding for the agencies that collect these things.
This is before Trump.
Yeah, this is even before Trump. And actually, it's interesting because it's not just an American problem. The same thing's been happening in places like the UK and New Zealand. But in the US, it's particularly acute because we now have even more funding being cut off for a lot of these agencies. So even more concern.
The thing I find really interesting, too, is that, we talk to economists and they have these big ideas and theories about what moves the economy and where it's going to grow. But just the simple art of counting, how many people have a job, how many people are unemployment, is an incredibly difficult, refined task. And it's something that does not get a lot of attention. And we just take for granted that a number appears on our screen at 8:30 on the first Friday of every month to tell us how many people got jobs in the prior month. It just appears there. But it's a laborious exercise. It's an increasingly costly exercise and so forth. And so he's sounding the alarm that we all rely on this number, investors, economists, and so forth, but the actual construction of it is getting harder and harder by the year or the month.
Do we have any data yet or any sense or any reporting about the impact of DOGE and what it may have on some of these government agencies that, we all probably start from the same place where maybe the government's inefficient, it's bloated, all that.
Sure.
Great, we all get that. But do we have any feedback yet?
I don't think we have any specifics. There's this general sense that we're going to get even less funding. And just to highlight Joe's point before about jobs, we've already seen discontinued data sets. So something like, I think there's a self-employed component in the jobs report, maybe not jobs report, the BEA, and that's been discontinued, which kind of that seems important to me, knowing more about self-employed people in the U.S. Or if you think about something like the housing portion of CPI, a lot of that is based on collecting actual responses from housing owners, and those responses have been deteriorating for quite some time. I think we're back to, we're around 57% response rate now. We used to be at 70% in 2015. You think about what a big chunk housing actually is in something like the CPI, and the CPI is important, right? Social security payments are based on CPI, so the idea that maybe we're not measuring it correctly seems like a pretty big deal.
One of the disturbing things he said, part of the retail element for CPI is having people just go into select stores and write down prices of things that they see. And stores are becoming more hostile.
Is there a
vintage instrument on the terminal? Have you ever looked at that?
No,
we have old vintage used and new hollow body electric guitars.
Is a complete aside. The Fender Custom Shop has a whole new price regime.
Oh boy.
Much higher prices.
That's kind of high.
I said, you gotta be kidding me. Joe Weisenthal, Tracy Alloway, we continue on this part of the hour, commercial free too. We thank our interactive brokers, Commonwealth, Conresic, and others for their great support of what we do. So I want to talk about this word uncertainty. I put out Against the Gods yesterday. It's my Bible on risk, uncertainty, and ambiguity. Joe Weisenthal, how do you define
Yeah.
2025 uncertainty?
I mean, I would say there's two things, which is one is in the short term, when there's so much unknown, I was going to say uncertainty, but that's redundant with the question, unknown about where the tariff policy is going to become. It's just hard to imagine any company making real investments. And then something that Tracy wrote about a few weeks ago in the newsletter, which I've been thinking about, is unlike prior periods of uncertainty, whether you want to COVID, try to stop.
Hello, this is Dr. Paul Cottrell, and we are live streaming on Rumble, YouTube, on my website, the-studio-reykjavik.com, and simulcasting on X Spaces. The GDP numbers have come out. It shows that the economy is weakening. We'll continue with this coverage, but please help support my work by making sure that you subscribe to all the channels. I have 4 channels on YouTube, Brighteon, Bitchute, and Rumble. It's very important that you subscribe to all the channels, especially when I get strikes on YouTube. So you get the live streams and you get the updates. Also share the links and ask your social media to follow me so I can accrete more viewers, so I can help them navigate through finances, through geopolitics, and also health and wellness. So please help me so I can reach a larger audience. I greatly appreciate it. If you'd like to help support my work by donating, you can. You can donate on my website, the-studio-reykjavik.com. All the links are in the description of this video and all my videos. You can donate through Stripe, PayPal, or Buy Me a Coffee on my homepage, the-studio-reykjavik.com. You can also be a paid member to my Patreon channel, and that way you're helping support all these videos that I do for free. I don't put anything behind a paywall. It's people that are donating and being paid members to allow me to do this content for free. And take a look at the products that I offer on my store, the-studio-reykjavik.com. Throughout the transmission, we'll talk about how to use the products, how I use them, how to improve my health, and how you can mix and match based on your affordability to get the max benefit to slow down the aging process, boost up your immune system, and have your body heal. So thank you for joining. Greatly appreciate it. Let's continue on with the coverage for the GDP numbers that just came out.
I'm going to do the quiz, surveillance quiz right now. Name the Canadian provinces from east in a row. I couldn't do it. I'm
From British Columbia east, so British Columbia, Alberta,
nailed it.
Saskatchewan.
No, lentils, nailed it.
It's got to be Ontario after Saskatchewan. There's one between Saskatchewan. Oh, Manitoba, of course.
Of course. There it is. I mean, that's is Gura back or is he staying up?
He's out of
How many Canadian universities can you name? I posted this question on Twitter once. I got a lot of responses. You can name about 3 or 4. McGill, UBC, Toronto, Waterloo.
The econometrics out of British Columbia.
Calgary A&M. No, that's not really. No, that's not really.
This is Bloomberg's surveillance.
All right. While we recycle for the GDP coverage, please go to my store, the-studio-reykjavik.com, and take a look at the first pillar of this 4-pillar protocol or core that I call it, something that I do every day. The first pillar is to take Max 14 or Max 35 or cleanse. Take it every day, and that'll help to improve your immune system. I'll be talking about that in a little bit more detail shortly here. C60 is the second pillar. That's going to help to soak up free radicals. And the third pillar is turmeric, ashwagandha, and lignans to boost up your immune system and help with your cardiovascular system. And boomer boost to boost up your energy levels and your metabolism and rev that up. You'll have lots of energy and you'll lose weight. So let's talk about that first pillar to boost up that immune system. Taking Max 14 or Max 35. Max 14 is 14 parts per million. Max 35 is 35 parts per million. Take a teaspoon a day, swish it in your mouth, gargle 20 seconds or so, and then swallow. What's going to happen is you're improving the health of your epithelial lining in your oral cavity and your oral pharynx and helping that barrier. So your immune system is better off. Now, you can also get a 30 parts per million called cleanse. They're at different price points at different ppms, so I can get these products in your hands based on your affordability. So please take that every day. If you're not feeling well, take a tablespoon or 2 every day and go back to your maintenance dose of a teaspoon once you start feeling better. It's something you should be taking every day, though. It's something that I do every day. All right. So please go to my store, the-studio-reykjavik.com, to get the cleanse or get the Max 35 or Max 14. Again, they're at different price points, so I can get these great products in your hands based on your affordability. So please go to my store, the-studio-reykjavik.com, use discount 5, all caps, discount 5, and you get $5 off. If you spend $150 or more, you do get a free gift until supplies last. All right. What? Bloomberg is still cycling through their commercial break. So while they're doing that, let me plug in another product here. Taking a multivitamin is really important for that base, especially mixing it and taking it with a probiotic. All right. So multivitamins are cofactors, important cofactors for enzymes. And enzymes are in your cell and they do certain functions. But if you don't have those cofactors, then it's not going to perform as well. So multivitamins are cofactors and attached to these enzymes, and it changes the conformation of the enzyme. So it performs better. So to help with your metabolism, to help with your cellular processes, it's very important to take a high quality, easy to digest multivitamin. That's what this is. It's an easy to digest multivitamin that provides you with the essentials that you need for enzymatic activity. So here's the label, what's in it. It's a great way to start as a foundation, and you build off of that based on these different products that I have on my store. So get the multivitamin. Now, like I said, taking it with a probiotic is really important. And I have 2 different probiotics. I have a powder version, which is the one that I prefer to take because I take lots of powders during my lunch. I take collagen and gladiator barley and boomer boost, the lignans and the probiotic. So it's just easier for me to mix it all together and just mix it in soft foods. So you can mix it with soft foods, just drink it with filtered water or mix it in a smoothie, but taking a probiotic is really important. You can also get it in a veggie cap form if you prefer not to take a powder, all right? But get my probiotics from my store, the-studio-reykjavik.com. When improving your gut biome, what's going to happen is you're going to improve your immune system. You're going to reduce gut inflammation. You're going to improve you're going to improve your food absorption and breakdown. You're going to improve the communication between your gut and your liver and your gut and your brain. You're going to be able to think more clearly. You're going to be less irritable. And over time, you're going to notice that your whole body is healing and getting healthy. You'll also notice improvements in your skin, your hair, and your nails. So please go to my store, the-studio-reykjavik.com. Get the probiotics, either the powdered version, which is the one I prefer to take, or the veggie cap version. Both are very high quality. Again, use discount 5 and you get $5 off. And like I said, a great way to start a foundation is to get the multivitamins. So you get the enzymatic cofactors and get either version of the probiotic, and then stack it together. You know, stack it like this or stack it like this. And that's a great foundation to build off of. Please go to my store, the-studio-reykjavik.com.
Yes.
What's the why here?
So the thing is that, you know, the chief officer, Brian Nickel, he's been put in this business, right? Turn around the company. Earnings per share missed. Same store sales declined. But he says they're showing a lot of behind the scenes progress. You know, if you walked into a Starbucks lately, you see they've kind of changed the cafes. They're trying to make them more welcoming. They're doodling again. You pointed out on the cups a little bit. Going back to how that used to be, you know, that made you feel good when you came in and you got your cup of coffee.
Do they want unemployed offspring with their laptops sitting in a Starbucks for 6 hours?
I think they're trying to get back to it because what they were doing is going to these smaller type stores. They were going to the smaller ones where it's just the drive-through, and now they're trying to expand a
I think
little.
the one I go to, Route 35, Township, Jersey, awesome store.
How long do you wait? Let's say is it full?
Everybody's
Yeah.
ordering their
No,
fancy things.
everybody's in the drive-thru. There's 20 cars in the drive-thru. I go in at park, I walk in, I talk to a nice young person, I order my drink, a minute later it's there.
Yeah, but
Great
you're having a
experience.
black coffee.
What's that?
You're having a black
No, I'm
coffee.
having a double short mocha. And that's how I roll.
Nice.
And I'll spend 10 minutes
Is that
there.
with or without the Baileys?
Yeah, exactly.
Do you have one more to squeeze in?
But I do. Okay, so for all the cruisers out there who go in there, Rich, thank you very much. Their Norwegian Cruise Line down as much as 20% in pre-market.
Wow.
Now, you remember yesterday, right? You had Royal Caribbean. They said the cruise industry is booming. It's great. Carnival last month said they're giving an upbeat outlook. Norwegian says demand is falling off. So they see a softening their 12-month forward booking that says ticket sales are kind of within that optimal range. It did maintain its full year targets, but it's pulling shares of Carnival lower this morning too. And if you think about it, the airline industry, you know, you've seen the whole travel kind of spectrum. It's the airline.
He's going to always cruise no matter what.
Yeah.
He cruises, like, he doesn't cruise the Caribbean, he cruises places that no one wants to go to. Like the North Atlantic in the winter. That'd be
Thank you so much for the emails and YouTube live chat from the middle of the North Atlantic as well. Lisa, thank you so much. Stock Movers, huge success out on Bloomberg Podcast. Stock Movers, it's a 5-minute episode of our winners and losers for the day on Apple, Spotify, and YouTube. Ohio, from a different time and place. Good morning.
Hopefully I don't get a music. Sometimes when I play the music too long, I get a copyright strike. Let me go to Fox News talking about Iran and North Korea's playbook. Oh, no. That's way too long. Hold on. All right. Stupid question. Trump fires back at ABC host.
At a rally with supporters in Michigan, watch.
And we're for common sense. We like strong borders. We like good education. We like low interest rates. We like being able to buy a beautiful car. And now deduct the interest on the loan. That's never happened before. In 100 days, we have delivered the most profound change in Washington in nearly 100 years.
So if you're taking a list right now, so far the president has signed at least 142 executive orders, confirmed 21 cabinet members, saved $160 billion from Doge, and decreased border encounters by 94%. Mark Thiessen is a Fox News contributor, former speechwriter for George W. Bush. Mark, thanks so much for joining the program this morning.
Good to be with you.
I guess you could say the border numbers are his best numbers so far.
Yeah. Oh, 100%. He's got an A+ on the border. I mean, remember that Joe Biden said, I can't secure the border unless Congress passes a bipartisan border bill. Well, Congress didn't pass the border bill, and Trump shut it down, not in 100 days, in a few weeks, completely shut down the border. It's an unmitigated success. And now he's doing what the American people asked him to do. New York Times poll, 86% want to round up and deport all the illegal migrants with criminal records, and he's doing exactly what 86% of the American people want, and the Democrats are opposing him. So, that's probably not the smartest strategy.
So one of the things that the Trump administration now is talking about is the economy. I know people are standing by for the tariffs and the big, beautiful bill, but when you look in the first 100 days, they've created 345,000 jobs. Veteran unemployment rate is down from 4.2% in January to 3.8% in March. Prescription drug prices have gone down 2%. Gas prices are down 7%. Energy prices are down 2%. And foreign and private investment of $5 trillion. Is that something they need to talk about more?
Absolutely. Look, the gas prices, he said, in some places is less than $2. Everyone's paying less at the gas pump. Everyone's paying less at the grocery store. And people are bracing for the effects of the tariffs. And his poll numbers on the economy are not good. But that's because he's got a lot of things in play right now. I mean, you look at the tariff situation. When he was president in 2018, he went to the European Union and the G7 and said, how about this 0-for-0 tariff deal? And they were like, it was crickets. Nobody was interested. All of a sudden now they're coming to him and saying, hey, well, how about a 0-for-0 tariff deal? The only reason is because he started the trade war. He started the tariff war. And so this is going to play out over the next next few months. If in the next few months he gets 75 trade deals and passes a comprehensive tax reform bill that spurs economic growth, his numbers on the economy are going to skyrocket. So this is a work in progress, and he's in the early stages of it.
So the president, I think part of the reason the numbers are down in some respects is the negative coverage that's been coming from the media. I mean, it gives them all a shot, even the ones that don't like him, and they still only give him negative coverage. Yesterday, I found this exchange interesting. There was a conversation on ABC about Pete Hegseth. This is the question they posed to the president. Let's watch.
You have 100% confidence in. I don't have 100% confidence in anything. Okay, anything. Do I have 100%? It's a stupid question. Look, it's pretty important. I have no. You don't have 100%. Only a liar would say I have 100% confidence. I don't have 100% confidence that we're going to finish this interview.
I mean, it is so true. What was it going to say? 90 or 30%? But if you look at the coverage, though, Mark, when it comes to RFK Jr., 89% negative coverage. Elon Musk, 96%. Pete Hegseth, 100% negative coverage.
Yeah, look, the media isn't part of the opposition. They're part of the resistance. But I think the thing is, Americans factor this into their viewing of the coverage right now. There's an Edelman Trust Barometer poll for 2025 that just came out. 7 in 10 Americans say that the media is pushing an ideology rather than trying to inform the public. They get it. So it's not that the media is not going to impact people's views of Donald Trump. What's going to impact people's views on Donald Trump is if the tariffs produce trade deals, if he passes the big beautiful bill, if he cuts their taxes and eliminates taxes on tips, taxes on overtime, taxes on caring for elderly. If he delivers on all those promises, nobody's going to care what ABC News asks him when he's in the interview.
It's so true. They bypassed the last election as well, because he went straight to the American people. Mark, thanks so much for getting up this morning.
Exactly. Take care.
You too.
I would say in collateral that backstops us as lenders, and it comes with some form of protections. And so it's something in this environment with a lot of volatility that we like a lot in terms of having in our portfolios and performing well. In addition to all of the sort of underlying fundamentals that support it in terms of the corporate issuer base.
So what are you finding in your market here? What's the, there's a lot of uncertainty in the marketplace. We see that reflected in across financial markets. Where are you seeing it in the high yield market and the leveraged loan market? What's happening today?
Sure. Well, these markets are really solving for two things, really. The first is the first order impact of tariff exposure. And so you've seen those types of credits that have direct import exposure and predominantly to China sell off the most in terms of price. The second thing the market's solving for is what is the economic uncertainty that we are already experiencing. We have some distortion today in terms of GDP data, but how long will that last? And how will these corporate issuers fare and navigate this environment? And so you're seeing much higher dispersion in the market. This is not dissimilar from other asset classes where you're seeing certain sectors trade off more so than others, certain credits. To us, we think this is the beginning of a really nice opportunity.
When I was at the Chase Manhattan Bank, I was doing leverage lending to TMT companies. I'd do a $500 million loan. I'd syndicate $480 million off my books. The guys like you, although I don't remember ever being at Santa Monica marketing a loan. But so in the senior secured, highly leveraged loans, is that something you guys look at?
Absolutely, yeah. We look at senior secured, levered loans, as well as high yield bonds. I mean, those primarily comprise the leveraged credit universe, and they can come in both public and private flavors.
Are there certain industries you guys like today? Is anything screened?
All right, let's do a market update with what's going on in the equity futures. Equity futures for the S&P 500 are trading at 5,504, above that psychological barrier of 5,500, like I was saying, but it probably will break today. It's trading at 80 points down, roughly. VIX is up a little bit. It's trading at 26.50. Euro's trading at 1.13. Oil is trading down. It's at below $60 a barrel. It's 59.70. BITO is trading at 20.72. And the USD Japanese yen is trading at 142.85. Again, breaking 140, going below for the Japanese yen is market negative because it's showing stress in the international trade and international currency markets. So with the bad number, okay, let's put this in context. GDP comes in at 0.3%. Some economists were saying, oh, it's going to be a negative, whatever, 1.5 or whatever. Some economists said we might be growing a little bit. All right. Well, we are growing, but at a very low rate, especially relative to our historical trend. I believe the previous quarter analyzed was 2.4%. So it went from 2.4 down to 0.3. So we do have economic slowdown. Is it negative? No. All right. Lots of economists thought that there was going to be a negative number that was going to be minus, 1.5 or minus 0.5, or that didn't happen. All right. But there's definitely a slowdown. We probably will see. We'll see how this emerges, but I would say that we probably will see during the market, and the market hasn't opened up yet. We have still another 20 minutes to go. We'll probably see in the first half of the session market going down. There's probably a 50% probability that it'll continue to go down for today's session and then come back up in subsequent trading days. There's probably another 50% chance that at the halfway into this trading session, you're actually going to see institutional investors come in and buying up. Like I said, there is these support levels for the S&P 500. There's a psychological support level at 5,500, but you have lots of shorts there trying to push it down, which is possible with this GDP number that came out. But there is a major support level at 5,150 and one that's even stronger at 4,810. I personally think 4 weeks ago we saw the bottom of the S&P 500 with this sell-off. But you're probably going to see that undulation between 5,500 and this 5,150. Take this as an opportunity to buy some shares. But don't bet the farm, and do it in a broad index. You know, like something that's tied to the S&P 500 or Russell 2000, something that's a broad index. If you put it into individual stocks, you're taking on idiosyncratic risk of that company or of that sector or industry. You don't want that. So just kind of neutralize that idiosyncratic risk and just look at the broad index. But I give it about a 50% chance that we see institutionals coming in and buying into the market throughout the market's trading session today, probably on the second half. We'll see what happens though. But it's interesting to see oil breaking 60. I thought that oil would be trading at around 60, maybe 60.2, up to about like 64.75, maybe 64.80, and just bounce around in that range. I'm a little surprised that it broke 60. But with economic slowdown, there's going to be traders that are saying, okay, sure. But the thing is, being in the 50s with oil, it starts to become problematic for certain types of drillers. And it's definitely problematic in Brent crude for the Saudis to finance their government. So it can't stay down for this long unless there's some major fundamental thing that changes, where there's like a major global recession or something like that. But I don't see that happening. I really don't. I think in the next half, the second half of this year, the United States is going to be doing well, especially when tax cuts are passed, and that's going to be an accelerant for the market. So take this as an opportunity to potentially buy. Is how I'm looking at this.
Where I also had a concentration in economics, so yes.
So what do you think this Federal Reserve is going to do here? What are you guys at Bitchute thinking about this year? I'm not sure how much they can do given some of the things that are happening from a policy perspective. I'm not really sure how much they can do. What are you guys discounting?
Well, we would agree with that. We think that, similar to the last, during the rate hiking cycle in 2022 and 23, the Fed was effectively given permission to raise rates because it was doing so into a strong economy and a very strong consumer base. And until, fast forward to today, the soft data translates into much weaker hard data, we would agree that the Fed, if they had their wish, would stay on pause. And so that's one reason why, on the margin, we like floating rate over fixed rate high yield, for example, because of that extra current income and carry that you get through this particular cycle. And so that's the real tension, though. What does the Fed do? Which side of their dual mandate do they attempt to resolve? And we think it's going to be still sensitive to inflation over the near term until we get data that shows that we're not really experiencing the same inflationary pressures that we did last time.
One final question, and this is really important. And we talk to the LA port people all the time. You guys in Southern California, the absolute crucible of this trade war at LA and Long Beach as well. And it just, as simple as, is there a belief at Bitchute that we just get back to normal after this trade war? Or is this a new, we're going to do this for Thomas Kuhn, Harvard 49, I think it was. Is it a new paradigm?
Yeah, that's a great question. We would say that it kind of depends on the cohort of the market you're discussing. So it is a new paradigm for smaller companies. They don't have the bargaining power. They can't easily diversify their supply lines. And so if this really is even a 90-day pause on tariffs, but then it recommences, some of those smaller types of companies are just going to have a lot of difficulty in this new economic structure that we've established.
One final question. When the Harvard Club of Southern California gets together at Cheva's Ravine for the Dodgers, are you guys sitting by the dugout?
We'll sit wherever we can in Dodger Stadium, especially when they're playing the Yankees.
You're out on Mookie Betts.
That's right, that's
You're
right.
just out there,
We
right?
like to cheer on Mookie. Yep,
Red Sox, the dumbest trade in history, right? Go away, very painful.
Well, LA benefits from those types of trades.
Don't be a stranger. Next time, bring Jerome Schneider with you. We'll have the two of you on here on short paper and long paper as well. Great conversation. Futures negative 78 now. The VIX 26.56. With our news in New York City, Michael Barner.
Thank you very much, Tom, Paul, Lisa. President Trump rallied thousands of supporters and more in Michigan as he marked the 100th day of the second term.
We're here tonight in the heartland of our nation to celebrate the most successful first 100 days of any administration in the history of our country, and that's according to many people.
Meanwhile, President Trump sat down with ABC to reflect on his new administration. One topic discussed was the deportation of Kilmar Abrego Garcia, the man from Maryland who was mistakenly deported, and the Supreme Court order to facilitate his return from El Salvador.
You could call up the president of El Salvador and say, send him back right now. And if he were the gentleman that you say he is, I would do that. But the court has ordered you to facilitate that. I'm not the one making this decision. We have lawyers that don't want to do this. The buck stops in his office. No.
The day after President Trump's 100th day rally speech, his 2024 opponent, former Vice President Kamala Harris, is planning a speech of her own tonight. Bloomberg government's Jack Fitzpatrick has more.
This seems to be in the context of consideration of a possible run for governor in California, whether she has a prominent national role, maybe up in question, but we'll see what she has to say, at least about the state of California.
Bloomberg government's Jack Fitzpatrick reports Harris is expected to criticize President Trump's handling of the economy, U.S. institutions, and foreign policy. She's speaking at a gala in Los Angeles for Emerging America, a group that recruits and trains Democratic women to run for office. Pakistan said today that it had credible intelligence that India is planning to attack it within days. It comes as Pakistani nationals headed for the border to comply with New Delhi's orders to almost all Pakistani citizens to leave the country following last week's deadly attack in Indian-controlled Kashmir. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. A tweet out. Thank you, Tyler Kendall, for this. From the President of the United States. It's a long enough tweet. I'm not going to go through it verbatim. It's just too long. Let's pick it up halfway through. He begins, this is Biden's stock market, moves on, and then we'll pick it up at our country will boom, comma, but we have to get rid of the Biden, quote, overhang, unquote. This will take a while, has all caps, nothing to do with tariffs, back to lowercase, only that he left us with bad numbers, comma, but when the boom begins, it will be like no other, all caps, be patient, and a hat trick of exclamation.
Okay.
Did I do that okay?
Yeah, I think you did that right. Yeah.
I don't know what to do with a long tweet, given it,
Yeah.
I don't people driving off I-80,
No, we'll see.
Right now, the S&P 500 futures is down 77. But I'll tell you, this is a time to buy. You're going to look back 6 months from now, 12 months from now, and you're going to go, damn, you should, don't be fearful and don't get analysis paralysis. All right. In financial trading, there's this common thing that happens with people, and they have all these indicators and they listen to all the data and they get analysis paralysis and they don't move. The thing is, you just don't have too much data and don't get to a point where you're fearful. And that way you lower the chances of getting analysis paralysis.
Percent, just consumption and business. investment. There's like two Americas going on, of the America flat on their back from tariffs. And the potential tariffs is Sinjin mentioned, we'll see here to small business.
Yep.
Versus Microsoft, which is not a small business.
No, how does small business deal with some of the
Remember,
changes
used to
in
be
cost
easy.
structure? Yeah, it's easy.
The Dow Jones Industrial Average used to be easy. Stay with us from New York, Bloomberg surveillance. Good morning.
All right, while they're in break, VIX is still trading at 26.47, so not a big move in VIX right now. So that's a good sign. I still think that there's going to be institutional investors that come in and buy in. Let's go to massive threat. Expert warns U.S. is not doing enough to stop China on this front.
Joining me now is American Enterprise Institute non-resident senior fellow and author of Danger Zone, the coming conflict with China and Unrivaled, Why America Will Remain the World's Sole Superpower. Michael Beckley is with us. Michael, good to have you. Thanks so much for being here. Assess the situation between the U.S. and China. I've been saying that this is the time to hit China. President Trump says it's in a weakened state, and now is the time to put these tariffs in place. Do you agree?
I do agree. I mean, I think we've now discovered that China is a really bad actor, that it's been stealing American technology, that it's been massively subsidizing its industry. So these kind of tariffs to either try to coerce Beijing or at least just degrade its mercantilist economic model, I think we're long overdue. And as you pointed out in your segment, I mean, that Chinese exports are already declining, and they are highly reliant on access to the U.S. market, which is as big as China's market and the Eurozone combined. People forget that the Chinese people are still very poor on average. Disposable incomes are about $5,000. The American disposable incomes are 10 times that amount. So this is really putting China's economy under pressure when it's already suffering from a declining population, rising debt, and low productivity.
Yeah, but even so, doesn't it impact the United States if the second largest economy is weakening? I mean, if you've got the two largest players, the United States and China, actually seeing a slowing growth story, or even worse on the China side, doesn't that impact the whole world?
Yeah, I mean, if there was a possibility of a one world, one dream, open, free trade, globalization model, that would obviously be better for everyone involved. But unfortunately, China's been spending more than twice as much as any other country on its subsidies, 10 times the OECD average. And so when China is distorting international markets to that degree, I see these as defensive measures that the United States, and hopefully in conjunction with many of its allies, will take to isolate China so that it can't keep milking the international system for its own mercantilist benefit.
So the Senate confirming former Georgia Senator David Perdue as the new U.S. ambassador to China. The confirmation happened yesterday. Perdue said that China poses a threat to the current world order. He's pledging to curb exports of precursor chemicals to Mexico, which the cartels use to make fentanyl. And of course, China is behind that as well. Michael, your thoughts on what David Perdue can do here?
Well, I think, first of all, his selection signals that the Trump administration is serious about confronting Beijing. I know some people worry that Trump may try to cut some kind of deal with Xi Jinping, but Perdue has been a long-time China hawk, and his appointment aligns with other figures in the administration like Marco Rubio or Tim Walz or Elbridge Colby, all of whom view China as the central challenge to U.S. power. Obviously, Perdue has made a big deal about the fentanyl precursors, and I think you'll probably see some progress on that because the United States is already driving a hard bargain with Mexico, but that is just going to be one small piece of, I think, a much broader strategy directed against Beijing.
So what do you think that strategy looks like?
Well, we'll see how it works out. I mean, a lot of people feel like Trump's tariff strategy is chaotic, but I think we're starting to see it potentially evolve into a more solid strategy. So he started by slapping tariffs on everyone, but then has paused them on basically everyone except for China, which seems to have triggered a global negotiation sprint. And I think the goal seems to be to create a new system of reciprocal tariff agreements where allies, first of all, have to give the United States reciprocity, but they also have to do more to try to cut China out of their critical
supply chains. You can't take Russian energy and then sell to the Chinese market and get away with it anymore. And so I think if this strategy is enforced consistently, which is going to be very difficult because there's transshipment routes through Mexico, through Vietnam, et cetera, then I think what you could have emerging is essentially a free world bloc where the United States re-globalizes among some of its key allies on a basis of fair trade, and then they can conduct collective bargaining with Beijing and say, look, if you want access to the richest economies in the world, you're going to have to either drop your subsidies, dial back your territorial aggression over Taiwan and the South China Sea, or we're just going to end up with a Cold War situation, and we think our side has much more economic resilience and prosperity built into it than yours does in the long term.
Well, look, China is still bullying its neighbors. It's deploying several Type 22 fast attack missile boats in the South China Sea, countering U.S. naval warships in that area. These 200-ton boats are faster and more agile than the U.S.'s 10,000-ton warships, which are also currently in the South China Sea, Michael. How worried should we be about China's naval force right now?
I think we should be really worried because, everyone talks about Taiwan, but both the Wall Street Journal and the New York Times have put together these amazing heat maps over time of China's military and maritime militia transits in the South China Sea. You just see it getting thicker and thicker, and especially concentrating around disputed areas and those 7 artificial islands that they turned into giant military bases in the middle of the South China Sea. And this really matters not just because that sea is where roughly half of world trade passes through, but the Philippines is a U.S. treaty ally. They took China to the World Court, and where the World Court ruled that China's historical claims to the South China Sea are null and void, it seems like now Beijing over the last couple of years is really turning the screw on the Philippines to basically shatter the credibility of the international law of the sea that was enforced, and to shatter the credibility of U.S. alliance commitments, because the Philippines is so weak and so China can smack them around. So I think the shift you pointed out is part and parcel of that broader campaign that China is waging in South China Sea.
This month they unfurled their Chinese flag when they seized that reef in the China Sea, very close to the Philippine military installations. But it's not just the naval operations, they're also hacking us nonstop. The FBI is warning that China is using AI to sharpen its hacking abilities, using it to test every stage of its attack chain. FBI Deputy Assistant Director Cynthia Kaiser saying China is the biggest threat to U.S. critical infrastructure, Michael. How significant should we be looking at this hacking program that they've got underway? And is the U.S. doing enough to stop this?
This is a massive threat, and no, the United States is not doing enough to stop this. So China has seeded malware in our power grids, our water systems, transportation and communication networks. And this is all part of a strategy. The Chinese have looked at past American wars, and they say these Americans, one advantage they always have is a secure homeland. They take no civilian casualties. Their home base stays flourishing, and then they bury their competitors by out-manufacturing them in a long war. We, China, need to deny America the ability to do that by crippling all of their critical infrastructure if there's a crisis over Taiwan or in the South China Sea. And AI supercharges that potential threat because it just makes it much, in cyber warfare, you have to move extremely fast to stay ahead of the patches that the defender is trying to set up. So if they can use this vulnerability discovery, do AI at scale in cyber attacks, then even small teams of Chinese hackers can wreak havoc on American infrastructure. So we really need to take this seriously. That's why the FBI is selectively trying to leak some basics to the American people so that we're all much more aware of these threats.
Yeah, and the hacking has been consistent. Michael, it's great to get your take on all of this. Thanks so much.
Okay, the market's going to open up pretty soon here.
I look through earnings calls, but I'm not parsing through and making calls on individual stocks. That's just not the way we invest every holds. But of course, we're watching earnings. Of course, you have to watch Microsoft earnings. Microsoft is one of the biggest stocks on the market. And I think it's an interesting bellwether right now, as is Apple, as is NVIDIA, a lot of those Mag 7 stocks that we talk about, because they are a part of this tech sector that is incredibly exposed to to tariffs and international catalysts.
Kelly Cox driving the market higher. We're negative 75 on futures now, negative 68 here. The VIX on 2 big figures off the GDP report. Good reporting on that on Twitter, and of course with Scott Landman and the team at Bloomberg.
They have a delay.
Domestic GDP. Speaking of buoyancy, a market report.
You got it. And as we get to the open right now, it's not looking so good after that latest GDP data. We'll start with the S&P 500 down more than 1%, 72 points, 5,489. We have the Dow down 0.7%, 281 points at 40,030. And finally, the NASDAQ just kicking in down 2%, 358 points, 17,101. We go to the 2-year yield, 3.63%.
All right, so what I want to do is give you my take on this. Okay, so the S&P 500 is trading at 5,478, below the 5,500 psychological barrier. Okay, so the shorts are winning on this right now. But we have to wait and go into the session for about an hour before we see the actual velocity of the sell-off. If the velocity isn't there, then it adds probability that within the intraday session, institutions are going to come in and buy. Now, I'm not seeing a big spike on the VIX. So because we're not seeing a big spike in the VIX, because it's still at 26, we're not seeing 28 or 30. That kind of proves my point that potentially there's going to be actually people buying into the market. But we'll see what's going on. We are below that psychological barrier, though. That's an important feature here. Now, it's stable in terms of dollar. Not much price action moving in the open with the 1.13 and for the euro, and for the USD Japanese yen 142.76. It's staying there. There's a little bit of a sell-off with BITO at 20.52. So I'm not seeing it doesn't, but it's just started the session. We need to look into this, 30 minutes, 1 hour in. If it accelerates, then we have a problem. Right now it's down by 1.5, but it could be in an hour or so, it could be only down a half a point. So we'll see. We'll see what happens here.
For a while, and some industries and sectors will be more impacted than others. Has it affected your stock selection at all?
Well, look, we've had a lot of conversations around this. I think if you're a money manager and you haven't at least had discussions around what's going on, then you're probably falling behind. We haven't made any changes to our portfolios, but we are, 30% invested in international equities.
Okay.
So in our main equity sleeve. So we've always been a proponent of international investing. I think it's all the more important right now because as money moves around, and money doesn't evaporate, remember it moves somewhere always. Mm-hmm. We think it could be looking for international sources, but so far no changes, and we build our portfolios so we don't have to change.
Do you understand that you're 30% in international, so Barry can expense a trip to Italy?
Well, you got to take that one up with Barry. And tell him I want a ticket.
Is he insufferable now because of the New York Knicks? I mean, Josh, you guys, have you medicated Barry in the Knicks Pistons?
We're definitely a Knicks office. That's something I've learned over the past year or so, and everybody's pretty excited. I don't get into the NBA. The Charlotte Hornets haven't been a part of the conversation forever.
That's true.
But I'm happy for the Knicks, and I'm excited because my colleagues are excited.
Yeah. She's got some problems with the North Carolina Tar Heels basketball program.
The football program.
Well, that's going to be fun. That's going to be fun.
We have Chapel Bill.
Yeah, Chapel Bill. That's right. There you go.
Yeah, that's his name.
And his girlfriend. There you go.
Be careful now, young man.
I'm just saying.
Yeah. I'm optimistic. I'm cautiously optimistic.
20 seconds. What do you publish today? What's the lead idea you're publishing within down -450?
There's going to be a lot of talk around stagflation. I've already written a lot about this.
Agreed. Well said.
I don't think we are quite there yet. Obviously, the GDP data didn't look great, but there's still pretty buoyant demand underneath. And it's also hard to read data at the moment because of all the craziness.
The GDP price index just screams stagflation.
Yeah. And I think that's what's spooking people because that's the worry in the background, right?
I agree.
Deepest economic trend in the view.
Lauren Summers, thank you so much for your coverage of David Weston on that. There's maybe it's not a huge stagflation, but nevertheless it's tangible. Kaylee Cox with his chief market strategist at Ritholtz Wealth Management. We're open down -400, SPX at -78. From New York City, Bloomberg's surveillance.
All right. Let's take a look at experts warn about empty shelves due to Trump's tariffs. This was CNN.
Smart enough to beat the market? Then you're smart enough to know that even Renaissance Technologies, the world's most successful
Financial experts are sounding the alarm of the potential impacts of the global trade war sparked by President Trump's tariffs. They say that it could trigger a slump in shipments to the U.S. and empty shelves in stores. Supply Chain Logistics Group's Vision reports a drastic drop in shipping container bookings from China to the U.S. in recent weeks, as we see here in this chart. And data from the Port of Los Angeles shows a declining volume of imports as well. Let's welcome into the conversation Craig Fuller. He is the founder and CEO of FreightWaves. That's an organization that provides data and analytics on the freight and logistics market. And he joins us this morning from Chattanooga, Tennessee. Great to have you this morning, sir. Let me just ask your response to that chart you see. We also have these warnings about pandemic-like shortages on store shelves. How concerned are you?
Yeah, I think it's a real issue. It's a real concern. I mean, it's going to bring people's memory back to COVID, where we had all sorts of shortages. This could happen again. So really what's happening is companies have paused shipments into the United States, and in doing so, it means that a number of products will not be readily available and won't be in inventory when consumers go to purchase those things.
I want to play for you something that the Treasury Secretary Scott Bessent said on Monday when asked whether he had any concerns about shortages. Take a listen.
Are you worried about empty shelves?
Not at present. We have some great retailers. I assume they pre-ordered. I think we'll see some elasticities. I think we'll see replacements.
Mark, is that a fair assessment that retailers would have already pre-ordered for this, that they would have been able to get in front of this?
Yeah, I think for some of the larger big box retailers have been planning for the past year. But when you look at a number of small businesses and a lot of medium-sized businesses, they didn't take precautions. I think people expected in supply chain, expected that tariffs would happen, but I don't think anyone foresaw 145% tariffs. And let's not forget that we're not just talking about retailers, but things like your air conditioning to go out. So a lot of the appliance and parts for machinery and air conditioning units are actually sourced from China. So you could be in a situation in July, and because these companies have not imported these products, have not imported these parts, it could be a situation that your air conditioning goes out in the middle of July and you call your technician and he can't get his hands on parts anytime soon. So you could be without. So these are the concerns. When you actually disrupt the supply chain to the degree that we are currently doing, there are going to be things that you normally would expect to receive, you normally expect to be able to purchase, you normally expect to enjoy, are not going to be there.
And how soon before consumers start to see that or feel that? And where do you see it first? What products?
Yeah, so I think it'll be intermittent. Probably won't even be something that you notice at first, and that could happen as early as June, so about a month out. When you're really going to start to feel the pain, probably it's going to be noticeable by most consumers, is in the back-to-school period. So this is really early August when parents and moms are going out to buy their kids things like backpacks, school supplies, batteries, nutritional supplements, over-the-counter medicine. These are the types of items that you potentially will not be able to find in the stores.
Okay, so now the VIX is starting to elevate. It's at 27.25, and you're seeing that we're almost 100 points down on the S&P 500. We're at about 1.7, 1.68% down.
Is food? Shouldn't worry about food. We source most of our food here domestically, so not that concerned. But it's those low-end manufactured items, that stuff that we consume a lot of, that's manufactured, are the ones that are of the biggest concern.
Yeah, I mean, I've even seen like on platforms for women who are expecting, warnings about getting car seats in advance, warnings about getting strollers in advance, because so many of those products come from China. Craig, what about the impact to jobs and potential layoffs? You have 9 million people who work in trucking. You have 19 million people who work in retail. What would you say, as someone who follows the space really closely, as someone who works in one of these industries, is hearing this interview and wondering, should I be concerned about my job?
Yeah, it's a real concern. There are 9 million people who work in logistics nationwide across the United States that move products throughout our supply chain. if you think about the fact that we've had a 35% drop off in imports into the United States, that likely to stay persistent for some period of time, when we look at what it will impact domestically, so we still source a lot of products in the U.S., about 20% of the trucking volume across the United States is actually imports. So we're thinking that we could see a 5 to 6% drop of total freight across the U.S., and that could mean anywhere from 400 to 500,000 potential job losses in logistics alone. You mentioned retail. One of the things that retailers need is inventory. And if they don't have inventory, they're not going to have as many sales. And if you don't have as many sales, you don't have the need for as many people. So these are sort of these secondary impacts. And that's assuming that it doesn't actually go much further into things really across the whole economy.
And then what about, one thing that we've obviously seen is an announcement on a tariff and then maybe a deal or an announcement about a deal coming, and so a little bit of a sort of a walk back of that. When we get these deals ultimately, or when we get a concession of some sort, how much does that undo any potential damage at the ports, undo any potential damage on store shelves, or as I've also seen, being reported, some of the damage is already done, whether you undo it or not.
Well, it's going to sound ridiculous, but supply chains have an enormously long lead time. So I'm going to say something that is absolutely going to seem absurd, but there is a potential of what's happening right now, even if we get a deal in the next 3 months. I'm specifically talking about China. Even if we get a deal, you could have problems getting your hands on holiday goods. And so things about Christmas, those Christmas gifts, it sounds absurd, but you might want to start doing your Christmas shopping right now, because when you go to shop in the stores in October, November, and December, the items that you would expect to normally see may not be there, or the selection may not be there. So that sounds insane, but because of the long lead time, because companies order these products 6 to 9 months in advance, it just takes a long time to move through the supply chain, so go ahead and prepare now.
Yeah, that is a wild thought. And the procrastinator in me, Craig, that doesn't do a lot of my Christmas shopping until December 23rd, is sort of having a little meltdown. But I appreciate the heads up. Thank you.
All right. So we have confirmation here that we're below 100 now, 114, 112 points on the S&P 500. So there's a little bit of an acceleration of the sell-off. So just be calm. It's going to slow down. Right now, the VIX has elevated now almost to 28. It was in the 26 range, just below 28. It's at 27.95. And the S&P 500 is trading at 5,447.48. So just wait it out. This might go down. So it's almost 2% down. It's probably going to, I wouldn't be surprised if it goes 2.5 and then it's going to level out, and we may see it be down by the end of the trading session at about 1.3, somewhere in there, right? But let's just see how this emerges. But just wait it out. I suspect that institutional investors are going to start coming in later in the session.
All right, let's bring in Paul Donovan, the chief economist for UBS Global Wealth Management. He is with us from London this morning. Paul, great to have you. Let's start with that labor data. Yesterday, we learned that the number of open jobs in March fell to the lowest level in 6 months. What's interesting, though, in that same report is that layoffs seem muted. So how would you describe the state of the labor market right now in the U.S.?
Well, the first thing is we've got to be very, very careful in the precision of this data. It's a really unreliable report. And that's because essentially companies have stopped telling the government what they're doing with employment. The response rate's very low. But what we are getting a sense of from a wide range of indicators is that companies are just sitting on their hands. They're not firing workers, because the economy was doing very well at the start of this year. But given the erratic policy environment, the uncertainties that creates, companies are not choosing to invest in the future. And that in particular means that they are not hiring new workers. They are just keeping things steady for now.
So when does that lack of investment, in your words, start to show up in potential layoffs or not hiring and laying off people who are currently on the payroll?
Well, obviously,
Feel like you're already playing catch up on your business finances for this year? Xero can help you take control. Starting my business and getting my products out.
Well, obviously for certain sectors, that's going to be quite rapid if you are very much engaged in trade. So we know, for example, that volumes in US ports are collapsing. Now that means that people who are employed in US ports face the risk of at least temporary unemployment. But then beyond that, people in the trucking sector face the risk of temporary unemployment. Fewer goods coming in, fewer goods to move around the United States. So if you're engaged very actively in the traded goods sector, you're very vulnerable. If you're in the service sector, perhaps less so.
Yeah, we know that there are 9 million people employed in the trucking sector, so that's a lot of people. Paul, let me ask, we're going to get some other key indicators on the health of the economy in just a few hours at 8:30 Eastern. We're going to get the first estimate for first quarter GDP. The caveat obviously being this is the first quarter before that April tariff announcement, but we're also going to get another measure on spending, inflation. What are you watching here? What are you expecting here?
Well, as you said, this is very much the before times. You know, this is not going to capture the uncertainty and so on. And consumers, let's remember, are not really going to start to feel the effects of the trade taxes until the end of May at the very earliest, and more likely late June. So the full effect of that is later. However, what we are going to be looking for is whether consumers were pulling forward their purchases of goods, that they were hearing US President Trump talking about taxing them, taxing trade, and they're thinking, well, yeah, we were planning to redo the kitchen in the summer. Maybe we better do it now. Maybe we better bring forward those purchases. So we'll be looking for that pulling forward action in things like the durable good purchases that are detailed in today's data.
And what about any impacts to trade? I mean, I've seen some predictions that the GDP figure can in fact be negative because of that surge in imports that you were just talking about. What do you see there in terms of the trade impact?
It could well be, but I mean, that doesn't actually tell us a great deal about what is going on, because what we did see very clearly in the March data was this surge in imports. And again, that's because companies were frantically scrambling to get as much into the United States as they could before President Trump imposed the trade taxes. And so with that, you get sort of a front loading of demand, which is very much what we've been seeing in numbers. And because imports are a drag on US GDP, a negative US GDP, that is something that could create some downside risk. But that's not really telling us anything about the underlying momentum of the economy. That's just telling us about the distorted behavior as a result of erratic policy decision making.
The thrills never stop at Empire City Casino. You can win big with non-stop action, including electronic table.
All right. Before we go to Bloomberg and continue on with the economic coverage, please go to my store, the-studio-reykjavik.com, and get ashwagandha root. Ashwagandha root is going to help with your cortisol levels. It's also going to help with your blood glucose levels. And when you bring those down, you're helping to reduce inflammation. So that means that you're going to help with your immune system, and you're helping with your cardiovascular system. So you should be taking ashwagandha root every day. Also, turmeric. It's an antioxidant, so it's going to soak up free radicals. It also brings down inflammation. Really powerful to boost up your immune system and help with your cardiovascular system, because when you bring down inflammation at the cardiovascular level, you're reducing plaque formation. In addition, if you work out, taking turmeric at higher doses is going to help you recover from that workout, and you'll be able to do your next day workout with less soreness. So turmeric is a great way to bring down that inflammatory response. Stack them together, and it's a powerful stack. It helps with your immune system, and it helps with your cardiovascular system. So please take this stack and help your body heal and reduce that chance of plaque formation. Please go to my store, the-studio-reykjavik.com. Use discount 5. You get $5 off any order. In addition, if you spend $150 or more, you can get a free gift until supplies last.
On YouTube, subscribe to Bloomberg Podcast, Bloomberg Surveillance.
All right, so they're on commercial break for a second here, so let's take a look at some of the other news that's popping up. Live Now is in a commercial break. Let's see here. This was from CNBC yesterday.
Guys, this is the blazer for the summer. Just pulled it out of my bag. Not a wrinkle on it. A lot of stretch here.
New tariffs on Chinese goods are pushing product prices higher and forcing many U.S. importers to halt shipments. The Port of Los Angeles is now forecasting a 1/3 drop in cargo for next week compared to last year. Joining us right now is Gene Soroka. He's the Port of Los Angeles Executive Director. Gene, those are some big numbers. You're really expecting 1/3 of the traffic to drop off next week?
Good morning, Becky. And yes, that's right. According to our own Port Optimizer, which measures the loadings in Asia, will be down just a little bit over 35% next week compared to last year. And it's a precipitous drop in volume, with a number of major American retailers stopping all shipments from China based on the tariffs.
Yeah, the China piece of that is the most interesting. That's where the shipments are basically ground to a halt, you said?
Yes, that's correct. And that makes up about 45% of our business here in Los Angeles, Becky. Now, what we have heard in talking directly to CEOs and senior executives of the shipping lines is they'll try to add a couple of port calls in along the Southeast Asia routes where cargo is still moving, albeit at a 10% tariff. But realistically speaking, until some accord or framework can be reached with China, the volume coming out of there, save a couple of different commodities, will be very light at best.
I was looking at the numbers, and for the first 3 months, you all handled about 2.5 million import containers. That's up 14% year over year. So how much of that was retailers and others trying to really bring forward as much as they possibly could ahead of these tariffs?
A great majority of that volume was advancing inventory, and that started last summertime. Even during the campaign trail, when folks started talking about tariffs and trade policies, some larger retailers across a variety of sectors and manufacturing folks who were bringing in parts and components started to advance that inventory. So we had about 9 months of a run-up here. And then this last burst in March really took us to the end of what we call that inventory look. And now, precipitous drop overall, and realistically what we're going to see next is that retailers have about 5 to 7 weeks of full inventories left, and then the choices will lessen.
Meaning that we could see empty store shelves, meaning that consumers will see higher prices. How do you see that playing out?
Yeah, a little bit of both. And I don't see a complete emptiness on store shelves or online when we're buying, but if you're out looking for a blue shirt, you might find 11 purple ones and one blue in a size that's not yours. So we'll start seeing less choice on those shelves simply because we're not getting the variety of goods coming in here based on the additional costs in place. And for that one blue shirt that's still left, you'll see a price hike.
Gene, we always use the numbers, not just at the port, but any of the transportation numbers, anything that show us shipments coming in as an indicator of the overall economy. The numbers that you saw in the pull forward, does that mask what the situation could be right now? Or, I'm just trying to figure out how to read the economy at this point. We brought in a lot to try and prepare for this. Is there the chance that we'll be able to shift to, containers coming out of Cambodia or Vietnam or other places that will bring that in? I don't know how we read any of this stuff.
Yeah, Becky, you're right. And what we will see are a couple of stops in Southeast Asia to profile the vessels that are still in motion, meaning that, again, a great majority of the cargo is coming out of China. It's not now based on this pause by American importers. So those ships are idling. Let's put a call into Haiphong or into Ho Chi Minh City in Vietnam, drop into Southeast Asia before coming here to Los Angeles, and try to fill the vessel up as much as possible. But the real key indicator that I've been looking at is for the month of May arrivals, we'll see 20 canceled sailings. That's about a quarter of the normal arrivals that we have, and therefore this drop will continue throughout the next month.
But could we make up for it again with places, you've seen a drop in 20 containers, 20 shipments that come in. Could you see additional ones that are put on as they source other countries and try and bring those in? How long do you expect that to last?
Yeah, possibly, Becky, but from a sheer volume perspective, manufacturing capacity in Southeast Asia locations, you're not going to make up for that 45% of the business that emanates from China. Secondly, this is kind of a longer game than transactional business. For example, major American retailers put their orders into factories in Asia 3 or 4 months before a vessel even sails our way, which is an additional 2-week transit time. So simply shifting from your manufacturer in China over to Cambodia, Vietnam, Indonesia, that quickly normally doesn't happen. There are some negotiations that have to take place in addition to finding the necessary capacity, because a lot of folks are running to these locations now to try to augment the loss of volume coming out of China.
No question that's going to create some pain here, but for China, I've read that they're, in a lot of cases, simply shutting down the factories, not doing anything because they don't want these orders to have nowhere to be sold. I would imagine the pain is felt pretty severely there as well.
That's right. And again, to coin the phrase that's been used most of the morning, nobody wins. China is America's factory, and without these orders, people aren't going to those manufacturing facilities. Truckers, transport people, even the folks in the shipping line industry are scrambling to try to find use of those assets. So yeah, the pain is felt on both sides of the Pacific.
Well, we're definitely going to probably see shortage of certain goods. But you know what? Perhaps America has been spending too much on stuff. The United States has been spending too much on stuff. So holding off for spending in the next four months or so is not that big of a deal. All right. So we're live streaming on Rumble. We're live streaming on YouTube. Thank you very much for watching. Also live streaming on both versions, the larger screen and the telemetry screen. On my website, the-studio-reykjavik.com, you can see the telemetry screen on YouTube's live feed. And we're simulcasting on X Spaces. If you have a question, type it in the chat or ask for the mic on X Spaces, and you can ask your question about what's going on pertinent to what we're covering. So with that said, let's go back to Bloomberg. But before we do, please go to my store, the-studio-reykjavik.com. Get the vitamin C and magnesium. This is a great way to boost up your immune system. Vitamin C also helps with your skin, and magnesium helps with your brain health. It helps with brain function. Magnesium and zinc, again, helps with your immune system and your brain function. So please stack these together, drink it with filtered water to get the max benefit, all right? And you're going to be boosting up your immune system, you're helping with your skin, and you're helping with your brain function. Use discount 5 and you get $5 off. I've been also lowering my prices because I bought more inventory at a lower price point. So I'm passing on those cost savings onto my customers. So I can get these products in your hand. So you can take these stacks and have more, have more of these supplements stacked together to get the max benefit for these dual purpose system targeting. All right. If you listen carefully to what I say about how to stack these things, it's targeting multiple systems at the same time. So you get more bang for your buck. So if you spend $150 or more on my store, you'll get a free gift until supplies last. But the whole idea is stack these, get max benefit. Like I said, you stack the vitamin C, magnesium, and the magnesium and zinc together, you're helping your skin, your brain health, and your immune system all at the same time. Make sure you drink it with filtered water, really important. please go to my store, the-studio-reykjavik.com. Okay, no, Bloomberg's not up and running yet. All right, so let's go back to let's just drop into the NVIDIA CEO is speaking at a tech conference right now.
NVIDIA is now 33 years old. We've been through 3 computer revolutions, from the PC revolution to the internet to mobile, and now we're in AI. And so you have to, in order to thrive across all of these different changes in the environment, you have to understand how to play games. And so the things that I just described, understanding the game, understanding the assets you have, really important. At the first layer, at the technology layer, the most important thing to understand is the intellectual capital. And remember, 50% of the world's AI researchers are Chinese. First, just take a step back and recognize that. That important factor has to play into how we think about the game. The next is AI factories. In order to do well there, you need to have energy. Because fundamentally, we transform electricity into digital tokens. Just as the last industrial revolution transformed atoms through energy into, steel things and physical things that we know, cars and things like that, buildings and things like that. And the generation before that, we gave water into a machine called a dynamo, and what came out was electricity. And so now we have electricity go in and tokens come out. So the next layer requires energy. The layer above that.
That's true. In terms of, we needed to take out oil out of the ground to be able to convert it into a fuel source. So we can convert chemical energy into mechanical energy that leads to some sort of usefulness. A lawnmower to cut your lawn, or to make a car, or to make steel, or whatever, all right? But it's doing something. It's creating a product, a physical product, all right? Now he's saying, well, you need energy to make this virtual, it's not even physical, but virtual token, or a digital asset, all right? But the thing is that digital asset it's energy being converted into a digit, just digits. I mean, what is a token? What is Bitcoin? It's digits, all right? It's a series of digits. That's all it is, all right? And we put some value on that, all right? So, but that process has not created useful work. It didn't create converting energy into a token, doesn't make steel, doesn't turn on your lawnmower, right? Doesn't allow you to make or move a vehicle. So doing this comparison is just wrong. And if someone is intellectual and honest about this, it asks the question, should we be wasting energy to make digits? And I would say we should not, but that's my take on it. But it's wasteful energy, that's what's happening, unless it's 100% renewable. And these coins are not made on 100% renewable energy. So it's wasting energy, actually. It's not converting into useful energy right away, like converting chemical energy into mechanical energy. So his comparison is just wrong. All right, please go to my store, the-studio-reykjavik.com. Get the structural nano silver soaps that I have. You can get it in peppermint and in lavender, very high quality soaps. I also have it in charcoal tea tree and in lemongrass. Structural nano silver soaps, very high quality. Get a few bars for your household. Help support my work. Help support your health. Use discount 5. You get $5 off. And if you spend $150 on an order, any order, you get a free gift until supplies last. Please go to my store, the-studio-reykjavik.com and get the structural nail silver soaps. It's something that I use every day, very high quality. Please help support my work and support your health. It's a win-win situation. All right, let's go back to Bloomberg.
Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube. So head over to youtube.com and search Bloomberg Podcast Live. That's where you'll find us. Coming up, we're going to check in with Michael McKee, Bloomberg's international economics and policy correspondent. Get his thoughts on some of this economic data coming out today. I don't know. GDP negative for the first time since 2022 on surging imports. What to make of that? So we'll break down all the economic data with Mike McKee. Daniel Flatley, a Bloomberg U.S. Treasury reporter, will talk to us about some of the comments we're hearing from President Trump about the economy here. Who actually owns this economy these days? Ann Maletti, head of equity investments at Allspring Global Investments, one of my all-time faves. She's going to be in studio here, so that'll be cool. So we'll get her thoughts on these markets. So a lot coming up. Markets selling off today, big time. The S&P off just about 2% here. Let's go to Lisa Mateo, and she'll give us a Bloomberg Business Flash, Lisa.
And this Bloomberg Business Flash brought to you by IBKR. Financial advisors switch to interactive brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. Yes, stocks are slumping. This is after data showed the U.S. economy contracted at the start of the year. Pre-tariffs import surge, also more moderate consumer spending. To the specifics, inflation-adjusted GDP, it decreased an annualized 0.3% in the first quarter. Imports surge an annualized 41.3%, the biggest advance in nearly 5 years. Consumer spending, that advance at a 1.8% pace, the weakest since mid-2023, but still a little bit better than what economists have expected. We also received data from ADP on employment change for April. That came in lower than expected. The survey was for 115,000, came in at 62,000. Moments ago, we just got some more data coming in. So I was sort of personal income, that's up just a tick for March at up about 0.5%. Then we had personal spending up about 0.7%. That's a little bit higher. I have to point out a pending home sales month over month for March, because the survey was for 1%, came in at 6.1%. So a big difference there. We check the markets all day long at Bloomberg, so let's get right to it. We have the NASDAQ down more than 2.5%, 458 points. The Dow off more than 1.5%, 703 points. The S&P 500 down 2%, 115 points. The 2-year yield, 3.62%, down 2 basis points. The yield on the 10-year, 4.17%, and that is little change. Big day for earnings with Microsoft and Meta after the close. Meantime, we had a little bit of a slight relief in the U.S. health insurance industry. Humana reaffirmed its profit guidance for the year. Its shares are up about 1%. Then Caterpillar, first quarter earnings fell short of estimates. Its shares are down about 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, Lisa. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. It's going to be a tough tape for these tech companies to report after the bell if we continue with the sell-off that we're seeing. Let's take a look at some of the stocks on the move today. We're joined by Bloomberg's Christina Kino. She heads up our MLive coverage for us. Great analysis on what's happening in the market on a minute-to-minute basis. All right, let's take a look at some of the stocks here. Starbucks is one of them. That was a rough quarter.
That was a rough quarter, Alex. First quarter same-store sales declining 1% in quarter. EPS also short of estimates. Although we heard from CEO Brian Nichols saying that apparently behind the scenes they're showing a lot of signs of progress. Apparently they're testing an algorithm to prioritize which orders to prepare first so they can speed up service in their cafes. They're also adding more store workers, and they're trying to overhaul their cafes to make them more welcoming. But clearly, it's not quite working just yet.
My Starbucks on Route 35 in Wall Township does a great job. I mean, it's awesome. Kids are great in there working, and they get it to you right away. I don't know.
I mean,
it's pretty good.
But I think it's also that they pared back. There will be paring back a lot of their menu to make it faster.
Yes.
Sometimes you're doing those ones where you waited
Yes.
like forever for. an order.
And the person who comes in with an order for like 27 different things. It's like, come on.
Yeah,
Really?
and like, but you know,
You're feeding your whole family at Starbucks? What's going
sometimes
on?
we are, okay?
Okay, very good.
Are you also looking at the super micro? I mean, talk about a really rough preliminary quarter, and that sets up the tech guys in a very odd spot.
Yeah, absolutely, Alex. I mean, it says a lot about where we are in the AI cycle at the moment, right? So super micro at the moment down just more than 16% right now. Sales were 4.5 billion to 4.6 billion in the fiscal third quarter. That missed analyst estimates in the company's own forecast. That's a forecast from February. Remember, they gave an aggressive long-term revenue outlook. They said sales will be $40 billion in the fiscal year ending June 2026. Quite a different picture now because AI is not quite the headline grabber as it was previously.
Well, also it just shows sort of what the demand cycle is going to look like, and I think we're going to learn a lot about that. Are we just delaying some kind of orders? Are we rejiggering our inventory? Are we changing our capex? Are we just moving at different places? And all of that, I think nobody actually knows, which makes these earnings quite interesting. All right, let's go to Amazon.
Amazon down, let's have a look. It was down more than 3% earlier, down more than 4% now. We have news today, Grindr apparently saying that it's using artificial intelligence tools from Amazon.com and Anthropic to develop features for its Wingman product rather than relying on chatbots. But clearly, that's not enough to lift the stock. Of course, Amazon was in the news yesterday as well after a report that it was apparently going to display the cost of tariffs on products. That caught the White House's attention, and President Donald Trump called Jeff Bezos to complain after he got the report. And later on, Trump said that Bezos, quote, solved the problem very quickly, and he did the right thing, apparently.
Very good. Christina Aquino, thank you so much. We appreciate it. Christina Aquino, Managing Editor for Markets Live. Bloomberg News joining us here in our Bloomberg Interactive Brokers studio. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes of the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcast. All right, you hit EcoGo on your Bloomberg terminal, and you see a lot of economic data coming out today. I don't know. One of the ones that kind of jumped out at me is this GDP annualized quarter to quarter. The forecast was for a decline of 0.2%, came in a decline of 0.3%. That's versus a gain of 2.4% last period. That kind of gets my attention. So we said, hey, let's ask Michael McKee. He does this stuff for a living, international economics and policy correspondent for Bloomberg News. He joins us here in our studio. Mike, is that a big deal, that number, that print?
Yes, it's a big deal, but not for the reasons you might think.
Okay.
I'm going to say something you've never heard me say.
What?
That Matt Miller just accused me of. He said I sound like Peter Navarro today. Yeah, I see. Did you see Alex's face when I
my
said
face
that?
bugged on that a little
Because I agreed with what Navarro's sentiment was on television a few minutes ago, where he said that this was not a bad report. I'm summarizing. Because the 0.3 decline doesn't tell the whole story. I mean, the story underneath GDP today is all tariffs. What happened, we saw tariffs bring in, tariffs get people to import a lot of stuff to try to get ahead of the tariff price increases. And that has totally distorted the numbers here. What we've seen is that imports subtracted 5% from GDP, a record. Inventories added 2.25% because the jump in inventories was a record during the month. And they didn't quite offset, but we did see all of this distortion in the numbers that doesn't tell you the real story. If you look at consumer spending, it was up 1.8%, which was a little more than expected. And business spending, distorted by tariffs, up 9.8%. 22.5% gain in imports of equipment. So it's really hard to tell. So what you do if you're an economist is you look at real final sales to domestic purchasers, which takes out inventory and trade, and that was up by 2.3%. It's a little lower than it was in prior quarters, but that is still showing growth in the overall consumption economy.
Well, to that point, if we are seeing consumption okay, and now you have incomes being okay, is consumption also being driven by pre-buying tariffs, or is this real underlying strain?
No doubt, because people bought a lot of cars,
Okay.
And they bought other things that we didn't see a big increase in durable goods spending, but there was a big increase in services spending, a relatively big increase. So Americans were out spending money. Now the question is, where do they go from here? And for that, what you're looking at is the other data we just got at 10 o'clock, which is the PCE data.
Is this the one we care about, or is this not the one we care about?
This is the one we care about.
This is the one we care about.
This is the monthly. This is the monthly number. So it's the most recent data. This is, if you're following the trend, which is what the Fed wants to do. We were up 0.7%, which is up from 0.5% in February. So Americans spent more in March. The numbers were weighed down by what we got in January and February in the quarterly numbers. And incomes were relatively strong. They're still up 0.5% after a 0.7 rise the month before. If you look at the wages and salaries in that report, which is the most important thing because people spend what they make, they were up 0.5%, which was up from February's 0.4 and January's 0.2. So as the month went on, people got more money. They spent more money. And so it doesn't suggest we go into the second quarter with a real problem in terms of consumer momentum.
That's my read. It seems like the consumer market is still pretty good.
When you're looking at the consumer confidence numbers, it looks really terrible. But the numbers that we're seeing from consumers in terms of what they do,
that's what Treasury Secretary Bessent's been saying. I mean, you can look at all the survey numbers you want.
Sounding like Bessent along with Navarro.
Yes, exactly. But I mean, that's what he's been saying. Is that you can look at all the sentiment data you want, but people are still out there spending money.
Well, the question now
This is still
becomes,
backward looking. I mean, this is still for March. April was when we saw the tariff headlines and the volatility in the market, right?
Yeah, the PCE numbers are March that I'm talking about, and the rest of it is first quarter through the end of March. So what's happened in April? That we don't know yet. We're going to have to see. We have the sentiment indicators, and March was really the first month when there were any tariffs. So they weren't really tariffs on you and me. They were tariffs on the steel companies and things like that. So if people are paying more for what they're getting, if they can get anything from China now, maybe that does affect what they're going to be spending on. So somebody said to me this morning, this makes the Fed's job harder because you had higher inflation and lower growth for doing nothing, because this report is so distorted by the tariff stuff that it's impossible to say what it's going to be going forward.
Such a good point. He's so smart. That's why we get him on. Talk about all this stuff.
Sounds just like Peter Navarro.
Yeah, same. It's totally the same. Michael McKee, Bloomberg International Economics and Policy Correspondent, joining us in studio. Thank you so very much. All right, coming up, we're going to speak to Daniel Flatley, a Bloomberg U.S. Treasury reporter, on tariffs and potentially Trump's speech coming on later today. And Maletti, also head of equity investments at All Springs Global Investments. Oh, apparently.
All right. So there's definitely going to be some event risk with Trump speaking today. If he's positive, if he talks positively, I'm not sure what time he speaks, but if he talks positively, then the market's going to go up, all right, or at least go off of the session lows. Now, right now, we are off the session lows. The session low was 5,433. Right now, we're trading at 5,464. VIX is going down now. It's at 26.9, but I don't think the institutional investors have come in yet. But there is definitely some event risk with Trump's mouth when he speaks. But it could be positive, it could be negative, who knows? So just keep that in mind. Hopefully we'll be able to catch what time he's speaking. All right. Please go to my store, the-studio-reykjavik.com, and get the great deodorants that I have that are dual purpose. I partnered up with Rainbow Herbals, and we've created these deodorants that are made from essential oils from the Himalayas. You can get it in peppermint, lavender, and tea tree, or in citrus. It's a dual-purpose product. You use it as a deodorant, and it helps to detoxify your body. So it has no aluminum, it has no baking soda, all natural ingredients, very high quality. Get a couple bars for your household. It's for males and females. Please go to my store, the-studio-reykjavik.com, and get the deodorants that will help to detoxify your body. It's made from essential oils from the Himalayas, extremely high quality. Please go to my store, the-studio-reykjavik.com, use discount 5, and if you purchase $150 or more, you get a free gift until supplies last. All right, with that said, I don't know, attorneys for man killed in FSU shooting speak out. It just seems like the world is really devolving. Let's just go in and listen to it. Just
he was a vice president. He was a father. He was a husband. There's a lot there that was taken from the Chapa family. And so I don't really have that answer for you either, but we'll explore any and all remedies possible. The last thing I'll say is thank you again to Florida State University. Thank you to the president of this institution. We saw you last Friday. You didn't have to come to the funeral. You could have sent a big delegation or made a big hoopla outside, but you just wanted to come and be a part of that celebration in this particular community at this particular time. And so there's a great deal of thanks that the president deserves. Thank you to the governor. Thank you to law enforcement. We just want a transparent, open investigation. A little sunshine never hurt anybody. Thank you, and God bless the great state of Florida, the state of South Carolina, and God bless all of you all. Thank you.
That news conference wrapping up just moments ago as you're taking a live look at Tallahassee, Florida right now, where we just heard from the attorneys for the family of Tiru Chaba. He was that 45-year-old father of two.
You know, my observation is that society is just devolving. Again, it's about God, country, and family. If you have God, country, and family as your ethos, you have a more moral life. You have a better society, more functioning society, more law-abiding society, and a growing economy because you're actually increasing the population. And when you have a good home life, you're also creating an environment, in most cases, where the children will be productive citizens, right? You may have some outliers, but the thing is that a healthy society is God, country, and family. I feel as though the last 10 years, we have seen a lot of erosion of those three pillars. Lack of faith, lack of consideration of country and the importance of country, and the whole family unit is starting to decline. Very bad, very, very bad for society, right? Now, also, the bread and circus. Everyone's so focused on looking at their social media and wasting their brain power, wasting their life on stupid stuff, bread and circus type stuff. And then society's starting to become more scared of everything, scared of the market, scared of the economy, scared of your neighbors, scared of this, scared of that. Everything's scared. Everyone's in scared mode. So that elevates your cortisol levels, that weakens your immune system, right? If you're always in an elevated, heightened state, that's not good for your brain. It's not good for your heart. So, and then when you have elevated cortisol levels chronically, it does damage to the organ systems. It's bad for your body. But also, court TV and all these little news things about this court case and that, saying you have the lawyers talking, it's just, the whole society is just not functioning right. There's something fundamentally wrong with it. There's something fundamentally wrong. And everyone is knee-jerking with innuendos and opinions and coming to conclusions without really analyzing the data, all right? So sorry about that. The feed on Rumble sometimes cuts out. So society is devolving because of this heightened state of fear. And when you're in a heightened state of fear, you're not really analyzing the situation, all right? Society just needs to calm down deal with the facts, not innuendo, and move forward in a productive way. All right? Okay. Let's go back to Trump's Powell's not ready, is not really doing a good job statement. So if Trump keeps on talking negative about the Fed today, the market probably is going to sell off.
GDP. So, Trump is trying to say, and he said on Truth Social this morning, that this is still Biden's economy, but, even some of his colleagues, Republican colleagues in the Senate are saying, this is Trump's economy. This is these tariffs and what he's implemented. It's a vision that he has. It's a singular vision, and he reinforced that last night. And he is going to own it over the coming months. And as you mentioned, though, there are some nuances. There are some adjustments that he's trying to make, and so we'll just have to kind of see how things play out over the next 24 to 48 hours. But yeah, I think we're kind of back to where we started earlier in April.
Dan, I'm just looking at the personal income, personal spending data that came out today. Still, the consumer's still looking okay, it seems like. How does the Fed view it, do you think?
Yeah, it's a great question. I mean, I think, it's one of the things that we've, paid close attention to is the position that the Federal Reserve is in at this point. And so they really have, my colleague Craig Torres had a great story about this. Jerome Powell, has this reputation among some, including the president, as being quote unquote too late. But the flip side of that is being too early or trying to lower rates at a time when inflation could continue to pick up. So there is this kind of confusing mix of things in the economy where you have a slowdown in growth, but you still continue to see consumer spending hold up. And that's one of the things that, for instance, Treasury Secretary Scott Bessent has pointed to is the underlying economy and the consumer behavior and all of that sort of thing, to say that we just need to get kind of beyond this chaotic sort of tariff rollout and get to the tax cuts and get to some of the other stuff in the third and fourth quarter. That's really going to help kind of goose growth a bit.
Before I let you go, we had the Treasury refunding announcement today, which just shows how much the Treasury is going to borrow, where, how much that kind of set up. Did we learn anything significant?
Yeah, it's interesting. I mean, there are a couple of interesting things in there. One thing that I would highlight is this question about when the debt ceiling is going to when we're really going to have that. And so we're expecting in the next week or so to get an update on the so-called next date, which is when the government is going to kind of exhaust its extraordinary measures and really going to have to think about raising the debt ceiling. So we're expecting an update on that soon. Prior to that, there's going to be a little bit of variability, a little bit of unpredictability in some of the, how they're going to roll out the demand and that sort of thing for treasuries. But what we learned was that basically Bessent is steady as she goes, keeping kind of some of the same measures that his predecessor Yellen had in place in terms of, the securities on offer, treasuries on offer. So I think what we're going to see is basically reliable and predictable, steady as she goes. Things are going to start to get a little bit nervous making around the time of the X date and the debt ceiling, the tax bill, and all that stuff is going to kind of come to a head midsummer. And so that's really the task for the administration, is to try to get all that stuff kind of lined up and through Congress by then.
All right, Dan, thank you so much for joining us. Really appreciate you getting a couple minutes of your time. Dan Flatley, U.S. Treasury reporter, Bloomberg News, joining us via that Zoom thing from Washington, D.C. Let's get back to these markets. We have a sell-off. We are off the lows of the morning. The S&P is off 82 points. That's 1.5%. Ann Mileti joins us here. Old buddy of mine. We've been in the business a long time. She's head of equity investments at Allspring Global Investments. Dude, you're grinding it, still working hard. Ann Mileti joins us here in studio. And you and your colleagues at Allspring, I mean, a lot of folks that have been in the market for a while, you've seen, lots of different markets, whether it's the dot-com bust or the financial crisis or the pandemic. A little bit of uncertainty here this year in the market. How are you guys thinking about some of the volatility we're seeing in a lot of these markets?
Yeah, I mean, I think, Paul, you're right. There's when you have moments like this, you kind of always
look back and you look at what rhymes to the past, and even during COVID, that was something we never lived through before. So while history does kind of rhyme, it never perfectly repeats itself. And here we are again in something we've never lived through before. But there are lessons from the past that you definitely take forward. And some of those lessons really are like, look, in the moment, it feels awful and uncomfortable. But history does suggest that equity market returns for those who stay invested and really think about bottom-up fundamentals and companies that really can control their own destiny. Those investors do well over a cycle. And so that's what our investment teams are focused on, looking at trying to take advantage of emotion and take advantage of uncertainty and volatility.
So is that on a sector level, an index level, or a stock specific level?
It's more on, from a bottom-up stock selection basis. And, there certainly are, depending on the environment, different industries that might fare better than others. But I would say even within almost any industry, there are going to be companies that do better than others.
How do your portfolio managers, how do your analysts, assess a company when a lot of times these companies are coming on their conference calls and saying, we're withdrawing guidance, or we can't give guidance because we don't know what's happening in our business. Boy, if they don't know, how are investors supposed to know?
Yeah, Paul, this is something you spent a lot of your career doing, and our teams do too. So while the calls are critically important, as you know, kind of during reporting season, most of the past is past. We're not focused on that. We're focused on going forward. And on the calls, they may not be able to give guidance. But if you know that company really well, and our teams do have deep expertise in fundamental research, they understand the model, and they can kind of walk through with the management teams, where do they have levers to pull if things get worse or if things get better, and how quickly can those levers be pulled? And then asking them the same question you asked me. How do you look at this environment versus other environments? How can you manage through those? And understanding where they have control of their own destiny versus where macro can kind of push them is really, really important. And you will see some companies actually do have more control in this environment than others.
What do you do about finding safety in the middle of that, right? Like in other cycles, you can make an argument that maybe the dollar at treasury market, it's okay to hide out there a little bit. Is that still the case? Do you guys see that Mark Mobius says like all his funds are like 95% in cash?
Is that right? Wow.
Yeah.
Yeah. Look, I think we tend to be and think about being invested for the long term. And, look, I manage our equity business, our fixed income team. They believe it's a good time for fixed income too, focusing on the income component of that. But on the equity side, you got to be right twice if you're going to sell and then predict when is the right timing to come back. And again, history would suggest that if you just wait out these periods and stay invested, you're going to do better in the long run.
I never thought I'd be talking to you about this topic. Because usually Anna and I talk about radio stocks, TV stocks, billboard companies, those things back in the day.
Billboard companies, what's that?
A great business, by the way. You can't fast forward through a billboard. Just remember that.
Especially if you're stuck in traffic. Yeah.
Exactly. Emerging markets. How do you guys approach emerging markets?
I think, we're lucky we have two great emerging markets teams. One that has a focus on providing income along with the equity returns. So equity and income focus. And the other one that's a little bit more kind of focused on, more growth at a reasonable price and a little bit more emerging market-like with real growth behind it. And so in this environment, you are seeing a natural lift to EM. And I think it's because, obviously, the weakness in the dollar has propelled those markets. Again, we kind of predicted that in our outlook piece in October, that whether we saw dollar weakness, we might see strength of other currencies happen. And investors have been long underallocated in emerging markets. So you're seeing kind of a natural lift in some of those areas with real opportunity. The other thing I would say, Paul, is it's pretty apparent that we're kind of tapped out on the fiscal spend here in the US. There's a lot of other countries that have the ability to really spend.
So do you guys hang out all the time and talk about stocks? Or
back
what?
in the day, when you go to conferences, you get the cool kids with those.
Oh, okay. And if they're not cool, you're like, no thanks.
Yeah.
Take your non-billboard stocks
I have
and go
a
away.
chat group of former media analyst on Wall Street.
Oh, fun.
And all these, Drew Marcus says hi, Rich Rosenstein says hi,
Yes.
Victor Miller says hi.
There we go. Name dropping.
Name dropping. I mean, they all know Anne Malady. So she's in my studio on my show. How cool is that?
That's really cool.
Yeah.
They were the all-stars back in the day. I was the little kid on the block.
No, don't say that. Please. All right, and thanks a lot. Well, you can tag her out.
Yeah, Anne Malady had an equity. Is this a new role for you?
About 5 years.
Oh, okay. All right. She's always like the media analyst. It's strong. Anne Malady, head of equity investments, Austrian Global Investments, joining us live here on our Bloomberg Interactive Brokers. We appreciate getting a few minutes of your time. S&P, we're off 75 points. That's 1.4%. The Nasdaq's off 315 points, 1.8% off the lows, but still, we have a sell-off here. A little more coming up. This is Bloomberg.
Please go to my store, the-studio-reykjavik.com, and get the structural nano silver toothpaste. This structural nano silver toothpaste will whiten your teeth, freshen your breath, help with your gum line, reduce inflammation at the gum line, and good oral hygiene is going to help with better cardiovascular health and valvular health. Please go to my store, the-studio-reykjavik.com. Get a few tubes of this toothpaste, very high quality. It's a toothpaste that I use every day. Please go to my store and get this structural nano silver toothpaste. If you use discount 5, you get $5 off any order. If you spend $150 or more, you get a free gift until supplies last. All right. This is CNN. Let me take you through the math. Ford CEO on how tariffs could impact vehicles.
We've got the CEO of Ford with us right now, right on the back of this, John, Sarah, and Kate joining us, Jim Farley. And Jim, I really appreciate your time. So here, we just got these numbers as you're hearing John and I talk about them. You're, of course, at your Ford Expedition plant in Louisville, Kentucky. U.S. economy shrinking 0.3% in the first quarter, significantly weaker than expected, a dramatic turnaround from the fourth quarter of last year, and all of that ahead of the tariff announcement. You know, we're in a world right now, consumer confidence expectations of the future are their lowest in 13 years. Where you're standing right now, is that fear showing up in the dealer lots?
Well, not for us in auto. Thank you very much for having me on the show. I'm in our most profitable
auto company, and Ford is the most American auto company. We make 80+% of our vehicles here. And to your point, it's tough to tell right now. The reason is because we're seeing double-digit sales increases since March and April, but we ran this employee pricing. I don't know if that's unique to us. There may be a lot of customers going out and buying cars, before what they fear is the imports increasing prices. That may be a dynamic we're certainly seeing. Our inventories are shrinking at the dealership.
All right, and so you're saying what some of this might be is people rushing to buy ahead. So you can't, I guess it's what you're saying, you can't tell if there's going to be weakness because you're taking from the future right now. That's the unknown.
Smart enough to beat the market, then you're smart enough to know that even Renaissance Technologies, the world's most successful hedge fund,
well, we're just seeing a lot of people respond to our employee pricing, and Ford is an American company. I think for many years, half of the vehicles sold in the U.S. were imported. Maybe not everyone knew that, so it's hard for me to tell. I think we're in the first or second inning here of a 9-inning game, but so far for us in the auto, the revenue's been pretty strong. We'll report earnings next week, and you'll see that as a trend. But as you said, there are a lot of ins and outs when it comes to tariffs.
All right, I want to ask you that, but you just said something really important there, Jim. You said that you're going to report earnings next week. Stellantis, your rival here, they just came out hours ago and said they can't forecast anything from this point on. They suspended all guidance for the future because they said tariff-related uncertainties. General Motors, your colleague Mary Barra came out and said they could not release earnings yesterday. They could not release forecasts. They had put the whole thing on hold for a few days because they just couldn't get clarity on what the numbers are. Are you telling us that you're just not seeing that at all? Do you feel that you've got the clarity for your own numbers, the clarity for guidance, that you're just in a completely different world than they are right now?
No, I would say, first, I don't want to preview our earnings, but I will say some basic things. We know exactly what the tariff bill would look like, in terms of cost for the company. We know the offsets. What we don't know is how competitors are going to respond. We're the most American company, so if there's any company that can manage through these tariffs, it's Ford. We make 80% here.
That's a good point.
And our competitors are different. Even the domestic competitors.
And what is interesting is that GM does have a very large footprint across the world. But if you go back to when Lehman happened, when the economic crisis in 2008, Ford didn't have to take a bailout. The reason being is that they ended up borrowing money in the bond market before Lehman even took place, and they shored up their balance sheet and was able to weather the storm. So, hats off to Ford in the sense that it didn't need a bailout in 2008, and it's, as he says, it's more of an American car company than some of the other American car companies.
Our industry, so they will have a totally different tariff bill. You don't think of all the three domestic companies as the same. We're not. We're really different. But as I said, next week I think we'll be able to tell people kind of what the tariff bills for Ford would look like, the most American company. What kind of offsets? What we don't know, Aaron, is what are the import competitors going to do? Yeah. Are they going to build 10 factories? Are they going to take pricing and pass it on to the customers this summer? The stuff we built now is priced. If we announce a price increase now, it'll go into play in July and August. So we have to wait until then to see what our competitors do. I hope that makes sense.
Okay. No, it does on some level, but you keep emphasizing the most American company. You've now said it. I haven't counted exactly how many times in, but obviously you're making that point loud and clear. Does that prevent you from any pricing increases? I mean, are you confident at this point saying that there's not going to be any price increases coming from Ford trucks or cars this summer?
No, I'm not saying that. I'm saying that I'm not going to be specific about our pricing, but I will say one thing. We're announcing today that we're going to extend our employee pricing through July 4th. That's a big commitment. I don't know if the other competitors are going to be able to do that, but we want to keep our prices competitive and low. We sell some of the highest volume vehicles in America, like the F-150, and we think this is an opportunity for Ford having a different footprint. We have a different exposure to tariffs, and that to us is an advantage.
Yeah. All right, so I understand what you're saying. Delay pricing through July 4th. Obviously, you're announcing that right now.
She's trying to make it anti-Trump.
Prices beyond that and whether there'll be increases. You also said that you understand that the tariffs, and I want to ask you more about that because so many people don't, the markets, and not just others in your industry, of course, but across in other industries where there's been suspension of forecasts, whether it's from just economic uncertainty or the tariffs themselves. There was a line on a CNBC article trying to summarize the changes in the auto tariffs yesterday. I just wanted to read it to you, really also for everyone to understand out there what we're dealing with, see if anyone can follow along. It says, parts-related reimbursements include potential offsets of amount equal to 3.75% of the value of a U.S.-made car assembled before May 1st. After that, the reimbursement cap is lowered to 2.5% of cars' value until April 2027. The administration calculated those rates by applying a 25% duty to 15% of the value of a U.S. assembled vehicle in the first year, 25% duty to 10% of that value in the second year. Now you can just go ahead and speed up my voice like a drug disclaimer. Does that all make sense? And do you actually think that will last more than 24 or 48 hours when all the rules could change again?
We'll see, but here, let me take you through the math. You know, a $40,000, $50,000 F-150, 75–80% of the parts are made in America. But to keep it competitive and affordable compared to companies that import from overseas, like Mexico or South Korea or Japan, we have to import certain parts. And a lot of parts like fasteners, washers, carpet, wiring looms are just not available. We can't even buy those parts here. So for affordability and available the supply chain, what the president did is say, okay, for 15% of your parts, if you make a vehicle in the U.S. and you make 75% of the parts in the vehicle from the U.S., there's 15% exemption from the tariffs. And also the second thing he said is compounding. We have a lot of parts that come from overseas that have multiple tariffs. We have the fentanyl tariffs, we have the China tariffs, we have the reciprocal tariffs. Some of our parts went from 0 tariff to 140% tariff. So they decided to say you get 1 tariff, it's 25%. That clarifies things. But boy, do we have a lot of work to do with the administration on exports, and these parts, affordability of parts is a really important thing for America because we got to keep the vehicles affordable. Yes, we want to make them like Ford does in the U.S., but we also want to make the vehicles affordable that are built in the U.S. And the parts are critical for that.
So, crucial. You say, boy, a lot of work we need to do. You stand there in an expedition plant. You were saying 75 to 80% of the parts come from the U.S. And I know that's a general number. I'm not saying that plant you're standing at necessarily specifically. So that means 20 to 25% aren't. Are you willing to actually put real billions of dollars of capital expenditure on the line to change that number, to make a long-term decision that Ford is going to bring more plant activity, parts and beyond to the U.S.? Are you at that point or not yet?
Managing your business doesn't have to take up your mornings. With Zero, you can handle it all before your morning coffee. When I first started my real estate business, I found myself buried in admin, tricky.
We are. We're building a new plant in Ohio and Tennessee. We're number 2 to Tesla on electric. We're number 3 to hybrid to both the Japanese competitors. We're investing across these different kinds of powertrains. We're kind of the only one who offers all of it. You can get an electric F-150, a hybrid F-150, a V8 F-150, EcoBoost F-150, and we don't really care. We just want people to be able to have the choice. So we're building 2 brand new factories in the U.S., and we're the most American already. As far as parts are concerned, that's a good question. Now, we have a lot more work to do. Can we even do this, that 15 or 20%? And that's what we have to work through. Look, we're expecting our competitors to do what Ford's already done, which is to localize more production like this plant here in Kentucky.
So let me just, before you go, and I know you have to go, but have your conversations with the president been productive? And do you have a direct line to him to talk to him about this?
We have worked with his team like every day for the last couple months. And so a very high level of engagement. Look, the administration knows Ford's a bit different. And we've also been working with Mary and Stellantis too as a group, because we recognize how important this moment is to get this all right and kind of figure it out together. And I have to say that the engagement has been very high. Bill Ford's talked to the president a couple times. I know that's, typical, but look, we're all trying to figure this out to do the right thing for the country, and it's going to take a little time. But we never left the U.S. I guess that's my point. We just never left, so we're in a different situation than the other companies, and we also want to do the right thing, like we're building 2 new plants. But we have to figure out this affordability part of this.
All right, well, Jim, I appreciate your time, and thank you very much.
All right, so that's Ford's take on the tariffs. Ford is weathering the storm maybe better than most. Let's go to Bloomberg here.
We do have some bad news in the overall numbers, certainly, with GDP contracting. I think it makes the Fed's job a little easier because this report is so distorted by tariffs that there's no point in doing anything. GDP contracting by 0.3, but because of the distortions, what you want to look at is real final sales to see where the country really is, consumers really are, and businesses really are, and they were up 2.3%. Not a lot of help from the consumer side, up only 1.8%. After a 4% gain in the fourth quarter, consumers definitely pulling back. But look at business investment, up 9.8%. And if you go drill into that, 22.5% was equipment purchases, and probably most of that came from imports as people tried to run ahead of the tariffs being put on. Inventories, we were wondering about that because of all these imports. They hadn't shown up. They have shown up now, $140 billion. In the fourth quarter, they were 8.9 billion. So inventories alone added 2.25 percentage points to the overall GDP, whereas the number that we got from exports subtracted 1.25. So even with all that, we get a contraction. Federal government spending, I want to point out, did fall during the month. So it wasn't the government's contribution. And along those lines, we got the employment cost index. Wages and salaries for civilian workers up 0.8, but wages and salaries for government workers down by 0.2. That, I'm sure, reflects the Doge cuts that are out there.
Yeah, I want to pull up Go on the terminal. This is Matt's favorite function, I think. He showed me it this morning. My eyes popped out of my head. That orange bar there is that net exports bar. It's what you were talking about there. It's with the imports really taking a hit out of the number. But how much of that, Mike, is people importing to get ahead of potential tariff price pressure issues in the future? How messy is that line?
Well, the line's a little bit messy because it also includes gold. And a lot of investors brought gold into the country in the first quarter because they were afraid that the president would tariff it. But it's not used for anything and it's not consumed. So it doesn't count in GDP. So that had to be subtracted out first from those net exports to give you the headline GDP number, but it's still in that increase in export, the decrease in exports that you're talking about. And then in terms of the overall decrease in net exports, it's a lot of imports. It's that equipment, business equipment coming in, it's toys and games coming in. It's a lot of stuff that people tried to get ahead of the tariffs. Now, this is stuff that has made it to port. The big question is what's out there for the second quarter. There's a feeling among some economists that we're going to see a rebound because people will bring stuff in. But in this case, all we're hearing about is shipping being canceled.
All right.
Different scenarios out there. If there weren't any tariffs, we'd do this. But with tariffs, if tariffs are going to stay on the way they are for the remaining, for a certain period, then this might be the cost for us.
And what I find so interesting is that companies in exactly the same sector have been saying different things. So Royal Caribbean hikes their outlook, right? But then you have Norwegian missing the average analyst estimates and warning that its 12-month forward book position is experiencing softening. So there's lots of reasons maybe why they're saying that. But that I found to be very interesting because you can't get a map or a read-through when you have that.
No, you can't. And again, the cruise line business caught me by surprise because I would have thought they're all kind of in the same boat. People are either cruising or they're not cruising. But I've been told that different companies have different brands that appeal to different parts of the market.
Different value proposition, to be sure.
Yeah. All I know is people like Charlie Pellet, I just think they're going to cruise no matter what.
Oh, totally. Yeah, absolutely.
I mean, the people I know that cruise are diehard cruisers.
But are they like Royal Caribbean diehard cruise because it's easier than going to an actual island in the Caribbean, or are they like Norwegian cruise diehard cruisers?
You know, a little bit of both, but I do hear that, like, hey, it's the most efficient way to see lots of different places and things like that. So, but just when I see tens of thousands, or not tens of thousands of people disembark these boats when they come into a port that I just happen to be hanging out, I'm like, ooh, I don't know about that. All right, one of the companies that's taking that is talking about tariffs impacting their business is Caterpillar. Think about that big construction business. I'm looking at CAT as a symbol, great American company. You think about Caterpillar, you think about the big construction equipment, and they're based in Irving, Texas. They reported some numbers today. They missed results a little bit, came a little bit below expectations, but they're kind of saying, you know, but our backlog's still pretty good. But they're one of the companies that says, okay, if tariffs continue, they expect an additional cost headwind of $250 million to $350 million in the second quarter alone from tariffs.
I mean,
so that's a real number, but they're kind of saying, you know, we'll see kind of how things shake out here. The stock's pretty much unchanged on the day. So a little bit disappointing in the numbers, but still kind of hanging in there.
Which is interesting because you mentioned also the orders. So the record organic backlog growth of $5 billion in the quarter. And that figure that you pointed out for potential second quarter headwinds is net of any mitigation actions and cost controls. But then what happens if that keeps going? And doesn't seem to be counting weakening in demand if we do see that on the back of tariffs.
Yeah, interesting. In our Bloomberg News reporting here, in the news, Bloomberg News reporting here, while the headline EPS revenue miss looks disappointing, the guts of the report and the outlook aren't that bad. That's according to analysts at Vital Knowledge, they said in the note here. So people are trying to read through this a little bit. But when you think about Caterpillar, again, you think about big U.S. domestic manufacturing company, the stocks are pretty much unchanged on the day, down 15% year to date. So clearly the market's expecting some impact on their business going forward.
And then we get, Meta, we get Microsoft after the bell. Those are gonna be super interesting. It feels like Microsoft's been trading a little bit as a defense stock. Citi also had a note out that said that 60% of S&P stocks have traded up on earnings, and that's above the historical average. But they say that's basically because of positioning, not necessarily a fundamental read. So sort of take a little bit of salt. Take the market action with a little bit of salt after we see any moves.
All right, let me ask you this refining question here. Can refiners refine different stuff? Like a barrel of oil comes into a refinery, can they refine gas, jet fuel, different stuff? Or do they just, I'm a refiner that says jet fuel or gasoline?
It depends on the refiner. What's making masses amazing?
Well, just in Top Live, refiners have been cranking up jet fuel production, making the most of the fuel since January.
Oh, you have the inventory numbers out, that's why. So it really depends on the refiner. So if you're a simple refiner, you can only use certain types of oil to make certain types of products. If you're complex, it means you have a lot more flexibility in what you take in and what you take out. Now, there are two maintenance seasons, one in the fall and one in the spring. So we're just coming out of it right now, where they change the products that they're making to account for different seasons, like driving season versus say heating oil or heating fuel, etc. So in those seasons, you see refiners working less because they have to stop kind of producing stuff, change some things, and then get back up to producing. So right now they're going to stock up products for the.
Well, that's the same thing with gasoline. You have a summer season gasoline and a winter season gasoline. All right. So what we're seeing with the market right now is we have the S&P 500 now at 5,489. It's down right now by 70 points or so. The VIX is trading at 26, so it's off its intraday session high. The Euro USD is trading at 1.13. Futures market for oil is trading below $60 a barrel. It's at 59.52. BITO is trading at 20.34, and the Japanese yen is trading at 142.63. So we are, we're still below, we're still negative for the session, but it's somewhat inching up a little bit. I'm concerned about the Trump speech today. If it's anti-Powell, Chairman Powell, or anti-Federal Reserve kind of stuff, might have some market, price action going on the downside. He may say something positive about tariffs. That will be a market rally. So who knows? All right. Let's go to live now. This was published about 11 hours ago, talking about UPS to cut 20,000 jobs amid reduced Amazon deliveries.
Every month I put whatever. Out west. Lots to talk about tonight. The shipping company UPS announcing earlier today that it plans to cut 20,000 jobs this year, in addition to closing 73 of its facilities. The company said the decision is due in part to an agreement with Amazon to reduce the volume of packages by 50%. Amazon is UPS's largest customer, but UPS's CEO says that Amazon's business is not profitable for the company. UPS also says that tariffs and economic insecurity are partially to blame for the downsizing as well. Barron's Al Root is here to break this down. All right, 20,000 jobs, Al, that's massive. How did UPS get in this hole? Why isn't Amazon profitable for them?
A couple of things. I mean, Amazon's very difficult. Amazon's very large, so to some extent, it's market power, right? Amazon is pretty much the largest e-commerce company on the globe or in the Western world, and it can demand relatively favorable pricing. FedEx doesn't deal with UPS. FedEx doesn't deal with Amazon now. UPS is choosing to take to leave some of Amazon's business off the table. And Amazon also has its own internal, very sophisticated logistics network, so it's shifting some of the volume over there. So some of this is the natural ebb and flow of business, but it's very big. And you asked, how did UPS get itself into this position? I mean, remember, we got to go all the way back to COVID. Before COVID, before an e-commerce boom, UPS is doing $75 billion in sales. By 2022, that's like $100 billion in sales. Amazon's, 10 to 15% of the total revenue. And then, like Carol, the CEO Carol Tomé said today, it's not as good as the rest of UPS's business, so they're stepping away from some of it. So they're stepping away from $5 billion in business, maybe $5 to $10 billion in Amazon business, and that necessitates laying off 20,000 workers. Again, for context, that's roughly 5% of the workforce. UPS has almost 500,000 people working for it.
So the idea of tariffs, Al, continues to spook businesses and consumers. What kind of role are tariffs playing in this UPS news, if any? How does it feel to you?
So I think that today's news, UPS reported earnings today. The layoffs, the Amazon business, that sort of came out in the first quarter, sort of pre-tariffs. So a lot of this cost savings and restructuring is Amazon related. But we saw it in FedEx earnings, and we see it in earnings all over the place. People are still uncertain about the business impact of the tariffs. Remember, they just went into effect in April. A lot of comments about customer conversations and how they're planning to mitigate and move logistics around. So there's part of it. So, for instance, the tariff part of UPS's call, like they basically suspended guidance, and they just talked about the second quarter. Companies usually give people a look into the full year. That's what General Motors did. Other companies have done the same. So they're seeing some cost inflation. Their customers are maybe stepping back or trying to redo logistics. But from a tariff perspective, we're still in the very early innings of the impacts and trying to figure out what businesses are going to do.
So Al, one other thing that happened today, I know this is probably something that you've had your eye on as well. Amazon was in the news today for another reason. Punchbowl News reporting that Amazon was considering displaying the cost of U.S. tariffs next to certain products online. The Trump administration called that a hostile and political act. Ultimately, Amazon saying themselves that this will not be happening, but Al, sometimes when these things leak out, sometimes there's negotiating in the public going on. Does it feel like something like that's happening here, or is that a bit of a stretch?
I think so. I think that's accurate. I think to some extent, Amazon is in some respect at the heart of the tariff. They import a lot of stuff from Asian countries, China, Vietnam, shoes, clothing. A lot of that stuff is made in Asia. And it faces substantial tariffs. Amazon's sort of responsible for paying those tariffs. So instead of raising prices, they came up with this great idea. We'll just, show a tariff line item, and we'll show people that, we haven't changed our prices. We're not making any more money. Administration wasn't happy about that. Stuff like this has been tried before.
Notice that the VIX is now in the 25 range. 25.88, and the S&P 500 is trading at 5,495. Only 5 points away from 5,500 psychological support level. Or barrier, depending on how you want to look at it. If you're a short, it's a barrier. If you're longing the market, you're going to view that as a support level. Basically, we're starting to see the market heal here. It's down right now about 65 points.
Go back to airlines, when fuel prices go up and down, or sometimes from taxes, ticket taxes and things like this, or landing fees at airports. Airports or airlines have tried to say, well, look at your ticket, we're not making much money. Look, it's all airport fees or it's all fuel expense. The bottom line, again, from Amazon perspective, it's trying to figure out how to mitigate costs, any potential cost increases from tariffs, how much it can pass along to the consumer, what will that do to his business. So, it was like an idea they floated, and let's just say the idea landed like a lead balloon.
So you touched on something, and this was exactly what I wanted to ask is, do you foresee if something like this were to be implemented, whether it's Amazon, whether it's another online retailer, putting tariff prices next to items, do you see that changing consumer behavior?
Well, no. Ultimately, price will change consumer behavior, right? So if we go back to like the price of a car, and there were some tariff changes today, but the consensus estimate was like tariffs could increase costs by $5,000 or $10,000. Then there were some changes made today. Tariffs could increase the cost of cars maybe $2,000 to $5,000 now. So not as severe, but it's still a cost increase. So that's what changes consumer behavior, right? So maybe you have to buy used, maybe you wait to buy a new car, maybe you go with a lower end car. Those are sorts of the changes, right? Like you, me, everybody else, we're all just sort of trying, I'm doing it very successfully, mind you, to make our checkbooks balance. And so that's what really changes consumer behavior. The fact that, there's a tariff, go back to that airline example. I'm either going to Chicago because I can afford the ticket. I don't really care if there's the fuel expenses up. I can either afford it or I can't. So price is ultimately what's going to change consumer behavior. And again, we're sort of still in those early innings of how much inflation, price increase, cost increase can be mitigated, and what's going to be the final end game. It's just, we're less than 4 weeks into this sort of tariff idea.
Thanks, Al. We'll see you soon.
Thanks.
All right, let's go back to Bloomberg.
For a quick break. We'll have to look at the what?
I'm going to go back to Bloomberg here.
Moved to a record $35 billion. Orders were up double digits, both year over year and sequentially. And really, if you look at their outlook ex tariffs, it was really better than what they had expected prior. So, and the tariff impact as of now at least appears manageable. So I think the release, should at least help allay some of those concerns over a more pronounced slowdown this year.
Chris, does Caterpillar build their equipment in the U.S.? Is that where the manufacturing is, or how do they do that?
Short answer, they build everywhere.
Okay.
they are a net exporter out of the U.S., but you have to remember, this is a large global manufacturer.
Yeah.
They have manufacturing footprint and supply base that really spans the globe. But if we're thinking about net exports, yes, they export more out of the U.S. than they do import. From a revenue perspective, the U.S. is, almost half the revenue today.
What about for its peers? What does this mean for some of its peers and the trading environment that they were previously in?
Yeah, so at least for some of the domestic U.S.-based manufacturers, I think this is maybe a little bit of a sigh of relief. By no means are we out of the woods yet, but it certainly seems that the tariffs, as of these how they stand right now, are somewhat manageable. CAT's expecting a net cost headwind of about $250 to $350 million next quarter. If you kind of extrapolate that out over the balance of the year, you're talking, maybe somewhere in the 150 basis point headwind to margins. But that may even prove, overly pessimistic because, CAT's still evaluating and implementing some of these mitigation actions. So we could even see that come down from here.
I was kind of surprised, I guess positively, Chris, that their backlog looks pretty darn good. It's not like their customers are canceling orders or anything.
No, and it's a record backlog, right? Yeah. So, we have coverage, if you look at consensus revenue, whether we call it flat or down slightly this year, they've got coverage for, nearly 70% of the year already. So I think that does help provide some kind of buffer. There was a concern out there that do we see this pre-buy, ahead of some of the tariff implementation? And CAT really kind of downplayed that. And in conversations they're having with their dealers and with their customers, they're really not seeing any evidence of that. So yeah, these do seem like, true orders and really a really healthy backlog, which, I think helps support, that flattish type revenue outlook that they're putting out there.
All right, thanks a lot, Chris. Really appreciate it. Chris Cialino, Bloomberg Intelligence Senior U.S. Machinery Analyst. All right, we got a data dump this morning. It was quite a lot. So you're taking a look at the first reading of first quarter GDP coming in about down 0.3% on a quarter-on-quarter basis, but a lot of that was just due to imports. If you actually look through the consumer spending level, that actually held up quite nicely. And then we got the data at 10 o'clock. The personal income and spending were both higher than expected, and that helped equities find a bottom within the market today. We're still down, but we are off the lows. And we didn't even talk about pending home sales, by the way. Did you see that?
Wow, yeah.
Up 6.1%. Doesn't take a lot to move the needle when yields come down pretty quickly. Well, joining us now for his take is Brian Whalen, CIO and Generalist Portfolio Manager at TCW's Fixed Income Group. Hey, Brian, what's your trade right now on the fixed income market with all the data still coming in relatively solid?
Yeah, I mean, the trade is, we like fixed income, we like yields. We've come a long way in the year. There's been a lot of movement in the yield curve, so it kind of depends upon what part you're talking about. But generally, obviously, yields are down a lot more on the front end than the long end. And what that is, just basically the market is saying that, unlike when we started the year, in early January, and I heard Paul talking about how rosy everything was and looked, and it's 90 days later, everything's changed so much. Basically, the market's saying, no, the Fed's going to have to cut, the federal funds rate by about 4 times, by 100 basis points by the end of the year. And even though that seems like we've come a long way, our view is that they're going to have to go even more aggressively. And whether they have to wait a few more meetings and maybe even start in the fall, once they do start to go, they're going to have to be pretty aggressive about it. Because
so when the market opened at 9:30 and it is now 11:15, almost 11:15, 11:13. I stated 1 hour into the session, we should see a little bit of individuals buying in, maybe institutional investors buying in, and then most likely later in the day, you're going to see the market move up even further with institutional investors flowing funds into the S&P 500. So what's interesting here is that the VIX now is trading at 25.66, and it's now above the 5,500 mark. All right. So, like I said, there was going to be a sell-off in the morning. There was going to be a little bit. We had to watch out to see if there was a little bit of an acceleration of that sell-off, which it did happen. It bottomed out at about 5,433, and then it slowly is climbing up. All right. The question is, will Trump, I'm not sure when he speaks, but if, when he does speak, will he say something that is market negative? It's possible. All right. That's an event risk that we don't know about yet, but it's playing out right now. Like I said, it was going to play out after about an hour into the market open. I stated this at the market open, and it's playing out. It's taken a little bit more than, it's almost 2 hours. It took about 2 hours to really see this take fruition. But the point here is that it does seem as though people are taking these points in time where the market's selling off, bad news, and they're buying. So don't be fearful. Don't be fearful. I'm telling you, the market is going to be an all-time high at the end of the year.
Utility. I think I'm going to answer that in two different ways. We've seen part of the pain trade already transpire, which is the question about what the heck was going on with the long end of the yield curve. We had all these kind of weird aggressive trades going on, and there was concerns about foreign buyers either selling or just kind of stepping back from buying America, or turns into sell America. And you saw long end interest rates really jump up quickly, and it didn't really fit the macro narrative. And that was a pain trade. And so that was like an unwind of a lot of leverage. The other pain trade, maybe the pain trade going forward for fixed income, is a continued unwind of the whole idea of just this American exceptionalism that was just creeping into credit markets in the fourth quarter. And when I say credit, the bond markets, you can kind of relate that directly to the equity markets, which is basically this idea we'll have a no landing, we'll have positive growth in the future, inflation's coming down, and the markets were priced exactly for that scenario, both equities and our credit markets, like corporate bonds, high grade and high yield bonds, parts of securitized, basically priced very optimistically. And the pain trade, and we've seen a little bit of it move, but we still have a long way to go. So the pain trade is that if this terrible soft data turns out to be just bad hard data, and we enter kind of a good old-fashioned recession, the pain trade is going to have to be the further correction in credit spreads. That will be the pain trade.
So how much credit risk are you taking these days?
Not much. We were here at TCW. We were having a good time for that week. You were around Liberation Day. We got all that volatility. That was fun. We had the cash and the liquidity ready to go, and so we're going to put a bunch of that to work. However, we're still generally leaning pretty defensively. So when we look at the market, the bond market, just kind of keep it simple. It's like, what? If you can simplify into two categories, you got your kind of riskless, you got your treasury bonds, and then you've got, everything else. You've got corporate bonds and securitized bonds. And generally speaking, right now, you're getting paid a decent yield in a kind of a core plus bond fund of, somewhere around 5%. That's pretty good.
This is what I was saying several videos ago, several episodes ago. Don't buy in the idea that people are selling America. All right. That was the narrative when everything was selling off. Right. They were saying dollars weakening, the treasury prices were going down, and the stock market's going down. Oh my God. Everyone's, bailing out of America. And I said, this is a dislocation, which happens once in a while when you have a very high VIX index in the 50s or higher, which happened. But I also said that the dislocation ends after 2 or 3 days, and it goes back to normal levels with that negative correlation between bond prices and equity prices. So bonds go up in price. Normally, equities go down. All right, in simple terms. All right, if equities go up, bond prices go down. So if bond prices go up, then yields go down. If bond prices go down, yields go up. That's how it works. All right. So when someone's selling off treasuries, then the price goes down and the yields go up. All right. But there is a feedback loop. And what happens is that once the yields get to a certain level, it's actually advantageous to actually buy in and lock in at a higher rate. And that's what people have been doing. While you were listening to all these podcasters saying the sky's falling, get out of America, wrong, wrong, wrong. And then they go, well, the dollar's selling off. Well, if you look at the DXY, which is the dollar index, with a basket of currencies, the dollar needs to weaken because it's been elevated above 100 for 4 years. An average price should be around 98, 97, somewhere in there for the DXY. Now, right now, DXY is trading at 99.35, so it's a little bit elevated. But the dollar needs to weaken. It's been at historical highs in the last 10 years for the last, a 10-year series. The last 4 years of those 10 have been too elevated. So don't buy into this idea that people are bailing out of America. No. What the smart money was doing is that the bad news is moving investors out of the market where the smart money was coming in to buy. And that's exactly what I told you to do. Why? Because you want to be the smart money, not the dumb money. It's playing exactly how I said it was going to play out. Don't bet against America. If you do, you're going to lose out. Trust me. Please go to my store, the-studio-reykjavik.com, and get the great supplements that I offer, like the lozenges and the drops. And it's through purchasing the products on my store that allows me to do these free videos for you. I have thousands of free videos out there. And if you listen to what I have to say, you're going to make money and get healthy. It's a win-win situation. Please go to my store, the-studio-reykjavik.com. Get the blueberry drops, the cherry drops, and the lemon drops. The drops come in 100 per bag, and it's great for the cold season or the allergy season, or even if you're in an environment where the air quality is poor. Right when you have that irritation, take them right away. I also have in stock elderberry zinc. You get 21 in each bag. The lozenges are larger, the drops are a little bit smaller, but both are made from structural nanosilver and both very high quality. Get a few bags for your household and make sure you have some at work too. Have some bags at work, have some at home. You never know when you have that irritation, you need to mitigate the problem. Please go to my store, the-studio-reykjavik.com, buy the products that I offer, use discount 5, you get $5 off. If you spend $150 or more, you do get a free gift until supplies last. And if you've been following me when the market was having a sell-off 4 weeks ago and you bought in, you would have made money. Well, if you listen to some of the other more famous podcasters, all right, they told you to sell. Well, guess what? You would have lost money doing that.
888. Starbucks shares are lower after earnings. Right now, we have got Starbucks trading down as CEO Brian Nichols says the coffee chain is making progress in reviving growth, but flagging sales in the latest quarter under decaying macroeconomic backdrop amped up pressure on the company's new management to deliver. Again, Starbucks right now down by 7%. And Yum brand sales surpassed expectations, driven by the continued growth of its Taco Bell fast food chain. Not a down day for the rest of the market. Yum Brands out of Louisville up now by about 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate that. Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Broker studio. We are streaming live on YouTube. That's it. You go to youtube.com and search Bloomberg Podcast Live, and that's where you'll find us. A lot of companies we're seeing this quarter as they report their earnings, they are pulling their guidance, saying we just don't have enough visibility on our markets, on our business to give guidance. Too much economic uncertainty out there stemming in large part from the, I guess, fluid tariff policies coming out of the Trump White House. That industry also includes the auto industry as well. We saw GM yesterday, and now Stellantis and Mercedes pulled their guidance. Greg Trudell joins us here, Global Autos Editor, Bloomberg News. He's in London joining us via Zoom. Hey, Greg, talk to us about Mercedes and Stellantis. What did they report here?
Yeah, I mean, these companies already were having a pretty, complicated go of it of late, I guess to put it diplomatically, where, Stellantis last year, it was so bad that they ousted their CEO who, was overseeing the company when it became Stellantis, when Fiat Chrysler and PSA Group combined. Mercedes, I think, is really, the story for them has been a combination of serious challenges in Germany with, high costs that we've seen kind of hit the broader automotive space in that country. And, the German car makers are really struggling in China. And so, you sort of add to those complications all of this, tariff mess that they're still trying to kind of get a hold on. And they weren't particularly upbeat about this year, but now they're even less certain. I think the only reason we didn't have a clean sweep, because we also heard from Volkswagen today, was they just left their outlook in place that said, look, we're not yet factoring in tariffs, and so still a lot of question marks in that company's numbers as well.
Is this the worst it's going to get? I know this is an intensely unfair question, but in terms of the news flow cycle, is this the bottom of the bad news?
I think that, this week we did get, some relief, of course, from the administration, right, where they did sort of trumpet this idea. Well, oh, look, we could have maybe stacked tariffs. There was, a story that our own Gabby Coppola did a few weeks back that got a lot of attention because Audi was telling her that, look, we're operating under the assumption that one of our, best-selling vehicles, in fact, our best-selling model in the U.S., we're operating under the assumption that these tariffs stack on one another, and if that's the case, this vehicle isn't sellable. The administration, backed off of that this week, and maybe that's an indication that the sort of worst case scenario is going to be averted. But in terms of disruption and plant adjustment changes, cutting shifts, cutting workers, I think we will see a lot more of that to come, and are only in the early innings here.
Craig, I wonder if we think about the transition to electric vehicles. Does this whole bump in the road, does that maybe stall that conversion at all? Because if I'm a company, I'm not sure I'm going to make some of the investments needed to go to EVs, whether it's a new plant or new distribution. I got to just worry about day to day here with tariffs.
No, it's a great point, and I think it's something that our friends at Bloomberg New Energy Finance at BNEF, just sort of from the jump, just based on sort of the policy stance of this administration back when Trump was president-elect, they immediately took their forecast down, and I think we will likely see further adjustments on the basis that you think about where some of the electric vehicles that are sold in the U.S. market are made. A lot of them are made in Mexico. Mm-hmm. And if the tariffs, on the U.S.'s neighbors in North America stay in place, do these manufacturers stick with these plans, to try and scale up their EV businesses that already are losing them quite a bit of money? Or do they look to make some adjustments and sort of rethink whether or not it makes sense to continue to make those EVs down south of the border? I think it's a very valid question and something that we're very much on high alert for.
All right, Craig, thanks a lot. Craig Trudell, a Bloomberg Global Autos Editor, joining us on Mercedes and Stellantis is scrapping their guidance. Let's stay with earnings for a moment. We were talking earlier about Norwegian Cruise versus Royal Caribbean. Royal Caribbean seemed to imply that demand's holding up. Norwegian, on the other hand, said that they see some softening in their back half of bookings. So let's get some clarity with Jody Laurie, Bloomberg Intelligence credit analyst. Jody, is it the tale of multiple different cruise lines at this point?
So, Alex, I mean, I think that the interesting thing that we're noticing this quarter is the change in tone. And it's not necessarily that the companies are so pessimistic, it's that they're hedging their bets a little bit. They're reminding investors that they have a longer tail when it comes to bookings. They're reminding investors that even if the consumer starts pulling back on travel, which, you know, Hilton commented on some of that yesterday, that they are at least well positioned for 25. And so Norwegian was trying to back out of comments around Europe being a little bit weaker by saying, hey, the rest of the world is doing well. Royal Caribbean was sounding upbeat, optimistic, but I do suspect that there's an element of concern for all these companies.
So what's the best way for you as an analyst, Jody, to get a sense of how demand is going in the future? I know some of these bookings, as you mentioned, are far in advance, but how do you guys think about that?
So there's two things we do, Paul. So the first is we actually do a note every quarter or so around bookings related to Bloomberg second measure data. And by that I mean is that Bloomberg second measure data isn't necessarily a one-for-one on bookings, but you'll see that particularly going into wave season, that you can get a sense of what bookings are doing based on what sales is and volume is for these companies. We have intel into a little bit more into the brand stuff being at Bloomberg, but beyond that, I mean, clients can look at a lot of that data as well, and it's really helpful. I mean, we wrote a note back in the fall that talks to 2025 still being strong for these companies, but aired a little bit of caution to the 2026 season, and that being a function of what we were seeing on second measure. Now, the second piece, which stay tuned because it hopefully will come out in the next few days, we're actually in the process of running a survey related to U.S. travel survey. So related to U.S. travel, particularly on the leisure side. And our past few surveys have actually been very positive for a lot of these companies. We are very interested to see, now that we're running the survey at this moment, what it's going to tell us in comparison to what we saw in November.
Do you get the sense that if we see sort of stalling out in consumer demand or just a little holdback, that it's deferred demand or disappearing demand?
I think it's deferred.
For the cruise lines or for the rest of the industry?
Let's just focus on the cruise lines for a second.
Sure. So for the cruise lines, I mean, you have to think about it in buckets. So you have those dedicated cruisers that are going to cruise hell or high water. We've seen that.
Sure.
Those are the people who are heck or high water. Those are the people who are going to jump in right after COVID. But I mean, I think that for the new to cruisers,
And why are they cut off? Come on. I lost the audio.
We're going. Now, the bigger question, and this is what we're seeing with the hotels, is for the people who haven't necessarily booked, they might be rethinking when they're going to book, what their vacation's going to look like, when are they going to book their airline, right? And I think that's key, is the fact that you have this long tail booking versus a shorter tail booking.
So, Jody, if I'm a cruise ship operator and I sense that my bookings are going to weaken going forward, what do I do?
The boat's like a floating piece of, I don't know, fixed cost. What do I do?
You can just get the ship filled as much as possible, right? So something we learned from COVID for a lot of these companies is that really, in order to be break-even EBITDA, they need somewhere between 30 to 50% capacity for the cruising, right? And that's what a lot of the companies said when they were getting back up to speed. They said, you know, we need 30 to 50% of capacity, and then we're break-even EBITDA. And I think that the key also is that these companies have really pushed the onboard spending, right? The ticket covers a certain amount of the cost of sailing, but if they're going to be sailing either way, they want to fill the ship, because if you fill the ship, then you have more potential for additional spending on board. Even just from the basics of, I've got toothbrush I got to go use the corner store on the ship because it's a captive market. But even beyond that, people, once they're there, they say, well, I'm already here. I might as well partake in the drink package. Or I might as well do an excursion, right? I don't know the next time I'm going to be out. So I think the key will be, getting them on the ship, something that Norwegian talks about, which is different than the other cruise lines and speaks to some of the strategies that they did post-COVID, is not necessarily negotiating on price.
All right, Jody, thank you so much.
Yeah,
appreciate that. As always, Jody Laurie, Senior Credit Analyst, Bloomberg Intelligence.
Airlines tickets are still elevated, so I don't see prices going down. Until you see that, then most likely people are still traveling. So, until you see prices going down, it's going to be I don't think there's a big drop in demand. Now, cruise line ships, maybe because of the cost associated with it is a little bit larger. Please go to my store, the-studio-reykjavik.com, and get this stack, all right? It's the-studio-reykjavik.com. Link is in the description of this video and all my videos. All right, and that stack is the omega-3 and the digestive enzyme. Let's talk about omega-3 first. Omega-3 will help your cardiovascular health. It brings down systemic inflammation and helps to bring down LDL levels and increase your HDL levels. That means that you're improving your lipid profile. When you improve your lipid profile, you're reducing the chances of LDL oxidizing. And by less LDL that's oxidized, less plaque. So take omega-3 every day to help support your cardiovascular health. You should be taking it every day. It's very important. Cardiovascular disease is rampant in the United States. Take charge of your life, do proper exercise, proper diet, proper supplementation, such as taking omega-3. Now, another great supplement that I have that you can take separately or stack this is digestive enzyme complex. All right. Digestive enzyme complex helps you break down your carbohydrates, your lipids, and your proteins. When you get older, your pancreas doesn't function as properly, no matter how fit you are, all right? And your pancreas does lots of things. But one of the things it does is produce enzymes so you can digest your foods. Digestive enzyme complex reduces the load on your pancreas to help you digest foods, such as proteins, lipids, and carbohydrates. So when you are reducing that load, then you're extending the life of your pancreas, right? That's a really important concept. In addition, if you work out, taking digestive enzyme complex will help you refuel that post-workout or pre-workout fueling that you do, break that up and have you absorb it. So you're going to get better absorption of your nutrients and reduce the load on your pancreas. Really important. This digestive enzyme complex also breaks up glycoproteins. That was pretty important in 2020. That was the reason why I was telling you take digestive enzyme complex 5 years ago. And taking digestive enzyme complex, it has bromelain in it, which is fibrinolytic. So it breaks up clots. So take the digestive enzyme complex, get a lot of benefit from this. And by stacking it with omega-3, you're helping your cardiovascular health and you're helping your pancreatic health. So please go to my store, the-studio-reykjavik.com. Use discount 5, get $5 off. I've reduced the prices on my store on a lot of my items. Why? Because I've built up some inventory at a lower price point, and I've been passing on those cost savings to the customer. All right? Why? Because I know that if you stack more of these together on a regular basis, you are going to get healthy. And if you are feeling better and you're getting healthy, you're going to want to continue on that health journey. So get the products and get healthy in 2025. You can do it. It's about proper supplementation. It's about proper diet, proper exercise, filter your water, stop eating processed foods, do the 4 modalities of exercise, cardio, resistance training, balancing, and stretching. All 4 modalities are really important. And another thing that's really important is sleep, proper sleep, so you can recharge your brain, detoxify the central nervous system. Super important. Learn new things. Stay active. Get that positive neuroplasticity. It's a holistic approach. So get the digestive enzyme complex, get the omega-3. You can take them separately, but you can stack them. And like I said, if you stack them, what's going to happen is you're going to get better you're helping with your cardiovascular health because you're bringing down systemic inflammation and helping your lipid profile with the omega-3. And with the digestive enzyme complex, you're being able to absorb your nutrients better and reducing the load on your pancreas. So please go to my store, the-studio-reykjavik.com.
All right, Alex Steele, Paul Sweeney, live from the Bloomberg Interactive Broker Studio. Right now, let's head down to Washington, D.C. to the White House. President Trump is holding a cabinet meeting. Let's listen.
Arizona to see what was happening with the biggest chip company in the world. And he said, Howard, he said, you've never seen anything like it. You want to just describe what you saw?
So they're investing $165 billion in 1,100 acres.
Oh, come
on. They're building the highest tech chip manufacturing, semiconductors, and 4,000 employees. You know, American tradecraft, right? Technicians doing every kind of work. The classic foundation of America is building it. They have 14,000 people. They're expecting 40,000 people to build the rest of their plants and to employ 20,000 people for the rest of the time. And this is all driven.
You never saw a site like that.
And this is all driven by your tariff policies. No chance this be happening without.
It's going to be about 40% of the chip market from that one section. And this is the biggest chip maker. They have 99% of the market. They come from Taiwan. And unlike the CHIP Act, which was done by Biden, where they hand everybody billions of dollars, the thing they don't need is money. They got plenty of money. What they need is an incentive to come in. And the tariffs, they're building because of the tariffs. Without the tariffs, and I like to say they're building because of November 5th, the election and the tariffs. But I'm going to be a little more blunt. They're building because of the tariffs, and November 5th gave them the tariffs. So it's amazing when you look. And these are not companies that go out and say, well, we're going to build, we have to go get our financing. Let's go. Like we would, in New York, everybody would look, you know, you get a building site, then you'd look around for money, you'd look around for financing for 6 months, you'd get your financing. You'd build your building, the market would be good, you'd make money, the market would be bad, it wouldn't be so pretty, you'd have to negotiate, blah, blah, blah. This is different. These people have so much money, they don't know what to do. I asked Howard, did they finance it? No, they do it through cash, and they say that site, and they just started, you know, they just announced it like a month ago, and they've already started. He said, I've never seen a site like it so big. So, you know, you're talking about essentially a $50 billion building. Now, if you build a warehouse for $50 million, that's a big warehouse, Scott. But a $50 billion building, that's a lot. They're building the electric, they've become a utility. And I'm giving them the right to become. They're going to build their own electric, they're going to build their own electricity, which they need tremendous amounts of electricity. They're going to build it themselves. Anything they have left over, they'll hook that into the grid. But the grid is old and they're unreliable and bad things can happen to grids. I said, if you want, you can hook into the grid, but that's a little bit risky. Or you can build your own electricity and become your own utility. And they, I think in all cases, are deciding to do that. So it's very exciting, and we have a lot of things going. We took over on January 20th. These are quarterly reports. We took over on January 20th. The tariffs haven't kicked in yet. I know that, and I don't want this to happen, but I know that China is doing very poorly right now. I just saw some reports coming out, and I don't want that to happen to China. I like the president a lot, President Xi. I don't want it to happen. I was actually saddened to hear it, but they're getting absolutely hammered in China. And, you know, they're sending boats, the biggest boats in the world, carrying cargo like nobody's ever seen before. These are the biggest boats in the world, biggest cargo ships in the world. And they're coming and they're turning around in the Pacific Ocean. They're doing a big U-turn and going back because they don't want the goods, because 145% tariff. But at a certain point, I hope we're going to make a deal with China. We're talking to China, but their factories are closing all over China. because we're not taking their product. We don't want their product unless they're gonna be fair with us. And that includes intellectual property and other things, and a lot of things far beyond just buy, sell. So we'll see what happens, but you know, I was not, because somebody said, well, were you happy? I said, I am not happy. I want China to do well. I want every country to do well, but they have to treat us fairly also. So with that, I think we're gonna maybe go around, and we have some letters where the secretaries and people around the table are making statements about how they're doing and what's happening, and I could start with Pete on the left, because he's my least controversial person in the room. They don't know how good he is. So we'll go around the table and you can hear it. And these are cabinet meetings where they're very open and transparent. And I can guarantee you Biden didn't do this. He didn't do this. Go ahead, Pete.
Oh, Mr. President, I think we're controversial because we're over the target. And like so many things, Mr. President, you inherited a demoralized military. They couldn't recruit. It was perceived this week after what happened in Afghanistan and elsewhere because of Joe Biden. And what we have seen since your election and the inauguration there's been nothing short of a recruiting renaissance. Decades, it hasn't been decades since we've seen this kind of recruiting in the Army, the Navy, the Marine Corps, the Air Force. The men and women of America want to join the United States military led by President Donald Trump.
And the police, by the way.
Absolutely.
And fire. I always mention the fire, but the police and fire, likewise are, I mean, they have waiting lists now, and 6 months ago was a disaster.
Truly historic. You can barely absorb the volume and retention as well. Men and women in the military who don't want to get out now that they have a real commander in chief. We're reinforcing standards. We're going to be fit, not fat in our formations. We welcome back all the COVID, the folks who were forced out because of the COVID mandate. Rip wokeness out of the military, serve DEI, trans, and it's Fort Benning and Fort Bragg again at the DoD. We're rebuilding the military, sir. The Golden Dome is well underway. F-47, reassuring allies and deterring enemies. We found nearly $6 billion in DOGE savings that we're going to reinvest, including $50 billion from the Biden administration focused on things like climate that have nothing to do with lethality and warfighting. And we will have, as you said, sir, the first $1 trillion budget that we plan to spend wisely on behalf of our warfighters. From day one, sir, we've gotten helped get 100% operational control of the border, come alongside DHS and CBP. We've got 11,000 troops on the border who now, because of the new national defense area, sir, can help detain illegals at the border and hand them over to CBP. It used to be if you saw camouflage on the border, they could hold binoculars, and that's it. And now we can detain and assist, and we're going to get 100% operational control of that border. Our NATO allies know they have to step up. The Houthis in the Middle East are feeling the weight of American power, and we're deterring communist China. So because of your leadership, sir, I believe we're making the military great again. Thank you.
Thank you, David. Thank you.
Howard? So I have the pleasure of running the Investment Accelerator, which gets to recruit these companies. And you've never seen anything like the companies committed to building in America. Technology companies have committed over $2.5 trillion to build in America based on your tariffs, right? Sovereign countries, all backing, the whole Middle East and all these countries backing their sovereign wealth funds. They all want to invest in America, and they're coming in, again, over $3 trillion committed. So just those two topics, we're at $5.5 trillion. And then you've got the whole pharma industry knows it's got to come home because America pays for all the drugs in the world. So the pharmaceuticals have to come home, right? Auto's coming home, industrial's coming home. So, you know, we've got to train, and your great Secretary of Labor together and Secretary of Education together, we're going to train the workforce to build America. It's unbelievable. We've got so much, as I travel around, the attention on the Trump Gold Card. I mean, it makes me very popular. Last night, I was out to dinner, and someone came up and said, can I buy 10? And how do I buy 10? And I'm like, it's pretty good. It's $50 billion for dinner. So, you know, I was paying for my dinner. The External Revenue Service, right? You've got the tariffs, and then hundreds and hundreds of billions of dollars coming in to build the External Revenue Service. And our objective, of course, is to replace the Internal Revenue Service and let those outside countries trading with us, let them pay their fair share to America. And then, of course, you got rid of de minimis. And what happened is these foreign countries were sending in little packages for free and knocking out our mom and pop businesses across America. You put an end to it, and you're gonna rebuild the mom and pop and the small business of America. You're their president, and I'm proud to support you.
It's very important. De minimis. It's very, it's a big deal. It's a big scam going on against our country, against really small businesses, and we've ended. We put an end to it.
Mr. President, so CAFE standards, we have the fuel economy standards on vehicles that are going to go to 50 miles per gallon. We are going to rewrite those standards, bring it down to something that's far more reasonable. Elon's fine with that, I hope. But it's going to drive down. It's going to drive down the price of a car in America, making cars more affordable for families. Also, Biden had the social cost of credit when we build infrastructure, roads, and bridges, adding 3 to 5% on infrastructure costs. We've gotten rid of the social cost of carbon, driving down the cost to build roads and bridges across the country. We have what is called follow the law. So we have so many states and municipalities that don't follow the law. So whether it's DEI, discriminating against Americans, whether they give illegals driver's license, or their sanctuary cities or states, if you don't follow the law, if you're giving license to illegals, if you're having DEI policies, we're not going to fund your projects. So you got to certify in your state or in your city to get road and bridge money or rail money that you're actually following the law, which includes executive orders from you, Mr. President. We're cutting back funding. We send research money, Mr. President, to universities to do research on more equitable and sustainable transportation systems. Projects that'll use data and public opinion to inform policy and infrastructure and technology benefiting diverse communities, including women and gender non-conforming people. Just stupid waste of money. We're pulling that money back from universities. We should do good research with research in universities. And then one last thing, air traffic control. We don't have enough air traffic controllers, about 3,000 short. We're working on an agreement with the union, so when controllers become retirement eligible, we're going to cut a deal to try to get them to stay longer, stay in the tower. And then we have a plan to put more butts in seats in Oklahoma City, so we can get more students through the academy and in the towers as well. It's going to take us a while to do that, to train them up, but we're in the process before our 4 years are done. Well before that, we're going to be at full capacity.
Chair, you want to tell them about, I think we have to bring it up. We have very obsolete equipment for air traffic control. It's the equipment, the towers have horrible equipment. It's been renovated for years. The money they spent over the last 4 years, this Buttigieg did a horrible job. They wasted billions and billions of dollars hooking up wire equipment to non-wire equipment to satellite equipment, and a third grade student would know it doesn't work. You can't work. They wasted tens of billions of dollars. But we want to put a brand new air traffic control system in, and you might want to describe that.
You and I have talked about this. It's a state-of-the-art system, envy of the world. And it's, I mean, listen, our system is safe, but you would have hoped someone would have seen that there's a problem with fixed-wing aircraft and helicopters coming in at DCA. Someone should have seen that before we lost almost 70 lives. It's our job to look and see that we have an aging infrastructure around air traffic control. And so if we don't build a brand new system, there's going to be failures and people will lose their lives. And so we need the help of Congress to help fund this, but it's going to be all brand new. And after you build a brand new system, we have the bedrock and the foundation to actually build on top of it. But no one has done this, Mr. President. There's Band-Aid fixes that have happened over the course of 20 years. You can't have a Band-Aid fix. It doesn't get done. It has to be brand new. The technology, it looks like it's out of a 1980s movie. Old computers, floppy disks. We're using copper wires, not fiber. So there are great solutions we have available that, and by the way, everyone's sick of the delayed flights or the canceled flights. We have more capacity in the airspace. And if we build this brand new system, what you'll have is more efficiency in the airspace and it will be safer. So the economy will be stronger. We have more flights and less delays. So I appreciate your support on that, Mr. President.
We know that is very important. you wouldn't have had the helicopter crashing into the plane at 400 feet up, like when it's supposed to be 200 feet. That would have, bells and whistles would have been gone over, and you would have heard the screaming equipment saying, there's a problem coming up in 15 seconds. You gotta do something about it right now. And it would have also sent the word right into the helicopter, because I guess you'll be doing the full report on that, but it was pretty obvious what happened. And there was supposed to be 200 feet, there were 400 feet, and a terrible thing. That wouldn't have happened if we had the right equipment. If we had the right equipment, you would have heard bells and whistles going off, and it would have alerted long before that would have happened, 2 minutes before. They would have had a lot of time. So we have to do this, we have no choice, and we're gonna do it, and we're gonna be very proud of it. They did old equipment in new equipment, and you can't hook in old equipment to new equipment because it's a different, some is satellite and some is ground. And the satellite doesn't work, this bit would know that better than anybody, but you can't hook up a satellite system to a ground wired system. And if you do, you're wasting a lot of money. They spend billions, this is Buttigieg, they spend billions and billions of dollars trying to patch a system together. They had hundreds of different contractors, and the contractors were all fighting with each other. We're gonna have one great big contractor, like the great big beautiful bill, which is going along very well. I guess I like great big beautiful, but we're gonna have one great big beautiful contractor, whether it's maybe Raytheon, maybe IBM, maybe it could be any one of 4 or 5 different groups, but you put one in charge, they're very big, very powerful monetarily, and they give you a guarantee and they hook up everything. They do every single thing. So they're responsible for the digging of the ditches and the fiber and every single element. And it's one system that's hooked in. It's not all these hodgepodge systems that don't work together. It's just a shame. It's basic construction, but it's complex stuff. And there are a few companies that do it unbelievably well, and we're gonna have that. So good job, Sean. I know that's your big project.
Mr. President, no one has done it. It is complex. It's hard to do because as you're building a brand new system, you have planes taking off and landing. So because it's complex, no one has done it, and you've given the directive and the support to make this happen. So
well, ours is going to be an all new system. It's going to all hook up. It's going to be the same tower is going to have the same equipment, and all towers all over the country, all over the world actually, mostly, are going to be hooked in together. And when there's a problem, when planes are too close, you will hear a sound that's very ear-shattering. And I've heard it, and it's amazing. I mean, honestly, it's amazing. It's real genius stuff, and we didn't do that. What we did was just waste money. You could have just thrown it right out the window. What they did in this last 4 years was disgraceful. Whether it was the border or this, name 100 different things. The worst administration ever. Okay, thank you.
Mr. President.
Secretary?
Yeah, Mr. President, thank you. And I think one of the things that I want people to understand about the VA is we're part of the national security interests you have. You've laid the groundwork for that with leadership and making sure that the Secretary of Defense and myself, we take care of veterans on 2 ends. One when they come in and one when they serve and they've earned the benefits that we have. And one of the things is that we're not doing our job on our end, and the recruitment and all goes down on the other end because we have a full spectrum. That's what leadership is about. What we found, speaking the last 4 years, is we found an administration wanted to throw money and people at problems, but they didn't want to put leadership in. They just put money and people at it, and we saw wait time stay the same. We saw issues of suicide, raised death by suicide not change. We saw homelessness issue barely go down. We saw disability claims skyrocket. When you took place, over 250,000 back dislodgers were already bringing down 40,000 so far just in the last couple of months. But we've also put back what you, and I was in Congress when this happened, and I was glad to see the Mission Act is back front and center at the VA. We're actually doing community care. We're actually giving the veteran the choice that they've earned and they deserve, whether they can get their VA care inside our facilities or in the community. It's their choice. It's VA care. We're going to give them the highest quality care wherever they want to go. Also, we're expanding out options for treatments and others for those that are new. We're experimenting and looking at new counseling ideas, all new drug techniques that we can help with PTSD, TBI, the things that are affecting our veterans right now. But also we've taken the leadership to take people and bring them back into work where they're actually communicating. They're back in our offices. We put thousands of people back in. We're processing more claims daily than we were in the last little bit, get 1 million before it's ever happened, and we're actually bringing it down. And I've actually taken our deputy secretary, and he is actually having a strike force now to bring down that disability claim, plus our regular work that we're having done. We've also taken almost $300+ million and taken it out of contracts that we've all heard about so far. We were doing contracts for meeting notes and PowerPoints. If our folks didn't know how to do meeting notes and PowerPoints, go online and learn yourself. We're not going to pay for it anymore. And we took $360 million to put back into community care and also our health records management system that we have. We opened 6 new facilities just in the last little bit for so all the media who wants to talk about how we're hurting healthcare. We just opened 6 new facilities. By the way, thank you. You're welcome. As we go from that, we continue. We've also took $11.6 billion in ceiling values of contracts and terminated that we did not need, resulting in significant cost avoidance for the future, but also still maintaining the ability to take care of our patients and also our disability benefits. We've also gotten unity again. We did away with $14 million in DEI spending. We've ended gender dysphoria treatments. We phased that out. All directed the savings from that go to paralyzed veterans and amputees. We've also continued to work toward, as you in anti-Semitism and also anti-Christian bias that we saw. The biggest thing, though, Mr. President, I want to state, is you told me when you said for me to take the job, you said, take care of my veterans. Well, we've done something in taking that step forward. The veteran is back first at the VA. The VA is not about itself anymore. We're not a self-feeding animal. It's about a service organization that takes care of one of the best we have, and that's our veterans. And that one, Mr. President, we're just getting started.
Thank you, Doug. How are you doing with the suicide rates?
We're getting, it's tough, Mr. President. That's something we're looking at. This is something that we've had $588 million and it's been over the last 4 or 5 years to do prevention, and yet the numbers stay at 17 or 21, wherever we don't have it. We're now opening that back up, taking in nonprofits. We're bringing in others who have things that are actually looking at. I worked with Senator Kennedy and others on the idea that we're opening up the possibility of psychedelic treatment and others to give us an opportunity. We got to research it, make sure it's good, but it's opening up that possibility. And I think, again, veterans are understanding now that we're putting them first. When I go to these hospitals, they're actually coming up saying thanks. We're back in where we need to be, and we're seeing a workforce going. So suicide is going to come out. It's also going to take some transition stuff that your Secretary of Defense has been very helpful on. We got to transfer them out of the military so they come to us better. But we're working on that.
Thank you. Jameson?
Mr. President, it may come as a surprise, but this has been the busiest
Representative Jameson Greer now speaking in the cabinet meeting. This is live from the White House on Bloomberg.
Ever done. If you sold IBM, ExxonMobil, and 5 other companies together, it's peanuts compared to what we're doing. This is the biggest deal ever done financially in the history of the world. And I think we're doing great. You're going to see some big results. Go ahead.
And I'll just say something that Secretary Duffy said in this context, because it's complex, no one has done it. So this is something, a reordering of global trade that hasn't happened since the end of World War II. And it's long overdue because we've seen manufacturing offshore under the old global trading system. When the net result of the global trading system is that all the manufacturing goes to Asia and other places, that's a system you have to replace. That's what you're doing. They said you wouldn't be able to do global tariffs. We did it. They said everyone would retaliate. No one retaliated outside of China. They said no one would come to negotiate. We're talking to dozens of countries. They said no one would have offers. We have dozens of written offers. We have lots of countries in this week. This is like a break for me to come.
With all the countries that want to negotiate, they all want to negotiate. They want to make
Don't zoom in on this. Yeah, this is like a tracker, right? With all these columns of which countries have come in, when we started negotiations, who gave us an offer, are we in technical talks, and when do we expect to have deals come? Those are some weeks out, but we're working very quickly on this.
Thanks, Jim. Thank you, James. You're going to have a lot of fun for the next 3 weeks.
Mr. President, in the last 4 years, the world experienced
National Security Advisor Mike Waltz speaking live with President Trump.
And then we've had 100 days of your leadership with respect, with strength, starting with they'll be all hell to pay if you don't let our people go. Dozens, over 40 Americans have come home under your leadership. Far more terrorists are no longer threatening the homeland under your leadership, pulling all of these agencies together, including the evil individual responsible for the Abbey Gate bombing.
Lost the audio. Sometimes I don't know why Bloomberg It's even, I'm not sure why.
Just everything has been realizing shipyards to cyber to space, and it takes this entire team working together. It's an honor to serve the administration, and I think the world is far better, far safer for it.
Thank you very much. The aggregate is really important. This was a horrible thing that destroyed the image, frankly, of the Biden administration. What happened there was a disgrace. It should have never happened. And Pan is working very much on prosecuting that person, the active person, and he'll do well. I have no doubt about it. Thank you very much, Michael. So the CIA, I don't know, Ratcliffe, I don't know if he's gonna say anything. He's probably the one person here that's not allowed to talk about.
Mr. President, as you know, at your direction, the CIA.
This is John Ratcliffe, the CIA director.
Authorities and continents to successfully advance your national security and foreign policy priorities, to advance peace, to end wars, to take terrorists off the battlefield, and to keep illicit drugs from coming into this country and harming Americans. Unfortunately, as much as I would love to detail your accomplishments in that regard, we can't do so in this crowd. But you and I both know, Mr. President, that you have had a profound positive impact on America's national security posture, and Americans are safer because of your leadership. What I can talk about publicly is, as has been mentioned, the CIA provided the intelligence that led to the apprehension of the Abbey Gate bomber, who is now being prosecuted by our great Attorney General, that suffered as a result of that disastrous Afghanistan withdrawal.
All right, let me, for some reason, there's a issue with the speaker. Go back to small speaker here.
And Ksenia Carolina, who have been wrongfully detained, sending the message that you will forget about no Americans that are being held in other places unfairly and unjustly. On our core mission, and to eliminate the well-documented politicization that has taken place in the intelligence community from bad actors. To focus on our core mission and to make America safe again. Thank you for the opportunity, Mr. President.
Good job. You're doing a great job. Thank you very much. Russell?
We're obviously involved in a number of budget bills that are moving, trying to make sure all of your priorities are in reconciliation.
Director of the Office of Management and Budget, as we go around the table in the cabinet.
On that.
Come on. Yeah. Technical difficulties here, hold on. I gotta reboot. Hold on. You ever have those days that stuff doesn't work? That's the kind of day I'm having today.
I'll be pretty soon to hear from these amazing people. Congratulations to everyone on 100 days.
Susie Wiles speaking at the cabinet meeting with President.
I can tell ever, but it hasn't been busy for busy's sake. The president's promises made to the American people have been kept time and time again. You all have been out there spreading the word with community groups and states and media. It hasn't gone unnoticed, and let's work hard to the next 100 and have equally as much success then. Thank you.
And you're doing a great job, Susan. I think everybody agrees.
Round of applause for the Chief of Staff. Live sound from the White House there, President Trump, of course, in a cabinet meeting marking the start of the next 100 days here, coming off a stemwinder of a speech, a rally last night in Michigan, and now it's on to closing the loop on a series of proposals that the president spent the better part of the first 100 days talking about here. Tax cuts, as you just heard, legislation being marked up this week in the House that will help to craft the reconciliation plan that we've talked about. But of course, a big victory lap last evening when it came to the border and so many other issues. Contraction is the word of the day, though, in Washington. Economic contraction by way of GDP out at 8:30 this morning, the first time we've seen that happen since 2022. And I'll throw another word in there, diffusion, as we hear from the most famous high-tech executive not named Elon Musk. Today in the nation's capital, Jensen Huang is here talking about diffusion, export controls, and what that means for AI technology going forward. That's part of the real conversation that's happening behind the scenes today at the White House. By the way, we're going to bring it back when Treasury Secretary Scott Bessent speaks. He tends to make news and frequently moves the markets when we get his update on the Treasury. I'm joined in studio, though, right now by Mike Shepard, who's with us here, Bloomberg Senior Editor for Technology and Strategic Industries. Mike, it's great to see you. I thought we'd be talking about NVIDIA and diffusion today. Before we get to that, though, I'm just curious, you've been covering this town for a minute, and this individual as well, going back to the first Trump administration. 100 days under the belt now. How's the administration doing in packaging this? Because they're really doing a number and trying to sell the message to the American people at this arbitrary point that we always talk about, 100 days. By the way, lining the table, Gulf of America hats in front of each member of the cabinet. Round of applause. What do you make of the optics?
Well, you know, in a way, arbitrary day dating back to the Roosevelt years, 1933. For this administration, it is not an arbitrary day. From the moment that Donald Trump left office at the end of his first term, they were already thinking about the comeback and then how they might try to course correct at the start of the new administration should he win, and maybe avoid some of the errors that plagued him the first time around, especially in trying to hit the ground running. Back in 2017, we remember some of the tumult internally and how it took them a while to get policies up and running and going. This time has been different. They have gone out the gate very hard on trade and immigration, And even with the tax package that they're trying to propel through, they're trying to move on a faster timetable than they even did back in 2017. Scott Bessent earlier this week outlined a July 4th target date for that. A little optimistic in the view of some lawmakers. We'll leave that there. But overall, they are really, Joe, with this, trying to get to the public this idea that we have made a number of advances in a number of areas. And the president is using the pledges of investments by some big companies. And he talked about it during the speech last night and again during the cabinet meeting today, pledges to invest hundreds of billions of dollars. Now, of course, it's going to take years for those promises to bear fruit, but it's serious money, and he counts it as vindication of his tariff policy that it's bringing companies back to the U.S.
Well, let's talk about Jensen Huang for a moment. He was on Capitol Hill earlier, the Hill and Valley Forum, and speaking as well at the White House today. We actually caught up with him here on Bloomberg, and he's talking about diffusion export controls, asking for a new rule, essentially. Do we expect that the White House will be crafting one soon? They just recently turned the screws further on the types of chips that it can sell in China.
Well, they have, and what Jensen Huang is looking for is a way to maybe ease the caps on other countries not named China. Before leaving office, President Joe Biden left a parting gift for the Trump administration, and it wasn't one necessarily that the new team would not find unwelcome. It was designed to assert American dominance in artificial intelligence and in the chips that power it. And the idea was to set, various levels of access to these advanced chips, mostly made by NVIDIA, as it happens.
Right.
And the idea is that for the closest allies, you get the most access with the least security requirements because you are the most trusted. Think of the UK, think of France, think of those kinds of close allies.
Yeah.
But a number of countries, including Israel and other Middle Eastern nations, including the United Arab Emirates, have not exactly been in that first loop. They're in what's called the second tier. Most countries actually fall in, even though they may have close security relationships with the U.S. And this has been the subject of fierce lobbying by a number of nations and a number of companies, and of course, NVIDIA itself. Jensen Huang calling for some changes to this so it can become a little bit easier to sell some of its best products to allies of the U.S. that so far aren't in that first tier.
We're going to rejoin the cabinet meeting in a moment when Scott Bessent starts speaking, but is that something the president can do on his own to rewrite that rule, or does that require Congress?
It would not require Congress. This was an administrative finding, and actually, the way the Biden team left it, it was really just a framework, and it hadn't been done, and it hadn't taken effect, and the caps were not actually teeth. Where countries had to abide by already certain caps. So there is room for negotiation. There is room to sort this out, but time is running short.
And talking about the tariffs today, by the way. You see this? Interesting to hear from Jensen Huang on tariffs, kind of leaving the door open here in the language that he was using. First, it was about diffusion. He talked about China as well. China is right behind us, he said, and talked about tariffs to say there should always be policy that enables, supports, and accelerates our ability to onshore manufacturing. So does he support this?
He is signaling that he would welcome it. And remember that they don't make their own chips. They rely on Taiwan's semiconductor manufacturing company to produce the bulk of their goods.
These fabs come here.
And he would certainly welcome it. And in fact, they are planning to, with TSMC's expansion in the U.S., and that was something that was touted by Howard Lutnick during the cabinet meeting, that TSMC added another $100 billion to its investment pledge made during the Biden administration. Some of that investment pledge by TSMC is going to be supported by spending.
Well, so far what was published, nothing crazy has happened in the press conference, or the cabinet meeting, if you want to call it that. The cabinet meeting with the press in it. We're still trading just slightly above the 5,500 mark. We're trading at 5,508 for the S&P 500, and VIX is at 25.49. What did surprise me is this accelerated decline in oil. We're at 58.43. That doesn't seem too healthy for the oil market, for the wildcatters, for Saudi Arabia's, government funding, all these things. So I also believe that there was a news announcement today talking about actual inventory drawdown on oil. So we should have seen some more price action on the upside, not the downside. So that's a little odd to me. But overall, not market negative from the cabinet meeting.
Based, and it sounds like he's leaning into Trump.
And he is taking the cues of other executives that are trying to find a way to curry favor with the president, maybe avoid some of the wrath either on tariffs or on export controls, but also to show that, hey, we really are part of what you want in terms of, when you think about the president's agenda, trying to boost manufacturing and add to U.S. employment, that's not something anybody would disagree with in spirit. How he is proposing to get there is causing a lot of consternation, most particularly with the tariffs. And Jensen Huang is trying to find a way to meet the president in the middle on all of this.
We should note NVIDIA shares are trading lower as we have this conversation, down about 2.5%. Supermicro helping with earnings to pull NVIDIA lower in sympathy. Mike Shepard, thank you as always, live from Washington. We love spending time with Shep, and we want to spend some time with the Treasury Secretary right now. Scott Bessent is speaking as President Trump holds his cabinet meeting. This is live on Bloomberg.
And American families are finding their financial footing again. I had a group in today. We are America under your leadership is on the verge of becoming an AI superpower. That our economy had become barbell. We had high tech and finance on one side, natural resources led by energy, which the previous administration tried to kill on the other, and you're filling in between with precision manufacturing that we're going to be bringing back through good trade policies, good tax policies. Under the DOGE at Treasury and the IRS, cost, tech support, and efficiency have increased. We have the IRS revenues are up, and thanks to the events sent over by DOGE, the IT update that began in 1990, which was begun before he was born, is going to be finished during your term. So trade, couldn't make it up. Trade, taxes, and deregulation. The one big beautiful bill under your leadership, Speaker Johnson and leaders that have done a great job, but they have you as the closer on many of their members. And I'll just close by saying economic security is national security. National security is economic security, and it's never been better. We're rebuilding it. And as I said last week at the IMF and World Bank conferences, America first does not mean America alone. Under President Trump, it means leadership.
Awesome. Thank you. Are you busy enough? He's doing a great job. Thank you very much.
Mr. President, thank you, and thanks to the cabinet. So, at the risk of insulting everybody else at the table, I believe that I'm the youngest member sitting at the table. And, it occurred to me that from the time that I was born to the time that Donald J. Trump was inaugurated just a few months ago, we went
Vice President speaking of J.D. Vance live at the table with the cabinet.
Manufacturing superpower to one in which we depend on the People's Republic of China to make the things that we need. We went from the proudest military in the world to one in which we failed to meet our recruiting goals. And we went from one in which bipartisan border policy was the consensus of both Democrats and Republicans to one in which we allowed 20 million people to run roughshod illegally over the countryside, causing crime, causing a stress in the welfare system. And again, that happened over the lifetime of the youngest member of the cabinet. And what has happened in 100 days is that we've started to reverse every single one of those negative trends. But I think what it shows to me is that the president, and you sit in the Oval Office and you see these portraits of presidents past. And let's be honest, most of them have been placeholders. They've been people who have allowed their staff to sign executive orders with an auto pen instead of men of action. And the reason the media attacks this administration as chaotic is because the president is solving the problems the American people set about to solve. He's actually doing the things that he promised that he would do. Mr. President, it's been an honor to be part of it for the past 100 days. And let me just make one other observation, because it's interesting. I've seen the data, I've monitored it, I've looked at it, but the most underreported fact of the first 100 days is that we came in with a massive recruitment shortfall. And in 100 days of Secretary Hegseth and President Trump's leadership, we now have people breaking down the doors to join our military. To the media assembled here, it's a really interesting question. Why has it happened? Completely aside from the fact that I think it's a good thing, or I think that President Trump deserves political credit for it, why did we go from a military where people didn't want to serve to now all of a sudden they do want to serve? That's a story you guys should cover, but compared to that, how much time have you instead focused on the fact that we deported an MS-13 gang member with a valid deportation order? And why is it that the press is so focused on the fake BS rather than what's really going on in the country? I think that what we've shown, sir, is that you can do a lot. You can do a lot in 100 days, but you've also unfortunately revealed that too much of the American media hasn't learned the lessons of the past 40 years. Thank you, sir.
President, your first 100 days has far
We hear now from the Attorney General, Pam Bondi, live on Bloomberg.
This country, ever. Never seen anything like it. Thank you. Your directive to me was very simple: make America safe. And despite that, we've still been defending over 200 civil lawsuits filed against you. On top of everything else, I think I'm representing every one of you in this room. I know you will not be arrested by the U.S. Marshals. Over 200 lawsuits, over 50 injunctions, and now we've got multiple cases in front of the Supreme Court, and we will succeed, and we are doing great in front of the Supreme Court, President. We'll continue on with that. I was at DEA yesterday, and they said to me, you, Donald Trump, have taken the handcuffs off of DEA agents. And as a result of, since you have been in office, President Trump, your DOJ agencies have seized more than 22 million fentanyl pills, 3,400 kilos of fentanyl since you've been here last 100 days, which say, be ready for this media, 258 million lives. Kids are dying every day because they're taking this junk laced with something else they don't know.
Bread and circus. Where are the charges with the Epstein files? What's going on with Epstein? Come on.
People reporting that 651,000 rounds of ammo. That's up 151% from 2024. That's keeping America safe. We've rescinded death penalty. We are now seeking the death penalty on cases. I'm signing death warrants. We are going after terrorism. We are going after arsonists. Whether you're burning Teslas, we've arrested 9 people so far in 7 jurisdictions, no negotiations, 20 years in prison, or you're burning down the governor's mansion in Pennsylvania. We will be there to protect you. And I've been talking to Governor Shapiro, and he greatly appreciated you reaching out as well. ISIS terrorist, we got one in New York, right around the corner. We got an ISIS terrorist in New York. We have an October 7th task force. We just broke up a huge human trafficking ring by the Sinaloa cartel, 1,000 pounds of methamphetamine on our streets, ton of fentanyl, 20,000 Molly pills. Those are the drug of choice among clubs and bars for young kids. They were fake, but you know what they had in them? Fentanyl. That's 20,000 lives saved because of you, right there. We brought back 29 cartel members from Mexico in your direction, and one killed the Kiki Camareno, a DEA agent, in 1985, and many of us got to talk to his widow and his son, who is now a judge. And they started crying. They tried to get that guy back forever, and thanks to so many of you in this room working together, they have justice. They were crying on the phone because of what you did, President Trump. Thank you. We're going after anti-Semitism. We're unleashing everything you told us. No more DEI, no more weaponization We have rescinded, as I said, 200 policies, and I could go on all day long, but we are doing everything in our power to keep America safe at your direction. Thank you, President.
Thank you. Live sound coming from the White House. That was the Attorney General, Pam Bondi, as we've heard from all the secretaries ticking through the agencies here in a conversation that we wanted to bring you live. If we hear more, Elon Musk, by the way, is in the room. He speaks as he did at the past couple of cabinet meetings. We'll bring it back there for a little bit more of this as we kick off. What is the second, 100 days here if the White House decides to look at it that way? The fact is we're talking about a lot of the same issues that we were at the beginning of the first 100 days, including reconciliation and extending the Trump tax cuts. We just talked about that, of course. We got back to one big, beautiful bill. The head of OMB there, Russ Vought, saying it's going very well. And markups do begin this week on Capitol Hill. Lawmakers are back. Speaker met with the president a couple of days ago on this. And the leadership has been talking about it as well. We're looking at, as we heard from Scott Bessent, maybe a July 4 deadline on all of this, which even some now, after we gave up on the Memorial Day idea, some don't think even that may be possible. That's why we turn to Jack Fitzpatrick, Bloomberg government Congress reporter. He's on the Hill right now and wanted to compare notes. It's been a while since we saw Jack, because now it's starting to get real. It's great to see you, Jack. And this is some pretty important stuff that's happening this week. Did we just get an accurate read, though, from the president and from his OMB director about where we really are here in sports?
I'll be honest, I caught some of the OMB director's comments. I would note that if you're doing a compare and contrast overall between the message from the White House and Congress, on one hand, yes, congressional Republicans are absolutely, generally speaking, behind the president on all the things they feel they were elected to do on tax policy, on border and immigration. There are details to work out, and they're talking about the SALT cap, the state and local tax deduction cap. I would point out that overall, despite the shakiness on issues like tariffs and some of the executive orders, some of the, I think you could probably describe the chaotic approach from the White House, the congressional Republicans have moved gradually, slowly, but surely.
We're losing a little bit of steam in the S&P 500, so it's probably going to go below 5,480. Right now it's trading at 5,495. VIX is starting to elevate just a little bit. It's just under 26. I suspect after 2 o'clock we may see a little bit of an inflow into the equity market. So, but nothing really big came out of in my opinion, nothing really big came out of the meeting, the cabinet meeting. So equities is kind of like starting to lose a little bit of steam here.
Where we are, especially if you talk to a New York Republican and then compare notes with one from Kansas.
Yeah, so this is a tense issue. It's not an easy negotiation. If you're asking if we're close on a number, it really depends what you mean by close. The range that we've heard is one, there were discussions about raising it from the current $10,000 level, potentially up to $25,000. But the members are calling the SALT Republicans, the higher tax state Republicans, have pushed for something closer to 30 or 40,000. Now, you could say that even 40,000 compared to 25,000 is fairly close, given that before the election, it wasn't clear if Republicans with this kind of narrow majority could rally around any kind of an agreement. So there is still work to do to put pen to paper and write a tax bill. And that does make the deadlines challenging. However, the fact that they're having that negotiation, there seems to be a productive back and forth, makes it seem like at this point, it's not a backbreaker. It's not the issue that could crumble the bill. It's one of the toughest issues, but they seem to be negotiating productively.
I could only imagine the feeling that Republican leadership in the House must have had when they were listening to Donald Trump last night. Talk so much about Medicaid cuts here, Jack. The president says, no, we're not going to be doing that. In fact, he said Republicans would increase Medicaid spending. Is that actually possible here?
I don't see how it would be possible unless you increase a very small portion of Medicaid funding. The reality still exists that if Republicans stick to the numbers they voted on in their outline for this bill, which require $880 billion of savings from the Energy and Commerce Committee, then there would have to be changes to Medicaid that save money. Now, you can go into politics mode and say that not every policy change that saves money, including stricter work requirements, is a benefit cut. But they do have to find ways to spend less on Medicaid if they stick to that number. Theoretically, because the Senate instructions were so much more lax, they could violate their own plan in the House and it wouldn't start a point of order. But without getting into the wonkiest stuff, Republicans put a pretty specific marker that mathematically would require some sort of cost-saving change from Medicaid.
We're supposed to get next date here in a minute, Jack. What's that going to mean if this lands, say, early summer? Although I will let everyone know, if you didn't hear Scott Bessent, he says IRS receipts are actually on the rise when it comes to revenue. There's a concern that Republicans may not have an opportunity to fold debt limit into reconciliation and will have to deal with this alone to avoid a default, Jack. What would that mean for this whole process?
So far, the plan is still to get it done. The last estimates we had heard, which were before some of the chaos in the markets that could reduce revenue, was that the X date shouldn't come before maybe late July, and it was looking more like August. And because Republicans felt they could get the broader bill done before then, it should be able to be packaged together. It is technically possible to split it off and still do it through reconciliation and not negotiate with Democrats. But yes, the reality of getting into these tough tax negotiations on something that's tied to a debt limit increase puts more pressure on them, and that is really the functional deadline. When we learn more about exactly when that X date deadline is for the debt limit, we'll know where their hard deadline is that really pushes them to wrap all of these disagreements on taxes up.
Yeah, fascinating. Jack, we're going to hear presumably from Elon Musk in a minute. They're going around the table at this cabinet meeting at the White House. We know that he's winding things down. He'll, I guess, be done with his work by the end of May. But the Doge is kind of still hanging out there. We heard from so many lawmakers about codifying savings from Doge in the form of legislation. Will they close the deal on that as part of this process?
That is a long process ahead. The last we've heard is there is supposed to be a proposal to claw back unspent funds that was prompted by conservatives saying, hey, we want to vote on some of these cuts. But the proposal we've heard of so far that could come next week is only $9 billion. Compare that to Doge.gov says they found $160 billion in savings. And compare that to the scope of the lawsuits over held up contracts and grants, the proposals to shut down government offices. The proposals generally from Doge are still up in the air, and if Congress is going to codify them or agencies are going to follow through on those policy changes, there's a lot of work left to be done. It's really still a very hazy picture with a lot of work left to do for conservatives if they want to solidify the Doge savings.
Really great, Jack. Thank you so much. It's always a seminar with Jack Fitzpatrick because he clearly is knee-deep in this stuff, joining us live from Capitol Hill. If you're with us on YouTube, in the crypt here.
All right. I'd like to, I want to plug some products here before we go on to the next segment. Please go to my store, the-studio-reykjavik.com, and get the structural nanosilver gel in the dispenser form or in the tube form. You use it the same way. They're a dual-purpose product. You can use it as a daily skincare. You can use it as an aftershave. If you're not feeling well or someone around you is not feeling well, put it on your hands, around your mouth, around your eyes, around your nose, around your ears, lightly coat your nostrils, stays active for 5.5 hours. They'll help to heal a wound. They'll speed up the time to heal a cut, an abrasion, or a minor burn. So it's a dual-purpose product. Please use this. Make sure you have some at work, have some at home. You never know when you need it. Get the structural nanosilver gels. Use discount 5, and you get $5 off. I also have a great stack here that will help with neural protection and neural health. NAD plus is a supplement that will boost up your NAD plus levels. NAD plus increases your energy, helps to repair your DNA damage, cellular DNA and mitochondrial DNA. And NAD plus will help to protect your neuron. So you should be taking this, make sure you drink it with filtered water. And ubiquinol. Ubiquinol is the most bioavailable form of CoQ10 that you can buy. Most people that take CoQ10, you're taking the wrong type of CoQ10. This is what you want to take, ubiquinol. It's the most bioavailable form of CoQ10. So go to my store, get the ubiquinol. It's an antioxidant. It's going to soak up free radicals. It's going to help with your mitochondrial health. You're going to have more ATP. You're going to have more energy. And it protects neurons. By protecting neurons, you're boosting up your brain function and mental acuity. So please go to my store, the-studio-reykjavik.com, and get the NAD plus and the ubiquinol. It's really important to start protecting your neurons, especially when you start to get 40 years of age or you're older. Start. Also do proper diet, proper exercise. All right? With proper exercise, cardio, you're going to get more brain, you're going to get more blood flow to the brain. And with resistance training, you're activating neurons, a different type of neuron. When you're balancing, you're activating the cerebellum and you're coordinating your body. And when you're doing stretching, you're activating neurons that are at the end of your muscles. So it's really important to do all four modalities and learn new things and get that neuroplasticity, that positive neuroplasticity. So please go to my store, approach this whole concept of health holistically, and get the NAD plus and the ubiquinol. Stack them together for neural protection. Use discount 5 and you get $5 off.
Was it the first 100? I guess we're still in the sort of victory lap here following the big rally last night that we brought you live. Did you get through that whole thing? 89 minutes from Warren, Michigan. We did do it live here, reminded us of the campaign trail. In fact, it went on for so long, I started wondering if we had the election at this point yet. But yes, that was President Trump, not candidate Trump. They talked about a lot of things, from the border to, yes, tariffs to immigration. Christine, I'm speaking right now, and that was quite a remarkable back and forth about Mr. Brago Garcia in the Oval Office interview last night. We put this all together with our political panel. Jeannie is back with us after a late night. Jeannie Shanzano, Democratic analyst, senior democracy fellow at the Center for the Study of the Presidency and Congress. And there's Maura Gillespie, Blue Stack Strategies founder, Republican strategist. Great to see you both here. Jeannie, I don't know if you have recovered, but we're hearing from Donald Trump again today as he tries to follow on the message from last evening. There's a lot of stuff I could ask you about this, but I just wonder the optics around what we're seeing, this cabinet table with what look like MAGA hats. They actually say the Gulf of America on them. J.D. Vance schooling reporters on the stories they should be covering and denigrating presidents past. That was quite a line from J.D. Vance a short time ago. He said, most presidents in the past have been placeholders. Jeannie, is that true?
No, that is not true as a student of the presidency. And I would just say it's reflective of what we saw last night. This is a administration in constant campaign mode. It is where the president feels most comfortable. And, I was just listening in the news break, as I always do, to Charlie Pellet. And he was talking about the fact, or he mentioned the fact that Donald Trump laid blame for the GDP on Joe Biden. We heard an awful lot of blame last night. We're hearing it today. And the question in my mind politically, at what point does he switch into policy-making mode where he takes responsibility? And does this sort of blame to go around get old with voters and the American public? Because there's, not a lot of...
Jeannie, I hate to interrupt you. Hold that thought. Elon Musk just started talking. He's wearing not one, but two MAGA hats in the cabinet room. This is live on Bloomberg.
the American people voted for secure borders, safe cities, and sensible spending. And that's what they've got. Tremendous amount has been accomplished in the first 100 days. As Gordon said, it's more than has been accomplished in any administration before, ever, period. This portends very well for what will happen for the rest of the administration. I think this could be the greatest administration since the dawning of the country.
Well, we all want to thank you for your help. You really have sacrificed a lot. You treated very unfairly.
Well, they do like to burn my cars, which is not great. You know, it's really bad.
But you have been treated unfairly, but the vast majority of people in this country really respect and appreciate you. And this whole room can say that very strongly. You've really been a tremendous help. You opened up a lot of eyes as to what can be done. And we just want to thank you very much. And, you know, you're invited to stay as long as you want. At some point, he wants to get back home to his car. And his... $150 billion. Think of that.
Yeah. 160 now.
Yeah.
It's coming.
They said, oh, it could be more. And a lot of stuff is being worked on. That number could be doubled and even tripled. A lot of things are being worked on that we don't count yet because it's not quite there. But you've done a fantastic job, and we appreciate it very much. You know,
Thank you. It's also an honor to work with your critical cabinet. I should say thank you, everyone. It's great to work with you.
Thank you very much. Thank you.
Mr. President, congratulations on this truly historic first 100 days.
Wait, was that it? That was Elon Musk, President Trump, the cabinet. A round of applause. Did we just see the last of Elon Musk in Washington? Let's get back to our panel. Jeannie Shanzano is here and Maura Gillespie. Maura, was that farewell?
I don't think so. I think Elon has enjoyed being part of this too much to just let that be how he goes out. I don't think this is the last we'll see of Elon Musk, but it was interesting that he chose not to elaborate further and take more of the microphone. I also think it's interesting he's saying to the back, and he really is giving kudos to the cabinet members and trying to be, I guess, more diplomatic in this way. And I think that's pretty interesting. I don't think it's the end of it, but very interesting, very appreciative and grateful for the opportunities. It seems to me more humble Elon Musk than I've seen lately.
Yeah. What do you think about that, Jeannie? The president speaks in the past tense about what a great job. Elon was great, he said. We got the big round of applause there. We're making nice with the cabinet. He says he wants to go back to his cars. I don't know about his family, but does it sound like somebody who's going to be spending a lot of time in Washington here? $160 billion is a far cry from $2 trillion in savings.
Yeah, it became a little more realistic over time. I don't know, Joe, are these two hat thing going to take off now? That seems like a new fashion.
Even his hat has a hat.
His hat has a hat. I love it. I think to Maura's point, I don't think it's the last we see of him in DC. I mean, one thing we can't forget is he put a team in place, and by all accounts from the White House, that team is going to stay in place, whether Elon Musk is there physically or not. And of course, I think most importantly for Republicans in Congress who dare to, step away from the president's agenda, he still has the money as the wealthiest man maybe ever in the world to primary them. And we've seen that not successfully this last time in Wisconsin. So you add all that up and the billions that he is taking from the government to, in terms of the work he is doing for the government, he's very much going to be in our politics, maybe just not in these fascinating cabinet meetings going forward.
They are fascinating, I guess. It's an interesting exercise, Maura, and it directs us. We heard a lot about tax cuts here. We just heard about cost savings by the Doge. We know there's an effort to bring forth some rescissions this week, but Republicans have a lot of work to do on this reconciliation plan. You heard Scott Bessent this week say 4th of July is the new deadline. Speaker Johnson seems to still be hanging on to Memorial Day here, but there are some important meetings going on right now. Not only markups on the committee level, financial services, oversight, transportation infrastructure, and judiciary. Those are the first to go. We also have Mike Johnson sitting down with the SALT Republicans. This is another situation where he needs to thread the needle here, Maura. Can he do it before the 4th of July?
4th of July, I think he has a better chance than if he tries to stick with the May dates. I think that especially members of the New York delegation feel very strongly about SALT, and they have great concerns and warranted concerns about what happens to those programs, especially with people also talking about Medicaid cuts. And I know that's going to be one of the big issues that Chairman Jason Smith and Speaker Johnson are talking to members behind the scenes about and trying to get them on board. There's a lot of conversations that need to happen between now and July 4th. And I do think a lot of assurances need to be given to some members that cuts will be made, that campaign checks will be written, and support needs to be a lock and step team going into this vote.
Where are Democrats, if anywhere, on this, Jeannie? Obviously, the whole point of reconciliation is that Republicans can do this on their own. You don't have to clear the filibuster in the Senate, but the debt ceiling is hanging out there, and a lot of people think Democrats will need to play a role in avoiding a default. Will they?
I think they certainly could ask for things that they want in exchange for their support, things like protection of Medicare, Medicaid, Social Security, entitlements. But how do Republicans now, with good faith, give them that? So I'm not sure what kind of role they could offer here. The reality is Republicans own Washington, they own Congress, this is all on them. And you and Maura were just talking about the SALT caucus, we've got the Medicaid defenders, we've got the deficit, there's a whole 5 or 6 groups of Republicans with asks. And they don't seem this time around to be willing to go along, particularly with Mike Johnson on his request to just support this bill to the next. They can do it, are going to be fascinating as we focus on what Republicans are able to do, because still it's hard to find a smart thinking person who could tell you how these numbers add up and they can get everything they're asking for.
I just want to ask you about the interview in the Oval Office yesterday. Donald Trump wrapped things on stage in Michigan just in time for the interview with Terry Moran to run on ABC News. They sat down in the Oval right in front of the president's desk, touched on a bunch of issues here, and things just ground to a halt when they got to the case of Mr. Abrego Garcia. This is the man who was wrongfully deported to El Salvador, and there are questions about whether he is in fact a gang member, whether he's a criminal at all. Listen to this back and forth between the president and Terry Moran.
The man that you picked out, he said he wasn't a member of a gang. And then they looked, and on his knuckles, he had MS-13. Wait a minute. He had MS-13 on his knuckles.
He had some tattoos that are interpreted that way, but let's move on.
Wait a minute. Hey, Terry.
He did not have the letter MS-13.
It says MS-13.
Okay, that was Photoshop.
That was Photoshop. Terry, he had that.
Don't do that, Terry. The thing is, it was, well, I don't know if they used Photoshop, but those numbers, MS-13, if you look at the picture, Jeannie, they kind of put them, I won't try to explain this. A lot of people are wondering why the president actually thought those were actual characters tattooed on his hand. What did you make of his demeanor in this interview, Jeannie? As we just heard J.D. Vance telling reporters the stories that they should cover and the way he handled himself with this reporter.
Yeah, we looked at that picture with some young people, and the idea that any of us older folks could believe that that wasn't Photoshop, they found very, very comical, whether they were conservative or liberal, because it was so obviously Photoshopped. And I think Donald Trump did what he usually does. In addition to, telling Terry Moran he didn't know who he was, and he's given him such a great opportunity to chat, and boy, Terry, don't do that. He said the quiet part out loud, which is, I can pick up the phone. I can get this guy released. After all, we have given money to El Salvador to hold these people, but I simply don't want to, which means he is in non-compliance with a U.S. Supreme Court decision, 9-0.
Maura, I'd love for you to weigh in on this in our remaining couple of moments. Did the president show his cards on this issue here? Forget the way he interacted with Terry Moran, but he did make the point. Yeah, I could pick up the phone and bring him home now. What does that do to the court case?
Unfortunately, Donald Trump's demeanor, sure, that is what it is. It's not necessarily a surprise. But this tripling down and then admitting that he could fix it in a minute if he wanted to really does, kind of hurt the messaging on the success that the Border Patrol and the increased resources to make sure that we keep our borders more safe. And you've seen that in the beginning, his poll numbers on that issue have been high, but this issue particularly, where it goes too far and people are concerned now, where is the line? And if it was done wrong and it was admittedly done wrong, but then you don't correct it, what's to stop that from escalating to American citizens? And again, you can go down that rabbit hole and see where it might lead people to be fearful. And again, it takes away from the message about the successes that the presidency and the Trump White House has had in making our borders more safe and stopping illegal immigration. So unfortunately, he did some damage last night, whether he thinks so or not, and whether the White House thinks so or not, because they're going to continue to trickle down on this. But he could have implicated himself with the court.
Got a great panel today. Maura Gillespie and Jeannie Shanzano will have a lot more in our second hour here on Balance of Power. Many thanks to you both for the insights already. That cabinet meeting is still going. Look at it. Linda McMahon is just getting the things now, the education secretary. If President Trump starts talking again, maybe we'll bring it back into the White House. So stay with us. You never know what's going to happen around here on Balance of Power, only on Bloomberg.
Please go to my store, the-studio-reykjavik.com, and get the C60. The C60 is a very potent antioxidant that soaks up free radicals. By soaking up free radicals in your cells, you're improving your mitochondria. You'll produce more ATP, so you'll have more energy. The cell will have less stress. And the more often you do this, if you do it on a regular basis, what happens is it improves your tissues and your organ systems, including your immune system and your endocrine system and your glands and your brain. How does it help with your brain? Well, by taking C60, you're reducing the stress on the neuron. You're soaking up free radicals. So you're reducing that damage to the neuron, especially when you get older. And you're improving the mitochondrial health of the neuron. You need lots of healthy mitochondria in the neuron to have the ATP, to be able to produce the neurotransmitters, so you can have those neurotransmitters fire off and have that positive neuroplasticity. The better your neuroplasticity is, the faster you think, the better you will remember and consolidate memory. You won't have the brain fog, you'll sleep better, and you'll be able to concentrate, and you'll just have more vitality. So please go to my store and get the C60. You can get it in avocado oil, MCT coconut oil, or extra virgin olive oil. That's extra virgin olive oil, MCT coconut oil, or avocado oil. 3 different types. It has to be in an oil. It has to be in a lipid. C60 is soluble in a lipid, and that will allow you to absorb it. All right. Take it on an empty stomach. A teaspoon a day is the best way to absorb it. If you're going to be working out, take it before your workout, and it'll soak up the free radicals that you're generating during your workout, and you'll recover quicker. So take the C60. It is a very potent antioxidant, and it's part of the protocol that I have, what I call the core. The first pillar of the core is taking max 35 or max 14 or cleanse. That will boost your immune system. C60 to soak up those free radicals. Turmeric, ashwagandha, and lignans to boost up your immune system and help with your cardiovascular system. And Boomer Boost. Boomer Boost will boost up your energy levels and rev up your metabolism. You'll lose weight and you'll have lots of energy. And that way you're going to have that stacking synergy to slow down the aging process and improve your organ systems. So please go to my store, the-studio-reykjavik.com, get the C60. Use discount 5, you get $5 off. If you purchase $150 or more, you get a free gift until supplies last. I have it in a 2 ounce, a 4 ounce, or an 8 ounce configuration. It is cheaper per ounce to buy the higher ounce configuration. So please go to my store, the-studio-reykjavik.com, get the C60, take a teaspoon a day every day, and you'll slow down the aging process. I've been taking C60 since 2016, every day. So please go to my store, the-studio-reykjavik.com.
Live from Washington, D.C.
The economy contracts for the first time in 3 years. Welcome to the Wednesday edition of Balance of Power as President Trump starts his next 100 days with an economic downturn and a new drive to extend the Trump tax cuts. I'm Joe Matthew alongside Kaylee Lyons in Washington. Thanks for being with us here on the fastest show in politics. Kaylee, the president blaming Joe Biden for the data.
Yeah, he says it's still Joe Biden's economy at this point. Joe Biden's stock market as well, even though earlier in the year, mid-February, when we were at record highs in the S&P 500, he was saying that was because of his election victory. So clearly the spin is active today. As the White House also is saying that the surge in imports shows that countries want to sell to the U.S., not necessarily that its buyers panicked about tariffs.
That's right. You know, they're still going around the cabinet room, a cabinet meeting that began in the last hour. We brought you a good chunk of it here on Bloomberg. Might resolve in some Q&A with the president. If that happens, we'll bring you in the room for it. We did hear from Elon Musk. Got a big round of applause, had nice things to say about the cabinet. A lot of past tense.
Yeah, we listened to that part. So please go to my store, the-studio-reykjavik.com, and get the collagen. Collagen is a great way to improve your joints, build muscle, help with your skin, your hair, your nails. You should be taking it every day. All right, there's a big scooper here. You take it with soft foods once a day or with filtered water. Some people make a smoothie. I put it in soft foods like hummus. Take it every day, and what you'll notice is that you're improving your skin. You'll notice that your hair is improved, your nails are improved, and it will help with your joints and your joint health. So you should be doing some resistance training. Now, in terms of the skincare, taking collagen with this structural nanosilver gel and vitamin C help. And how does that work? So collagen and vitamin C will cross-link when you drink filtered water. So you should drink about 64 ounces, 32 to 64 ounces, depending on if you can drink enough of that water. But some people can't drink 64 ounces of water. It's too much for them. But it's best if you can drink about 64 ounces of water throughout the day. And that water, that vitamin C and the collagen will cross-link it and improve the dermal layer. Now, you can also take it with C60 and resveratrol. And C60 and resveratrol will improve the basal layer where your new cells, your new skin cells are forming. So if you improve the health of the basal layer by taking the C60 and resveratrol, improve the middle layer by taking the vitamin C, the collagen, and then the filtered water, and the topical layer with the structural nanosilver gel, that's a great way to improve your skin as a daily skin routine. So you can purchase the product separately if you want, or you can get the skincare box, the beginner's box, or the advanced box. The beginner's box has the collagen, the vitamin C, and the structural nanosilver gel. And the advanced box has everything in the beginner's box, but you get two other supplements. That's the C60 and the resveratrol. You do that every day, and you're going to improve your skin, but you're going to also improve your other systems too. As I've been stating, when you take these different supplements, you get dual purpose out of it. So get the collagen, help with your skin, but also help with your joint health and your musculature. Please go to my store, the-studio-reykjavik.com, and get this collagen. You get a month's supply, big scooper. Take it once a day.
The first quarter, but to hear President Trump describe it, he says that's just the hangover or the overhang from President Joe Biden. He actually said at the beginning of his cabinet meeting that's still ongoing at the White House, Joe, that he deserves a pass when it comes to this data.
Overhang, technical term for economists, I think, right? We will go back into that cabinet meeting if the president starts to take some questions. Now, enter Peter Navarro, of course, economic advisor and tariff evangelist, speaking to reporters in the White House driveway this morning. This was the best negative print for GDP I've ever seen. And that's where we have to start with Michael McKee, Bloomberg international economics and policy correspondent. He's with us in New York as we wait to hear from President Trump. Michael, take us to school here. Peter Navarro talked about an extraordinary surge of imports, the world trying to sell to the U.S. Does that front running of imports guarantee a downturn in the second half of the year? Is there a silver lining here or not?
I wouldn't say there's a silver lining. We don't have any guarantees at all. Matt Miller, our morning anchor here, insulted me today by saying I was sounding like Peter Navarro, because I said if I were the president, I would try to turn the attention away from the negative 0.3 headline GDP number and turn it towards the 2.3% gain in real final private sales to domestic buyers, because what you have there is a sign of what we were really spending, businesses and people, consumers. And that's not a terrible number, but it too, like everything else, was influenced by tariffs. We thought we might get through this quarter without a big tariff data impact, but this whole GDP number is shot through with tariff implications. And so much of it is the effort by companies, especially to get ahead of tariffs and order things early. We saw this huge jump in imports that probably, I think they said the biggest ever. And then that fed into inventories, and the business spending was up 9.8%, but a lot of that was because they were ordering all this stuff. So it's really hard to say that this is a great report or the best one you've ever seen, but there are political ways maybe to spin it a little better.
Well, and when we're considering the data we still have yet to get this week, Mike, with the payrolls report coming up on Friday for the month of April, and I wonder whether or not we're still counting April as being Biden's economy or Trump's economy now that he's in his second 100 days in office as we speak. How will all of that data collectively factor into a Federal Reserve decision that's coming next week?
It won't. There's no... Today, basically, because the GDP numbers showed a contraction in growth overall and a rise in the quarterly PCE numbers, somebody said this morning, well, this makes the Fed's job harder. And I said, no, it makes it easier because it just reinforces the idea that they don't want to do anything right now. You've got contradictory numbers or contradictory directions on the Fed's two mandates in that GDP report. And we don't know what's going to go on from here because remember, this quarter ended in March. And in March, we had the aluminum and steel tariffs, but little else other than the standard Chinese stuff. And so we don't know what the impact is going to be of all the tariffs that got put on, got taken off, etc. during the month of April. It certainly has affected consumers' thinking, but has it affected their actions? And that's the question ahead. So we're going to have to be watching all this data very carefully, and the Fed's just going to sit back and do that. You mentioned the jobs report. Tomorrow, we get the ISM manufacturing report. And while that is considered soft data, it could be very important to the markets because if we see the same kind of nationwide response that we've seen in some of the regional numbers, we're going to see a big drop in manufacturing activity, new orders, that sort of thing. And that's also not going to play well with Wall Street.
All right, Bloomberg's Mike McKee, our international economics and policy correspondent. Thank you so much, breaking down the data we have in hand and the data still to come. Thank you very much indeed. As we're still keeping an eye on the cabinet room at the White House, we're hearing right now from the Interior Secretary Doug Burgum. The only remaining cabinet secretary left to speak as they go all the way around the table is the Secretary of State, Marco Rubio. And again, when it gets back to President Trump, if he decides to take questions from reporters, we will be bringing that to you. But first, we want to get more insight on where the economy is right now and whether or not the president deserves credit or blame for that, and turn to Douglas Holt-Eakin. He's president of the American Action Forum and former director of the Congressional Budget Office. There's a lot Congress-wise we want to talk to you about, Douglas, but if we could first begin with the deterioration we've seen in GDP, the suggestion from the president that it's Joe Biden who shoulders the blame for this. Does that excuse work today? And if it does, how much longer will it?
well, if it works today, it's not going to work beginning tomorrow. I'd say this is really the end of the period when you could point backwards on the data. The president can't be responsible for the January data, but the quarter as a whole, it really is in the Trump administration. It's a noticeable weakening in the economy. I think if you toss out all the trade-related factors that Mike McKee went through, you've got an underlying growth rate of something like 1.5, down from 2.5 in the fourth quarter, 2.4. That's troubling because it's when we turn the corner into April that we see the impact of Liberation Day and the array of tariffs that went on and off. We'll get our first impact read on that in the official data on Friday, but we saw the ADP employment report today, and that came in very soft, 62,000 jobs, some weakness in places you wouldn't expect, education and health. So I think Friday's jobs report is going to be a very important read on the economy.
It'll tell us a lot more as we hear further references to the R word here and some suggesting we may already be in a recession. Douglas, it's great to have you back. We heard from Peter Navarro this morning, as you might have heard me mention. This was the best negative print for GDP I've ever seen. You feel that way too?
Well, every now and then I yell at the TV. No, I don't feel that way at all. This was a bad report. I don't think there's any way you can sugarcoat it. Among the things that were really troubling was the very soft household spending, particularly on goods, durable goods. You would have thought that people, and we heard a lot of anecdotes about this, you would have thought that people would be buying ahead of the tariffs to get those things in their houses before they hit. That's a really weak number. And so I think if you look at that and the fact that outside of what's clearly a tariff-related surge in equipment investment, the core of the economy really didn't look good in the first quarter. And as Mike McKee mentioned, the PCE core price index was up to 3.5%. That's a bad combination. Rising inflation, softening economy. Nobody should think this is a good print.
Well, so then it becomes a question of any kind of correction or what could pull us out from the downward trajectory, Douglas. And the White House would argue, as we heard evidence in the cabinet meeting earlier, that the tax cuts coming down the pipe, the renewal of the 2017 cuts, the others that Trump would like to implement, are going to be somewhat of a solve here. And I wonder, assuming that the president can get everything he wants on tax policy, which still remains a question as Congress works on that, to what extent you do expect it'll be some kind of offsetting factor?
Well, let's think about what's in the bill. I mean, number one, it's an extension of current tax law. I don't think anyone expects the sunset, so we're not going to get any juice out of that. That's just more of the same. There are the business expenses on R&D and equipment investment, interest deductibility. Those are modestly positive, but I don't think they're earth-shaking. And then there are the array of campaign promises: no tax on tips, no tax on overtime, salt cap, the things that the president wants to have at least some modest bow towards fulfill his campaign promises. Those aren't earth changers either. So from an economic point of view, the tax bill is not a big boost to growth. I mean, it's something we got in 2017. It's already in the economy. So I think the real issue here is, does the president come to reality on what he's done with the tariff policy? If you think having a sunset and a $425 billion tax increase next year is a bad idea, that's what he did on Liberation Day. And so I think some rethinking of the burden that he has placed on American businesses and consumers is really in order. And it's hitting the small businesses the hardest. They're the ones who are cash constrained. They're the ones who are going to pull back on their CapEx the quickest. And I'm concerned about that outlook.
Yeah, interesting. We can talk about the baseline until we're...
Please go to my store, the-studio-reykjavik.com, and get the D3. This is a great supplement that will help to absorb calcium. It's also a cofactor for gene expression, and it helps to get rid of cells that need to go into apoptosis, especially if they're infected. So D3, very important to add to your supplementation. Take it also with magnesium to get the highest efficacy. K2, MK7 molecule, also helps to absorb calcium. You stack it with D3, and this will help with your cardiovascular health. But also, if you do resistance training and take calcium supplements or drink milk, you're going to help with bone density. It's a dual purpose stack, really important. Helps with supporting your bone health and your cardiovascular health. And nattokinase, you can take it separately or you can take it in the stack. It's fibrinolytic, so it breaks up clots, and it helps to bring down LDL levels and increase your HDL levels. That means that it's improving your cardiovascular health. Less LDL that's oxidized, less oxidized LDL means less plaque. It's that simple. So stack this for cardiovascular health. It's a great stack. K2, D3, nattokinase. For the bone density, take the K2 and the D3. Do the resistance training. Please go to my store, the-studio-reykjavik.com.
Hard to get the yes in the Senate, and even harder to get the two houses to agree on a single piece of legislation. That might not happen before an August tax date, in which case they'll have to break out and do the debt limit by itself. We saw the bond market react on in the week after Liberation Day. We saw the long end of the yield curve go up, and this is not the time to have some sort of misstep in raising the debt limit. They need to do it in a timely fashion, not scare international capital markets, secure the funding future of the Treasury, and that may not be able to happen on the timetable of reconciliation. So there should be a plan B out there somewhere.
Plan B out there. You must get that tinge. Your antennas go up.
All right, tax bill July 4th, hopefully. So market's probably going to rally even earlier than we thought if that gets passed. All right, let's talk about Boomer Boost. That's the last pillar to the core protocol. Boomer Boost will boost up your energy levels and your metabolism. You're going to lose weight. It targets your cardiovascular health. It also targets your brain function, your musculature. You're going to get lots of energy. It has 68 nutrients. It's a very comprehensive compound. This is a powder. You take it once a day, either for breakfast or for lunch, once a day, all right? Take it for breakfast or for lunch, not both. If you work out, take it for your pre or your post fuel source to recover and to build your strength in your sport. But if you're not an athlete, you can definitely benefit from this. You will notice the benefits from this within 72 hours. So you take 1 scooper a day, mix it with soft foods is how I take it. You can mix it with filtered water. Some people mix it with milk. Some other people put it in a smoothie. It's up to you. But take it every day. And what's going to happen is your energy levels are going to go up. You're going to lose weight. You're going to start controlling your A1C levels, your blood glucose levels. You're going to have more mental acuity. You won't have that brain fog. You'll be able to sleep better. So there's lots of benefits from taking Boomer Boost. And you'll have more vitality. What's going to happen is you're just going to want to move around more. You just are just more energetic. So take Boomer Boost every day, once a day. Now you can take it with the Boomer Boost or take it separately. But I have 2 types of barley, heirloom barley or gladiator barley. Heirloom barley helps with detoxifying your body, bringing down inflammation. That's important for your cardiovascular health and your immune system, and soaks up free radicals through superoxide dismutase. So superoxide dismutase is a great way to soak up free radicals. The different vectors that you use to soak up free radicals, the better, like glutathione, superoxide dismutase, C60. So soak up those free radicals and you'll slow down the aging process. Now, gladiator barley has all the benefits of heirloom barley, but you get one added benefit. It helps with building strength. So take the gladiator barley, you get a full scoop. You can take a full scoop or a half a scoop, mix it with soft foods, do resistance training, and you're going to gain muscle. You're going to detoxify your body. You're going to bring down inflammation. That means you're going to recover quicker during your workout. And it's going to soak up those free radicals through superoxide dismutase. So take the heirloom barley or the gladiator barley. And like I said, you can get that added benefit by stacking it. And what will happen is that you're going to be not only targeting your cardiovascular health, your energy levels, and your brain health, but you're also detoxifying your body, bringing down inflammation, and soaking up free radicals. And if you work out with the Gladiator Barley and the Boomer Boost, what you're going to notice is that your strength gains and your just overall fitness is going to improve more quickly. It stacks really well with Myotrol because Myotrol also helps with building muscle. It helps with gene expression. This is a great stack to control diabetes. So take this, take charge of your life, get healthy, lose weight safely, and with proper diet, proper exercise, proper sleep, learn new things, approach this in a holistic way, filter your water, stay away from processed foods, and take the right supplementation, you're going to fare pretty good, and you're going to slow down the aging process and let your body heal.
Language that we're hearing from the president.
Well, I think that he's going to try to point to the tax bill as the sort of economic rescue plan. This week report. I just don't think the substance is as outstanding as the rhetoric is. I mean, to not do it is a disaster. So let's be clear, they have to do the extension, but it's not going to do much beyond, as I said, current policy. So it's not going to do much for the economy. So I think the right thing is to get it done in as quick a fashion as possible, and that will require, I think, a little more leadership out of the White House. Also, feature the deregulation, which all the pieces are in place to do a lot of deregulation as he did in his first time in office, and so I would feature that, and I would negotiate however many faux trade deals you need to get rid of the reciprocal tariffs. That's just too much and dangerous, and then start thinking hard about what to do with the 10% universal tariff. That to me is the one he has a hard time walking away from. It's his idea. He's not going to admit he made a mistake. There's no one to negotiate with. And so, there may be a need for Congress to rescue him from himself and have them take away the authority to do that. I just think if the economy really weakens in the second quarter, you're going to see Congress start to think real hard about doing that.
All right, Douglas, it's always great to spend some time with you. Douglas Holtz-Eakin with his view from the American Action Forum. He's the former director of the CBO and knows what he speaks. I'm Joe Matthew in Washington alongside Kaylee Lyons. We're going to bring it back to the White House right now. President Trump just now resolving this cabinet meeting to take some questions from reporters. This is live on Bloomberg TV and radio.
You know who else I'll never tell you, Judge? Because the conduct of our foreign policy belongs to the President of the United States and the executive branch, not some judge. So we will conduct foreign policy appropriately if we need to, but I'll never discuss it. I know when I'll ever make this discussing, that's how foreign policy works.
Mr. President, yesterday you told ABC News, Mr. President, you told ABC News yesterday that you could get Aurelio Garcia back if you wanted to. Do you think President Bukele would turn you down if you made that request?
I really don't know. I know that he's been a great friend of our country. He's gotten a lot less money than this would take from us if we were to build these jails and do what he's doing. And they run a very professional operation. I don't know. I haven't spoken to him. I really leave that to the lawyers, and I take my advice from Pam and everybody that is very much involved. They know the laws, and we follow the laws exactly.
Transition, sir. You frequently took credit for the stock market highs. You said it was a reflection of how well you were doing in the polls, and then after you were elected, you said the stock market highs were a reflection of how well the transition is going and the American people's confidence in your incoming administration. Now, the stock market's not doing so well, and you're saying that's the Biden stock market, yet you are the president. Can you explain that?
Yeah, I'm not taking credit or discredit for the stock market. I'm just saying that we inherited a mess, both at the borders. You can look at every single one of the people here, and no matter who it is, they're doing better, and they're far superior to what took place 4 years before us. When you look at prisoners being allowed to come into our country at will, people from mental institutions, gang members, drug dealers, when you look at that, what they've done to our country, and also having to do with finance, look at what happened with inflation. We had the worst inflation probably in the history of our country. They say 48 years, but I would say in the history of our country, it ate away at people. And even though you saw a stock market going up somewhat, because in my case, I had the biggest stock market increase, 88% in the last term, in my last term. But I don't view the stock market as the end of it. It's an indicator. But what the stock market really tells you, and when you look at the stock market in this case, is it says how bad a situation we inherited. This was a quarter that we looked at today. And we took all of us together. We came in on January 20th. So this is Biden. And you can even say the next quarter is sort of Biden because it doesn't just happen on a daily or an hourly basis. But we're turning it around. It's a big ship to turn around. And we're going to have the greatest country financially in the history of the world, I believe. I think we're going to do things and we have to do it. We reset the table. We were being ripped off by every single country without exception. I'd have to really think hard for who hasn't taken advantage. And I don't even blame those countries. I blame the person that was sitting right here where I am for allowing it to happen, where our country was ripped off on trade, hundreds of billions of dollars. And now we're doing better than we've done in a long time. You know, we were losing $4 to $5 to even $6 billion a day on trade with Biden. And now we have it down to a very manageable number, and the tariffs, for the most part, haven't even kicked in yet. So that's the way stock markets to me are an indication, but the big indication is what's happening, and the people around the table know what's happening.
The Ukraine minerals deal is set to be signed in 24 hours or so. Is it true that the Ukraine minerals deal is about to be signed in the next 24 hours or so? There's some reports saying that. And if it's true, has the deal changed at all from the last time you heard about it?
Well, let's get to answer the question because he is responsible for it.
Yeah, our side is ready to sign. Ukrainians decided last night to make some last minute changes. We're sure that they will reconsider that, and we are ready to sign this afternoon if they are.
Can you talk about those last minute changes? What was removed or put in its place?
Nothing's been removed. It's the same agreement that we agreed to on the weekend. No changes on our side.
Just to put that in perspective, when I came here, I said, how much money have we given to Ukraine? The real number is about $350 billion. It's unthinkable. And we had no security, we had no nothing. We were just pouring money there, unsecured money, putting it in banks, and anybody could have taken it out. Anybody over there was their decision. I've never seen anything like it. Europe, on the other hand, which is obviously that whole situation is much more important to Europe because we have an ocean in between. But Europe gave about $100 billion. It's a lot of money. It's a big sacrifice they made also. But they gave much less than we did. And their money is secured, totally secured, by deposits in banks. The deposits are largely Russian deposits. That's what Europe did, but their money is secured. So they gave $100 billion totally secured. We gave money like it's throwing it out the window. And it was done by Biden, and this is Biden's war. This isn't Trump's war. I'm trying to get out. And more than the money, they're losing about 5,000 young Russian and Ukrainian soldiers a week, mostly. There's some people also being killed in towns where missiles should not have been shot, small cities and towns. But we are trying to save the lives of about 5,000 young, mostly soldiers, that are losing their lives a week. I see satellite photos, probably off one of his satellites, come to think of it. But I see satellite photos every week of fields with arms and heads and legs scattered all over. It's a violent, horrible situation. And more important than the money, I want to save the lives of people from other countries that are dying so stupidly, so needlessly, and they're dying. But I said, what are we doing? How did we get into this war? Would have never happened if I were president. Everybody knows, and it didn't happen for 4 years. Wasn't even thought of. I discussed it with President Putin a lot. It was the apple of his eye, but there was no way he was going to do anything. Zero chance. And I said, we feel foolish. The Europeans are putting up money, it's totally secure. They get the money back. We're putting up much more money. We have absolutely nothing. And I didn't want to make a complicated deal. I didn't want to make a deal that couldn't be made because Ukraine doesn't have very much money, and yet they're going through a very bad period of time. It's been brutal. But I felt very foolish being a judge. So I said, well, we want something for our efforts beyond what you would think would be acceptable. And we said rare earth, and very good rare earth. As you know, we're looking for rare earth all the time. Rare earth is called rare for a reason. And they have a lot, and we made a deal where our money is secure, where we can start digging and doing what we have to do. It's also good for them because you'll have an American presence at the site, and the American presence will, and they keep a lot of bad actors out of the country, or certainly out of the area where we're doing the digging. So we made a deal, and I assume they're going to honor the deal. I put Scott in charge, and Scott's done it beautifully, but we haven't really seen the fruits of that deal yet. I suspect we will.
That's you set a 90-day deadline to an executive order for Secretary of State and known to review whether to recommend to you whether to invoke the Insurrection Act to send troops to the southern border. Is that something you're still considering?
Well, I'm talking to them, and it's not hard and fast, but I'm talking to them, and I will tell you that the border is the most secure it's ever been. We have never had anything like it. And when you said, Christy, before, it's 99.999, and I guess that means one person maybe, or two people. It's actually turned out to be 3 people came across the border versus hundreds of thousands of people undivided. And we're talking about people coming, look, people, they have souls, they have hearts, many of them are good, but we have a country that's under siege. We have a country that really is I think it's under attack. In many ways, worse than under attack, because there are no uniforms. You don't know who the attacker is, so you really don't. It's not like you're fighting an army. You're fighting people. You don't even know who they are. 11,888 murderers, many of them murdered far more than one person, are roaming. Now, some of them have already been caught. A lot of them have already been caught and taken out. But we're being impeded by judges from doing our job. And hopefully that situation is going to be solved, because I think nobody wants to have murderers and people from jail, and I mean for serious, serious crime. I remember the Biden people used to say, no, these are aliens that came into our country and they don't commit crime. I said, they don't commit crime, they commit worse crime. They make our criminals. Some of these people that they've allowed in through open border policies, the dumbest thing I've ever seen. You can look at some of these people and you say, this is not going to end well. But the people that they've allowed into our country are making our criminals look like the nicest people on earth. I will tell you, these are serious criminals. These are violent criminals. These are people that would kill you and wouldn't lose an ounce of sleep, and they wake up the next morning and they don't even remember it. This is a rough, tough group of people, and we've got to get them out of our country. And the law says, I believe, I hope, and I think Pam will be very successful in proving it, but we've run into, I would call them rogue judges. Somebody could criticize me for that. These are rogue judges. These are radical left, generally radical left, horrible judges. And we didn't lose all of these people. You know, we've lost a lot of people to death and to rape, all sorts of crimes committed by the people that poured into our country. And they came in totally unimpeded. Just come on in. And you see it every night. You see thousands and tens of thousands of people pouring into our country. We have no idea who they are. And to this day, we're looking for people. We have no idea. We hear that we have terrorists in our country that are so bad, they couldn't stay in any other country, but we're getting them out. And the group between Pete and Christy and Tom Holman and everybody working together, people that you would least suspect are reporting them, and the public is reporting them. The public is seeing. The public is calling and they're saying, you know, I live in a house and next to me moved in a group of people and they are very violent. And we'd go and we'd find out and we'd say, yeah, you're right, they were really violent. And we have information on most of them. So I just think it's incredible what's taking place. But we right now have a very, very secure border. Right now we have the most secure border in the history of our country, so I don't think we have to worry about it.
the question.
Mr. President, Canada ran against, not only against the conservatives, but also against you. Yesterday, yesterday he spoke about American betrayal. Are you interested in rebuilding relations with Canada, and if so, how?
No, well, I think we have a great relationship. He called me up yesterday, said, let's make a deal. You know, he was running for office. They both hated Trump. And it was the one that hated Trump, I think, the least that won. I actually think the conservative hated me much more than the so-called liberal. He's a pretty liberal guy. But no, I spoke to him yesterday. He couldn't have been nicer. And I congratulated him. You know, it was a very mixed signal.
I don't know about Kearney. I'm not a big fan of Kearney. Please go to my store, the-studio-reykjavik.com, and get the Myotrol. Like I was saying before, this stacks really well with gladiator barley. Myotrol helps with the gene expression to build muscle and maintain muscle. When you get older, you start methylating certain genes and it's just harder to build muscle. Myotrol will help with that gene expression that you need to build muscle. Do resistance training. This is something that you should be taking if you're an athlete, younger or older, to help with your strength gains in your sport. Works the best when you take Myotrol, gladiator barley, and boomer boost. But if you're older and not an athlete, taking Myotrol and doing resistance training is going to help you build and maintain muscle. So if you're 40 years of age or older, make sure that you start taking Myotrol on a regular basis so you gain muscle, and make sure you do those exercises that I've been talking about. Those 4 modalities: resistance training, cardio, stretching, and balancing exercises. Resveratrol is something that I've been taking for decades. Resveratrol will soak up free radicals, help with the health of the mitochondria, boost up energy levels because you have healthier mitochondria. It also helps with youthful gene expression. So this stacks really well with Myotrol. And resveratrol will help to get rid of cells that are in senescence. Cells that are in senescence just sit there and collect garbage. You want to get rid of those. So take resveratrol every day. It stacks really well, like I said, with Myotrol. And resveratrol stacks really well with C60, ubiquinol, NAD+. Get the resveratrol, take it every day. And another great stack is Clarity Factor in Goodnight formula. Clarity Factor will help with your brain function. It will get rid of that brain fog. It will help with consolidating memory and support memory. It will allow you to concentrate on tasks at work or in school, or even if you're retired. It's important to continue learning even in your geriatric years to get that positive neuroplasticity. And with Clarity Factor, it's going to help with that memory and those dendritic connections, and you're going to think faster. And when you're thinking faster, you're building positive neuroplasticity, and there's a compound effect of it. The more connections, the faster you think, the better your memory, the more you can focus. So please go to my store, get the Clarity Factor, take it every day. And Goodnight formula is a supplement that you should be taking where it'll allow you to get into 3 cycles of REM sleep and deep sleep. That's important to consolidate memory, also to help to detoxify the central nervous system, and to be well rested. When you are sleep deprived chronically, you have cognitive decline and potentially early onset of dementia. So, and you're building up lots of toxins in your central nervous system that you're not filtering out. In addition, if you are sleep deprived, your cortisol levels are higher, and chronic cortisol levels does damage to organ systems and suppresses the immune system. So you want proper sleep, get it through Goodnight formula, take it every day, and you're going to get those 3 cycles of REM sleep. You're going to be detoxifying your body, your central nervous system. You're going to be well rested. It has tryptophan and melatonin in it, and GABA and passion flower. And by and some other ingredients too in it. But the thing is that it allows you to get into those 3 cycles of REM sleep. Really important. So please go to my store, the-studio-reykjavik.com. So I've been transmitting over 5 hours. It's a long show. A lot of it was because of what Trump was saying. The market is up right now at 5,525, and it's 1:39 p.m. So it looked like it played out. As long as Trump doesn't say something stupid, that's negative for the market wants to do a little bit of a rally. What does surprise me is there was a sell-off in oil. So it might be temporary, I don't know. It seems a little too low to me. It's pricing at $58.49. I think fair value is around 61, something like that. So please go to my store, help support my work. Use discount 5, you get $5 off any order. And if you spend $150 or more, you get a free gift until supplies last. So that's the transmission for today. Thank you very much for listening, and I will do another one tomorrow.